Very good morning, members. Welcome to the third day of three-day workshop on goods and services tax. The pre-lunch session, GST refunds and inverted duty structure, composition scheme under GST law, and provisions relating to value of supply. All these three topics will be handled by the most sought-after faculty, P.T. Rajiv sir. May I now welcome the speaker for today to occupy the dais. Please put your hands together to welcome the speaker. Rajiv is a fellow member of our institute. He is a partner in a leading firm at Chennai. He is a qualified both chartered accountant and company secretary, and has also completed his bachelor's degree in business administration with the first rank from the University of Calicut. He has also secured scholarship from ICI throughout his chartered accountancy course for his merit in academics. He ventured into professional practice after successful employment stints in the audit and assurance department in a leading Big Four firm. He has specialized his practice in GST and is providing GST advisory services to some of the big business conglomerates in India, having over 50,000 crores annual turnover. He is a regular speaker in the in-house training of the firm, and he has also presented papers on GST in various business forums and MSME associations. He has conducted many corporate training on GST to impart the knowledge of the biggest tax reform in India. Over to the speaker.
Very happy morning to one and all present here. Thank you, Rahman, for a warm introduction, and thank you, Asayasi, for inviting me once again for handling one of the topics in GST. And today I'm going to speak on three topics. One is value of supply, and second, refund, and especially I will be giving more importance on inverted duty structure under section 54.3, and the third topic would be composition scheme. So these three topics are going to be handled, and as all of you are aware that value of supply is most important out of this, and so I will be spending the initial 1.5 hours. So maybe from 10 to 11:30, I'll be spending time on it, and we'll break for a tea. Maybe around 11:30 to 11:40, we'll break for a tea, and post that, I'll get 1 hour, maybe 1.5 hours, 45 minutes I'll spend for refund and composition scheme. So this is how I'm going to handle the today's session. So before getting into the topic, let me just give you a small introduction of how I think the PPT is also giving some sort of value addition to us now. Yeah. So the presentation would be more on the practical aspects, because if I start in the morning with the theories, you will get bored, right? So what I will do is, I will bring up a lot of practical exposure, the limited practical exposure which we got from the industry on various topics like refund, valuation, and the composition schemes, and we will correlate with the provisions. That is how it will be done today. Because otherwise, if I start with valuation section 15, rule 27, 34, 35, so this will be like a, it will be a little boring for all of us. So let's take a practical example, and then that one practical example, I will be able to correlate for the whole topic in one particular aspect. And I want this to be very interactive. I know that most of you are holding the breath and then looking at me, and I don't say looking, you're staring at me. So please, I would like to make it more interactive, and then you smile also. There is no problem in smiling, right? Because otherwise, every time I say in the institute, whenever I come for the program, everybody will be very, very serious. I don't understand why people are so much of serious. They will show it in their face, the seriousness, as if there is some, serious topic which is happening, something very, very serious which is happening in the institute. Nothing, it's a very simple thing. GST is also goods, and I would say it's a simple tax. So enjoy your session. Don't take it too seriously. And whatever doubts you are having, you can ask me immediately, then and there. You don't have to wait for the last minute to ask the doubts, because I want this to be more interactive. Unless you are asking the doubts, I will go for sleep. So better, it will make it as a more interactive. So keep smiling. And I would like to tell you also, because since it is a morning session, let me just take 2 minutes on this. Please smile, okay? Because there are many people who are getting heart attack mainly because they are not smiling. So please smile. Okay, there is no smile tax, no? It's only for goods and service. Let me just clarify that smile is not falling neither into goods nor into services. So there is no tax on it. Good smile tax. Okay, good smile tax. So we can call it as good smile tax. One participant is giving good point on this. Now, let me just tell you how I'm going to handle this today's session. First is value of supply, and I'm going to tell you what is the relevance of value of supply. And second, I will be taking you through the statutory provisions and issues, and there are illustrations which I brought up. Some of them are from the practical exposure, because every day almost 10 to 12 inquiries will be coming. That means the related doubts will come from the companies where we are advising. We are advising a bunch of clients. So the advantage to us is, we will get a lot of queries from the clients on valuation. And when we started reading these provisions, you won't get those perspectives. The kind of intricacies involved, you will realize it only when you start doing the practical thing. I will tell you a very simple a query which has come from a client 2 days back. That client asked me, so the valuation provision is there. We are transferring a machinery from Chennai. We are exporting it to one of our related party. What is the valuation? So I set the valuation provision completely, explained to him that you have to follow rule 28, because it's a related party, 15 will not stand. So you have to go through rule 28 and you do the provisions accordingly. What happened is, it is a Korean based company. The Korean holding company has fixed one price which is very less. The WDV of the company, the product, that machinery is almost zero. So they fixed some nominal value. Now the question comes, can that be considered as a value for the purpose of GST? Now they decided for the customs, they said, doesn't matter, sir, we will take the open market value, we'll look into the provision, open market value and all other conditions, we will look into it. We'll fix a price. Now the question comes, okay, you fixed a price, say for example, you are fixing 1 crore. The machinery value is 1 crore. But the Korean company, holding company has agreed only for 50 lakhs. You have to comply with GST, that is one part. Now tell me, is there any issue in this particular problem? Now very clear, Korean company, holding company said, I will pay you 50 lakhs for this machinery. Whatever your Indian laws and all, I don't mind. I'll pay you only 50 lakhs. Now, under GST law, because it is a related party, explanation 15 to explanation, it is satisfying, so it is a related party. So what happens? You have to go to rule 28 to pick the value. So when they picked the value, it was around 1 crore 50 lakhs. So, it was 50 lakhs and 1 crore was the value which is based on 28. Now, is there any problem in this particular case? I want your answer. Because it is an export. It is an export. Obviously, it is an export because export definition says if you are taking the goods outside India, from India, then it is an export. No need to get the money in foreign currency, etc., etc. Is there any problem in this issue, in this particular case? Please, please, please. No issues. No issues. Is there any issue? Doesn't matter, you answer it. Whether it is wrong or right, it doesn't matter because all of us are in the learning stage. So even if you make a mistake, it doesn't matter. Even if you participate, I'll be happy. If you don't participate, it will be very difficult for me. So please answer.
Now with regard to GST,
Yeah, please sir.
since it is export, we will not pay tax.
Correct.
So it does not have any impact even if it 1 crore or 50 lakh.
Correct.
But the holding company has to record only for 50 lakh.
Correct.
So you should raise the invoice.
One answer is, there is no, what is a big deal in it? Anyway, it is a zero rated supply. So whether you declare it as 1 crore or 50 lakhs, it's all one and the same. That is this big point. Any other point?
What about ALP?
Sorry?
ALP for TP.
Transfer pricing.
Option price.
I will just keep the income tax provision aside. We have already enough issues in GST itself in this. So we'll restrict to, there is a TP issue, but obviously that is coming under the Income Tax Act. We'll not be touching upon it. But under the GST, yeah. Reversal of input tax credit. Okay. Reversal will not happen, sir, because it's a zero rated supply. You can go for a refund. If at all there is an input tax credit, you can go for a refund. There is no, only for nil rated and exempted supplies, there will be reversal. Any other issues? Any other issues in this? Yeah. Okay, that's a good point. Yeah. Can you just elaborate it? Because we have to go beyond GST and see which law is beneficial or which law is most dangerous. Because you are in between sea and devil. Now you have to decide which part you have to go. Because if you come to this side, GST will catch you. If you go to the other side, as the rightly mentioned, FEMA will hit you. Because if the invoice value, if you are putting 1 crore, and if you are not going to collect the remaining 50 lakhs, then what will happen? You will get a notice from the authorized dealer and the RBI asking us, why have you not collected this? This is another issue. So you have to take a call, but GST Act is very clearly saying you have to take 28 value, rule 28 value. Now you have to, there is a trade-off. Now as a professional, what will you do? You will tell that if you go this side, they will hit you. If you go this side, he will hit you. Now you decide which hit you want. So finally we explained to them, complete provision to them, told them, boss, we are leaving. This is the maximum we can do, because if you take a call this, under GST, you will have a hit. If you take a call under FEMA, you will have a hit there. So finally what happened is the company has decided to take a risk, because if the value is 1 crore, the FEMA regulations are more, problematic, because here in the left hand side, in the GST side, it was a zero rated supply, as he mentioned. Even if they are coming up with the valuation issues tomorrow, there won't be any tax impact. But still it is a non-violation, it's a violation under GST law. So this is something which we come across. We always think within the GST Act, but when you go outside the GST Act, you can find that you have to take a harmonious view. Whether you want to fix the price as 50 lakhs or 1 crore, that was a big decision which has come to us. Now this is the decision which the company has taken. So these are some of the practical issues which we come across when we do. It's a very beautiful topic. Valuation is a very, very beautiful topic if you look into it in a different perspective. I'll tell you another practical example which I've come across few months back. Now we are doing the audit for that. So again that issue is coming up. This is a company from a foreign company. They are into bearing manufacturing. You know the bearing, right? In all the automobile industries, you know, that helps us to rotate. That means in the tires, wherever there is a rotation, that bearings will be fixed. Mainly into automobile industries or big machines and all, they will use this bearings. So they have two units in Chennai. One is a manufacturing unit, one is a trading unit. All are big companies. So what happens is, because they came to India very recently, they wanted to do a price cutting to establish the market. So what they did, so assume that the price of a bearing is 1000. They were selling it in the market for 600 rupees. And the structuring is like this. The manufacturing company is there and trading company is there. The manufacturing company will manufacture the bearings, will sell it to the market for the outside parties. They will sell it to Maruti, Toyota, etc., etc. They will also sell it to the trading company for further sales. So it was a beautiful case because it applies both related party transaction and unrelated party transaction. Now if you look at the pricing, the value which is adopted by this company is 600 for an unrelated party, 600 for the related party. Now when we looked into section 15, the valuation says you should adopt the transaction value. Transaction value means price where price paid or payable, where price is the sole consideration and both the supplier and recipient are not related. You got the point? First is transaction value. What is the value which is prescribed under section 15? 15 is the only section which is talking about value of supply. Please take it from me. Only section 15 of the CGST Act only talking about valuation. So valuation clearly says price actually paid or payable. So very clear, okay, something to be paid or whatever payable, outstanding also will be considered, whatever agreed consideration. Where the supplier and recipient are not related and price is the sole consideration. Now in this example, the manufacturing company sells the bearing to related party at 600 and they are also selling the goods at 600 for unrelated party. Now when we looked into it, because their unrelated party transaction will not attract 28, rule 28. Only when there is a related party transaction, rule 28 will come into the picture. So only for this company, we have taken that rule 28 because you cannot fix the rate as per section 15. When we went to 28, 28 clearly says open market value. The open market value is also clearly defined, which says open market value means same kind of products with same quality at the same time if you are selling it, where the supplier and recipient are not related. So all these conditions were satisfying for the other unrelated party transaction. So whatever the rate which they adopted was the market value, open market value, which we could arrive. But there was another issue in this particular transaction which we come across immediately, because I said there are two transactions, two components to be satisfied, right? One is both should not be related. Second is price is the sole consideration. Now what happened is, can you tell me, if you are manufacturing a bearing for 1000 rupees and selling it at 600 rupees, is there any other consideration which you are getting? Is any business will do, anybody will do business at a loss? Anybody will do business at a loss? There are people doing it, but they are looking for something else. You know that some of the e-commerce operator, aggregator in the previous, you can see some cab operators and all, they were, providing service at a cheaper cost. Why? Their intention is something different. Their intention is not to make profit in the initial stage, but what? To capture the market. So don't you think that there is another consideration which is flowing into it? When somebody sells, I am selling my 100 rupees product for 50 rupees. Do you see any other consideration into it? There could be plenty of scenarios where I will be doing it. Say for example, perishable product, say vegetables. I am selling, I know that I will make nothing out of it if I sell it tomorrow. So whatever I get it, that will be the price. So there could be scenarios, that is what we are going to look into it. There could be scenarios where there would be, actually there won't be any other consideration. But some of the cases you have to go little beyond the invoice and see, and invoice and related party definitions, and see whether there is any other consideration which is flowing into the company. Now, can you tell me, is there any other consideration which is flowing into those?
Capturing the market can be considered consideration, I don't think.
Okay, capturing the market cannot be considered as a other consideration. That's a good point. Anybody else?
Goodwill or something is very intangible.
Goodwill, intangible things. So how can you say that consideration? How can you, first of all, quantify that this is the consideration which you have received? That's your point, right? You cannot quantify, capturing market, how can you quantify it? So any other points? Havala. Yeah. Correct. Okay, that is why that's a good point, sir, because what he is saying is there could be, people can play around with the numbers and evade the duty. So that is the ultimate purpose of bringing this particular word, price should be the sole consideration. See, so far we did not have any issue. There was a Supreme Court judgment on Fiat India Private Limited, where Fiat was doing exactly the same thing. That is what we strictly told this company, no, you cannot do this exercise. Because what happened is, Fiat India Private Limited, when the company came into India and when they started doing the business, there are a lot of people who are there in the industry already, like Maruti or Hyundai, and all these companies were very well established in the market. So what Fiat was doing is, Fiat was selling their cars at a lesser cost. Say for example, manufacturing cost of a Fiat car is 3 lakh. They were selling it at effectively at 1,50,000. Half of their price, they were throwing it away. Now what happened is, the same provisions were prevailing under Excise Act, the previous Excise Act, I will not get into the details. There the same condition was there. Price should be the sole consideration. Otherwise, you have to go for the manufacturing cost, etc. Now what happened is, the case was litigating, finally it came to Supreme Court. Supreme Court clearly said, no, there is a consideration which is flowing. Your intention is not to, you are expecting some other consideration by way of capturing, penetrating the market. That is an intangible consideration which you are getting. So, this price cannot be considered as a sole consideration. Same provisions are prevailing under GST Act also. So what happens? Even if you are doing the audit or when you are advising the clients, merely because they are not related, you cannot say that whatever the price which is fixed by them is the sole consideration. You have to go beyond that and see whether there is any other consideration which is being flowing into the company. Now the same provisions are applicable to this particular company also, where we said Supreme Court has already decided on this particular issue. Now there is no further amendment, the same provisions are continuing here. See, many of the, as sir asked, how can you quantify the intangible thing? How can you quantify all these things? But the law of the land has said, no, there is a consideration which is flowing. So now we have no other option other than following it. So the Supreme Court judgment, you keep it in mind, because I will take that example so that you can, each and every rules I can correlate and then tell you and explain, so that you will be able to understand and appreciate all the points.
The refund of ITC also they can claim. I mean the output tax is less.
I will come to, I will be taking the refund separate session, sir.
In this case, when I sell the product lesser than the cost,
Yeah.
the output tax what I am collecting is lesser than
Correct.
than the input.
Excellent point. Excellent point, which is a part of my refund thing, because it will not fall into inverted duty structure, because 54.3 says change in the rate, not in value. So you are not eligible for ITC here. I will handle it separately at the time of refund. Okay. Now, let me just give you a broad view. Many of you would be asking, Rajiv, the rate, the valuation, you said only one section, that is under CGST Act. What about other acts, UTGST Act, SGST Act, and IGST Act. See, there is a section called section 20 of the IGST Act which says whatever valuation provision you go and refer CGST Act section 15. Section 21 of the UTGST Act also saying the same thing. So effectively, though there is a valuation provision, it says it is referring to section 15 of the CGST Act. And you can also see that the same section 15 of SGST Act will be verbatim. See, both are same. You don't have to refer SGST Act for the purpose of valuation. So effectively, there is only and only one section for valuation, which is 15. But the moment you say it is only one section, it will be complicated. I will complicate it to the extent possible so that you will not get confused out of this room. Once you go out of this room, the purpose of the session, wherever I am taking the sessions, the ultimate aim is confuse the audience to the great extent possible and give the solution then and there, so that you will not go to the market and then get confused. So I will give you extraordinary examples which are very, very practical because I get a lot of doubts. So those doubts I am just putting it as a case studies and then presenting it across to you. And there are rules. Rules are starting from section rule 27. Okay, rule 27 to 35 are the rules which are prevailing for GST. See, rule 27, I will not be telling you the exact verbatim what exactly is this. I will tell you for a common understanding. Rule 27, wherever the price, I said two conditions, right? Price should be the sole consideration, and both supplier and recipient are not related. Please keep this as a thumb rule. Thumb rule. I am repeating it again and again and again because the essence of section 15 is these two words. Price is the sole consideration and supplier and recipient are not related. So this you should keep it in mind. The moment price is not the sole consideration, you have to go to rule 27 to determine the price. That means the consideration. In case both of them are related, you have to go to rule 28 to determine the rate. If there is a transaction between principal and agent, then you have to go to 29 to determine the rate. If none of these provisions are not applicable, 30 will be applicable, and if that is also not possible, then go to 31. This is how it is structured. For service providers, there is another option which is given. You don't have to go to 30, you can straight away come to 31. That is what it says. Okay. And 31A, that was a afterthought. They introduced it little while later for lottery and horse race, the betting, etc., etc. That was an afterthought, and then they brought it as a 31A. And 32 talks about certain supplies like foreign exchange currencies, transaction, how to value it, air travel agent, how to evaluate the transactions, and like that there are certain transactions which are being given, life insurance, etc., and that how to value the particular thing. Now 33 talks about pure agent, which is very, very important. All of you sitting here would be facing this. And 34 is rate of exchange, where the department made a blunder actually, to be very honest. When they drafted the law, they made a blunder. They realized it on 27. They realized it immediately, but they made the amendment on 27. But very unfortunately, that is a prospective amendment. I don't know how to handle that particular issue, because this is something which you have to take a call, because it was a mistake and it is not practically possible. But when the law is drafted, they made a blunder. Now we have to see how we have to go with it. And value of supply, in case of rule 35, if you get a lump sum amount where you are not able to identify what is the tax component, rule 35 says this is how you have to find out the tax rate, tax amount. I mean, say for example, if you are getting 118 rupees and they are not saying that what is the tax component. If you want to identify, if you are considering that as an inclusive one, you do 118 into 18 divided by 118. So you will get 18. That is a rate of tax. That means that is the amount of tax. So these are all the overview of this is the overview of value of supply. It looks like very simple, right? On the face of it, I made it very simple when I explained. Now we will get into the complications. I will complicate to the extent possible. So before getting into it, we have to understand a couple of words which are very, very confusing. You have to understand what is consideration, price, value, valuation. All these are all, it's not interchangeable, it's all different words altogether. Consideration, all of us will agree, without consideration the agreement itself is not valid. So it is an unavoidable element in an agreement. So it's a, there is a, we say quid pro quo. That means, that is the unavoidable part in a, in an agreement. Price is the consideration expressed in the monetary terms. So it's expressed in monetary terms. And value is the price prevalent in the market. That is, everybody knows that. And valuation is the method of finding the value. Now now you will be able to appreciate whatever I said, because I want to simplify to the extent possible. Value of supply is equal to transaction value. Transaction value is the price actually paid or payable. Supplier and recipient are unrelated, not related. Price is the sole consideration that we already discussed. And this case law also we already discussed. And I request all of you to, if you don't mind, I will circulate all the PPT, because this PPT will run into, because I don't have a separate PPT for the basic course and all. This will be standard PPT from my side. So what I can do is I can circulate it, because I will not be able to cover the entire PPT. So I request you to share your email IDs to email IDs. Last time also I participants shared, but I request one more request, because out of 200 participants last time, only 170 received it. But actually from my side I already sent it, but because of the handwriting I was not able to read. My people could not find out the email IDs. So I request you to give the email IDs in a capital letter. I will either request SARC to circulate, or I myself will circulate it. Okay, please collect the email IDs. And this case law we already discussed. The price, the fiat case we already discussed actually. Okay. Now, in this fiat case itself, I would like to discuss a couple of open-ended issues. Because you look at from your client, you will be able to appreciate this will be there in your client also. Because you could see a lot of cases, your company is doing loss mainly because of the pricing. I'll tell you one more important point which I come across. Our client, they were into oil import. I mean, it was not a, this soil is called, they will use it in the food and all. So the company is located in Italy, and that product is very famous and unique in Italy. So they will import into Chennai, it was in Bangalore actually. So they imported into Bangalore, and they will selling it to Taj Coromandel and all these big hotels. So when they imported it, to capture the market, they did the typical thing. To capture the market, they were selling it at under the cost, even lower the cost actually. So it was, say for example, one bottle cost 2,000, they were typically selling it at 1,000 rupees. It was literally happened. And ultimately that company got closed also, because they continued the process without knowing that they were making the loss. They wanted to capture the market. One German guy was heading it, and finally they went into loss, and then they closed it. So these are all the things which will definitely happen in the market. Initial time to capture the market, or sometime to increase the market, or there could be different reasons. That is what we are going to discuss. So when you do the audit, it is your responsibility, or when you are advising the client, it is your responsibility. You are ensuring that there is no other consideration which is flowing. Now let's take one scenario. Overall, see, I will take it three ways. One is, there are two products. One product is making loss, one product is making profit. I will take second one. So ultimately what happened? Gross profit will be there. Okay, assume that there is a gross profit. Second scenario, there is a gross profit, but there is overheads are more. There is a net loss. Okay, so effectively company is making a loss. So even that is also lesser than the cost. Now third is, there is a profit margin which is less than the competitors. See, competitor is having a 10% margin, because industry data is available in the market. So, but their product margin is less than the market profit margin. So what will happen in that situation? Can still the department can come and invoke this particular Supreme Court judgment. It's very, very dangerous. Let me tell you, it's very, very dangerous. The Supreme Court judgment shaken the industry completely. Even we also got surprised to a great extent how to handle the situation. Because it is very, very difficult. If you look at the balance sheet and the company is making loss, can you come and invoke the Supreme Court judgment? Saying that no, price is not the sole consideration. There could be potential, there could be plenty of reasons. I'm making loss because of overhead, loss will be there. Overhead, because of overhead. There could be one product would be making profit, one product would be making loss. I'm lesser than quoting, lesser than competitors. Everything is possible. See, one of our clients is into international courier business. Competitor is DHL. DHL's margin is very high, I know. So whenever we talk to them, we say, you take that numbers, fix the price accordingly. They say, no, it is not possible, Rajiv. You cannot compare DHL with me. And we are also international courier business. I said, both are same. What is the... No, there is a brand name which is attached to it. Our brand name is, compared to that, it is less. So though they are competitors, their margins, say for example 20%, they are keeping a margin of 15%. So now how can you compare this? Now can the department come to this company and say, no, price is not the sole consideration. You are still looking for the market capturing. That 5%, DHL is charging so much. So I will invoke the Supreme Court judgment, Fiat India. Can they do that? You cannot say. They can still go ahead and do it. And after the Supreme Court judgment came, department has come up with a clarification because the complete industry got shaken. So they gave a circular also. I'll be dealing with it. It was under excise law, but the same provisions will prevail under GST. So I'll just touch upon it. I will not go in detail to it. So, see, but there will be a lot of new companies incurring loss in the initial stage, right? Obviously, the new companies will incur loss in the initial stage. So can you come and invoke this? So these are all the general practical issues which I thought, I will discuss with you so that you will also enlighten to understand, okay, price is the sole constraint, there are more to it. Let's go beyond it and then understand. And so these are all the couple of basic things. I will not be answering this particular thing because now if you ask me what is the answer to it, let me just tell you, it depends upon the facts and circumstances. You have to go in detail and understand that there is no other monetary or non-monetary consideration flowing into this particular transaction. The moment there is a monetary or non-monetary transaction, that is the beauty of it. It doesn't say monetary. It also accepts non-monetary. So you have to be very, very careful in this. And there is a concept called advance and deposit, always disputable. Advance is taxable, excluding goods based on different notifications. Now it is exempted, there is no tax on it. But advance for service, it is still taxable. Now, there are people who are very clever. They used to say advance and deposit, they define it very beautifully. So I thought I will also give a small point on this. As a part of consideration, as a part of value of supply, they will give you advance. Advance has some sort of nature that you have to identify because nowhere it is defined. So that is why I thought I will give my perspective. It is nowhere it is written. See, you can see that advance is a part of consideration. You understand? Advance is a part of consideration which is paid in advance, that's all. Deposit is not part of your consideration. It is actually a security deposit kind of thing that is refundable. Advance is not with an intention to refund. Deposit is with the intention to refund. So you have to be very, very careful because I saw one company where as a part of value, the deposit came, actually it was an advance came for the service industry, they said it is a deposit. But they are adjusting it on a monthly basis. The intention is not, they don't want to pay tax in advance. So they said no, it is only a deposit. So when we got into it, we said no, how can you classify it as a deposit? Your intention is to adjust. That they agree. Yeah. We'll adjust it on a monthly basis, but it is a deposit. So these are all the definitions. We Indians are very, very good at interpreting the laws and everything. It was a beautiful thing. We will get a lot of perspective from the businessman. So you have to be very, very careful with this as a part of consideration. If you get it, then you have to be very careful and then you have to see the nature actually. Now why I brought this point is, I would like to discuss one important point like retention money. Because we have a construction company, all of you doing construction industry exposure will be able to appreciate that there is something called defective liability period. They will retain 5% or 10% of the consideration. Now, if they are retaining that amount, I'm just crossing one small point, I'm going to Sriram's topic. It will go to input tax credit, where it says, under section 16 it says, the price should be paid, the consideration should be paid in full. But if there is a retention within 180 days, but retention money will be paid after 2 years or something, or even sometime in 4 years. Can that be considered as a deposit? The moment it is a deposit, no GST applicable. The moment you are considering it as an advance, then GST is applicable. And if you are considering retention money, if you are not getting that money within 180 days, input tax credit issues. So one small issue, I'm just correlating with different thing, value, input tax credit, different things. Okay, so I'm not crossing my limit, but at least if I don't say this, this point will not be complete. So what is the final decision on it? Is the retention money will be considered as a part of taxable supply? Yes, definitely it is a part of taxable supply. But whether the ITC issues, what will happen, that still is a debatable issue. There are two schools of thought. One says, no, what will happen if you are considering it as a deposit? You give me that money, defective liability period, that whatever the amount, I will give it in the form of deposit. So what we are doing is, just a small caution, ensure that your agreement is drafted in such a manner that you will not get into the trouble. That is the only word which I can give it to you. Because we redrafted all our agreement for the construction company in such a manner that it will not attract GST. Explanation 2, now we have to understand what is, you are talking about related party, related person, related person, related person. Who are all these related persons? Yeah, please sir.
Definition is advance will not earn interest, but deposit earns interest. You cannot make agreement like that. If you make a deposit, it earns interest. If you make an advance, it will not earn interest. So just make an advance as a deposit is not possible.
Correct. No. I'm not saying that advance simply making to deposit will not do. What I'm saying is there can be methods where you can restructure your agreements. That is what I'm saying. And please take it from me, whatever you say, the definition of advance and deposit, I will accept it, because it is not defined in the law. Unless it is defined in the law, I cannot confidently stand here and then tell you. That is why I am not touching upon it. I am just giving my view, overview on it. But if you come to section 15, I will confidently tell, because it is already given. But advance and deposits are not being defined anywhere. So we'll move on. Who are all the related persons? Officers or directors of one another's business. Then such persons are legally recognized partners, employer and employees. And you look at the last one, family. There are 4 things which are related to controls, 4 things are related to people. Now let's look at it. Officers or directors of each other. See, for example, I have a lot of example also on this. It is given in the PPT. You can see that how beautifully I have explained with all the examples. You can go through it. Once I share the PPT, you can go through it. But just let me give you one small example. Employer and employee, no need to give an explanation. Legally recognized partners. Say for example, myself and then, what's your good name, sir? Harish. Myself and Harish sir both are legally recognized partners in a firm. Assuming that in my individual capacity I am providing some service to Harish sir, then this will be considered as a related person. So legally recognized partners. And third thing is the employer and employee, obviously you know. Officers or directors. See for example, Harish sir is a company's director and I am officer in his office, in his company, or director in his company, the vice versa. So if the transaction between myself and Harish sir, this will be considered as a related person. And members of the same family. Family is also defined under section 249, which is very beautiful definition, which says spouse, children of the person, and parents, grandparents, brothers and sisters. You don't have that lineal ascendant, those definition which is there in the Income Tax Act, lineal ascendant, descendant, no. It is very simple. They are giving spouse, children, parents, grandparents, brothers and sisters. So if the son and father there is a transaction, it will be considered as a related person. Now let's come back and understand what is this control related related persons. This is very, very important. This is where you have to give more importance. Owns, controls or hold 25% or more of the outstanding voting stock. Say for example, if I am holding 26% in Harish sir's company, so for example, that company, now it's between two companies actually. Say assume that I am A Limited, he is B Limited. I am holding 26%, then we are related actually. Then the moment we are saying related, you have to go to 28 only. Now one of them directly or indirectly controls the other. See for example, I am the holding company, I am controlling these two, Harish sir and then what's your good name sir? Ashok. So Harish sir and Ashok sir, I am controlling both of them, then both of them are related. So now both of them are directly or indirectly controlled a third person. So I am controlling, both of us are controlling him. I am holding 50% in him, he is holding 25% in him. So directly or indirectly I am controlling him. The same way he is controlling both of us. Very simple definition, don't go with that wordings which is very, very confusing. I have given a illustration also for your better understanding. So I'll just move on. You can go through it. You have to go through it. Otherwise, your decisions on GST valuation will go for a toss. Please note, all these 8 people are very, very important as far as the valuation is concerned. And now we have sole agent, sole distributor, sole concessionaire. This word I have defined it for your benefit. What is an agent, distributor and concessionaire difference? An agent introduced to prospective customers. Distributor buys from the supplier and sells to their own customer. Concessionaire owns, grants concessionaire exclusive right to operate specified business in the facility under specified condition. What is their income, commission, profit, revenue, advantage? All these things I have explained it in a proper manner, so you can go through it. Agent, distributor and concessionaire are entirely different. But if there is a transaction with a sole agent, so you have to be very, very careful. He need not be an agent, not only an agent, he should be a sole agent. Say for example, I will give an example. If Maruti is selling its goods to one of the distributors, or Maruti's distributor will not sell any other product. So they are the sole distributor actually, right? So you have to be very, very careful when they are distributor or when they are agent, they are doing only their product. So that being the case, if assuming that that showroom is handling all Nissan and then all other companies, then it will not be a sole agent. So you have to be very careful. The moment he is a sole agent, sole distributor, sole concessionaire, price for the valuation purpose you have to go to rule 28. Now distinct person. Now I could see a different some sort of glitches in the act. See, they could have properly brought it under this related person itself as transaction between distinct person defined under 25(4) and 5. But they missed it here. But in the rule if you go, 28 says transaction between related person and distinct person. But distinct person is not here. But they can always come back and say, no, one of them is directly, indirectly controls the other. They will put it into the definition and then will say, already it's there. You only misread it. So anyway, rule is very clear. So I am taking this also. Distinct person, all of you would be knowing, my Chennai branch, my Bangalore branch are entirely different persons. All together under GST. This was a topic which was not at all understood by the industry. The moment all of you, I know, when you are explaining to them, they will say, sir, what are you talking about? Only one bank account will be there. Branch will be there in Chennai. Bangalore, there will be another branch there. But both will be operated in one bank account. You are saying that you should fix a price and then the price should be paid and all. How can you do from the bank account to bank account? How will you do it? It is not possible, no. But fortunately, they said price consideration need not be paid. Because for the reversal of 180 and all ITC, they said no. Rule 37 clearly says you don't have to pay. But see, look at this. When you say this particular thing, everybody will get astonished. Because there was why this word is very, very important under GSTs, you will be able to understand. There was an AR ruling which has come on 27 July 2018 from the Karnataka AR ruling authority, saying that it was on Columbia Asia Hospitals Private Limited, where they said cross charge and ISD issue. They said that hospital was operating in and around Karnataka. They had hospitals across India. So what happened? Their management team were sitting in Karnataka. All CFO, HR, everybody. Now they said, you charge because you from the head office, IMO office, you are providing some services to all of the branches. So whatever the services of those employees, you have to charge. Everybody got astonished because how can you do that? First of all, the AR ruling, the argument was, they are the employees of the corporate office. How can you differentiate employees for one distinct person with another distinct person? See, when we are recruiting employees, there is only one employee. See, for example, I am employed in Chennai. I am providing service. See, for example, it's a construction company. They have 18 states presence. Director is sitting here. It's a typical example where I am doing audit. This director is sitting in Chennai. They are into ground engineering. They are all IIT people. They know very well how to do this. Only they know. Not all engineers can do it. So what happens? They will go to all the sites and inspect, and then they will do this exercise. Now can you say, because they are employed, the directors and then the GM are employed in Chennai, the services are being provided to other states. So the department, that AR ruling says, no, the other states you provided the service, so you charge. Now you may be asking, what is the relevance of this in the valuation? Yes, it has an importance in valuation because all these intangible transactions we were not comfortable with till under the last regime. Only when there is a service we were used to it. Now it is a distinct person under GST law. It has importance under valuation also. How to value this transaction, first of all. So I want you to go through this AR ruling. Please make a note of it, because whenever you do an audit, this AR ruling, please refer. You will have different views, because AR ruling, I am not taking it for granted. AR ruling is binding only on that authority and I mean the jurisdictional assessing officer and then the assessee. But tomorrow it will be helpful for you. At least you can take an informed decision making. Please mention it's a Columbia Asia Hospitals Private Limited AR ruling of Karnataka AR ruling authority. It came on 27 July 2018. So this is very, very important as far as the valuation is concerned. Now how to value those transactions is the biggest challenge now. Why I said this AR ruling is, I will come to rule 31 and will tell you why I said this. Okay. So distinct person means my branch, registered branch to registered branch, my registered branch and unregistered branches. There could be unregistered branches in India because one of our insurance company, they are the brokers, they are having centralized operations. Everything will be done from here only. They don't do any kind of operation from the branch office. They simply sit. That's all. So now what happens is, they are not registered. They will come under 25(5). If they are registered, they will come under 25(4) subsection. Sorry. Related persons we already discussed. Now, this value includes certain things, value excludes certain things. Now, what are all the things which are included in the value? First is taxes under other statutes. Taxes under other statutes. Any amount for which supplier is liable to pay, incidental expenses, then interest or late fee and subsidies. These are all the 5 items which are included for the value. I will repeat, these are all the 5 items which are included for the purpose of valuation, and there is some excluded item which will be dealing in. So section 15 says price is the sole consideration, price actually paid or payable, price is the sole consideration, they are not related, and includes 5 items and excludes 1 item. So these 5 items are included. Let me just take it up one by one. Taxes under other statutes. If you are paying any other statute taxes, say for example, typical example is customs duty. All of you would be knowing that IGST charged on assessable value plus customs duty. So this section gives power to include customs duty for the purpose of valuation. You cannot argue saying that no, that is also central tax. How can you include for the purpose of valuation? Section 15(2) subsection A clearly says taxes under other statutes are very well included. Say for example, I will give you one more important thing. Municipal taxes. Those who are dealing in commercial properties, the municipal taxes will be huge actually. That also should be included for the purpose of rent. You cannot say if I am paying it, if the other person is paying, you have to include that tax also. So the GST will be taxed on both. Now customs duty is a typical example where all of you will be able to realize it, and already it is a practice which is already going on. You will be able to appreciate it. Next is, be very, very careful. This is a highly litigation prone area. I will tell you, there are two schools of thoughts here also. Here also there are two schools of thoughts. Any amount for which supplier is liable to pay. Any amount for which supplier is liable to pay. See for example, I will correlate with the CA profession. We are going for an audit in or representational service in Delhi. So I am appearing before the Delhi tribunal. So from Chennai, I am going to Delhi. I am staying in a hotel. Client said, no Rajiv, I will pay and arrange the accommodation for you. Fine, no problem. And travel and all, flight tickets, everything, I booked it. Okay, typical transaction. Everybody who are going for audit also will be able to correlate. So when I come back, I am raising my invoice. Say for example, I am raising 1 lakh invoice to him. With the reimbursement, my flight tickets, say for example 20,000. So I am charging 1 lakh, reimbursement of expenses 20,000. So 1,20,000 will be my value. Now this is a typical practice which is going in the industry. Now what happens is, so let me ask you, this particular section says, if you are liable to pay that hotel which you booked, who is liable? You are liable to pay, right? You are not liable to pay.
Part of the contract, they are supposed to provide all these.
That is what I am saying. It's a part of contract where you are liable. See, this is what I am saying. You have to be very, very careful. It's a small thread. If you fall into this side, not a taxable. To that side, it is taxable. If the contract says it is all reimbursement expenses, because you agreement, if you look at to your LOEs, letter of engagement, you will be clearly mentioned all expenses will be reimbursed at cost, right? That is what generally we say, right? All expenses incurred for the purpose of audit or this particular appearance will be reimbursed at cost. So the agreement itself is saying, I will incur all the cost. So supplier is liable, but if he is incurring, that is also part of the cost, and it's a part of your valuation. Supplier is liable. Now, so this, there is no issue. Now that flight tickets are coming into the next slider, it coming to C, which is the incidental expenses. Okay, the hotel which he booked, which is coming into this slide, any amount liable for, any amount for which supplier, I am a supplier, liable for, this is coming under this particular topic. Now, as an audit firm, all of you will be facing it. You can take a call on this particular thing. I would request all of you, you incur all the expenses, raise an invoice. Otherwise, tomorrow we will have another set of issues. Now, if you go to the construction industry, job work industry, there would be typical transactions you can able to understand. See what happens. See, I have seen one agreement for the one project. It's for ground engineering project where the tender and then the agreement was for 4 crores. That 4 crores includes everything. It's a works contract, everything was perfect. It was supplied to government and hence it was 12%, and they were not supplying to the government, they were supplying to the principal contractor, hence it was also 12%. So what happened is, this 12% value was there and then the rate was there. 4 crores is there, the principal supplier said, I will give you FOC material, free of cost materials. You reduce your price. So this company, what they did, it was a 4 crore project. For a better understanding, I am just changing the numbers. They gave some steels, stones and sands to this company for pilings, it came to them, the 1 crore material, worth of material has come to them. These people have raised invoice only for 3 crores, saying that this is what we did supply. When we looked into the agreement, it was actually clearly saying it was for 4 crores. Who is liable to procure that steel, stone, etc.? Supplier. There is no doubt about it. Though he has supplied, it is still forming part of his supply as per 15(2)(b). This is one school of thought. Second school of thought says, how can you say that? Because there will be a double taxation. There could be double taxation. Because that fellow is procuring steel with 5% say for 1 crore. So 1 crore 5 lakhs is his cost. When you add it along with you, it is 1 crore 5 lakhs. Again on 5 lakhs you are charging GST. But please understand, this is another school of thought. I am not accepting that view, because in the Intercontinental Supreme Court case law judgment, they clearly mentioned tax on tax is not prevented anywhere. You can do tax on tax. Where in the constitution it says tax on tax is not prohibited. Nowhere it is prohibited. So you cannot take that argument, double taxation. Double taxation is very well accepted. Supreme Court clearly said. Intercontinental case law. So that argument will not be sufficient. So I don't accept that view. I will stick to this view in conjunction or in relation to that Supreme Court. Read with that Supreme Court case law, I will stick to this. So in this case, I said 4 crores will be taxable. Read this Supreme Court case law, read this provision, so 4 crores. You able to understand FOC materials? But still, in the market, there are 2 views, which is very well accepted. But I strictly rely on this, based on this.
For FOC material, the principal, suppose in this case,
Yeah.
has to raise a bill. See, he has to raise a bill. I will take, suppose I am a contractor, I am doing the
The
filing.
free of cost material, I will not raise invoice, sir.
If there is a free of cost material, then it cannot be a part of contract bill.
That is what it says. The contract value initially when they agreed, it was for 4 crores. 1 crore later they said, I will supply you 1 crore free materials.
That is not free material.
It's a free material. They are not charging.
No, it is part of my contract bill. You cannot say it's a free material.
If it is part of your contract, you should have charged them 4 crores. Now what exactly is done is, it is an exchange. I have to charge 4 crores. No, I am not charging 4 crores. I am charging only 3 crores because there is another consideration which has flown into it. Because of that, the GST has suppressed.
No, charging 3 crore is not right. You have to charge 4 crore. And
That is what ultimately what I am saying.
Invoice to 1 crore.
That is what I am saying. That is what I am saying. There is a 4 crore value which we have to raise. That is ultimate thing.
Yes.
That is ultimate thing. Yeah, please.
So there is a change in the agreement, or there is a change in the contract.
Perfect.
Though not rightly,
Perfect.
though not written.
Perfect. This is what I am saying. What happens is, assuming that the agreement itself is for 3 crores and he is supplying some free of material. Now, is supplier liable for that 1 crore? Agreement itself is only for 3 crores. Agreement itself is for 3 crores. He is supplying the material for 1 crore. He is liable only for 3 crores. In such case, that 1 crore will not be taxable, sir. But still, there is a school of thought says, no, you are still liable. I don't accept that view because as per the agreement, I am liable only for 3 crores. Yeah.
The job work
Even in the
Exactly. Sorry, sir. I'll just finish up and come to job work, sir. Yeah.
Even in the 4 crores contract,
Yeah.
there is an amendment to the original contract. By virtue of they mutually agree that I
Perfect.
will supply. So there is an amendment to the original contract. If only had it been reduced, it could have been produced.
No, sir is complicating for us. Sir is saying, a very good example, sir, I really appreciate his experience coming into the picture. Original agreement is for 4 crores, I do agree. But after FOC material, I changed the agreement for 3 crores. Now will your answer be different? He beautifully redrafted, complicated for us. Yeah. Any answers? Please, I want your help. See, he is saying original agreement, as you rightly said, 4 crores only. Subsequently, I amended it once I received the free of supply material. And you only said based on agreement. Sir, you have to look into the, anybody has any answers, please?
In this case, no problem.
Intentionally, who said that? Intentionally suppression of facts, misrepresentation, 73, 74 will come, 74, yeah.
The scope of work will decide, sir. What is that?
Scope of work will decide. Okay. Anybody?
Sir, raise invoice for 4 crores, they will pay GST and 3 crores only, sir.
3 crores. No, 4 crores, no, you have to raise 3 to 4 crores only, now. You have to raise, when you're raising invoice under 46 rule, you have to charge the tax accordingly.
They
See,
will pay only for 3 crores. Since
no,
you
but his point is there is a subsequent amendment. They reduced to 3 crores. So this is, yeah, please.
Why to complicate things? Better
Pay and
instead of
take
FOC, let him raise the bill. We'll collect the input. We'll bill for 4
So
lakhs.
perfect answer. That's a perfect answer.
That's enough. No?
Correct, but that's not the how industries see. This is part of your transaction structuring, where you can say, boss, you raise an invoice to me. I'll take the input tax credit. I will also raise to you. You take the input tax credit. Better solution for transaction structuring. But this is not how the industry works. They say because of the cash flow, industry is already congested. You know, the construction industry is working capital is less than 2%, 2 times. You cannot see in some of the big construction companies, cash flow is almost to 1.
Where is the
1
cash
is to
flow
1.
involved here? Where is the cash flow involved here? I'll credit his account and I'll debit his 4 lakhs and
No, sir, what happens is, yeah, that is what section 16 come into the picture, where they are saying you have to pay the consideration within 180 days. So you cannot simply raise an invoice and send it off. Consideration has to be paid within 180 days, otherwise there will be another problem which is coming under
When
ITC.
there is a regular transaction, debit and credit is flowing. It doesn't mean that we have to pay each and every contract. We have to pay the amount and we'll get back what is
Correct,
due to
correct,
us.
correct. Now
that
the
should
question.
not be the case, no?
Correct, correct.
The accounting principle say if you have to owe something and if you have to get back something,
Correct.
then adjust it and get the net figure.
Correct, correct. Now,
that is equivalent to payment.
correct, correct. Now, sir is saying I'll do book entry.
Sir,
What is your problem? Yeah.
Netting off.
Netting off. Book entry, net off. See, the actual provision under section 16 says consideration has to be paid. Now the question is, can I pay it in monetary only? Can I pay it in non-monetary also? I can even give a mobile phone and then say that the consideration has been paid. Can I do it by way of another service, as he mentioned? Debtor and creditor book entry adjustment. Very, very litigative prone area. If you are doing a book adjustment entry, there are two views. I am not accepting both because the issue is still not settled. Because nowhere in the act it says that can be done. Because most of the people, including me, I feel that we take a conservative view. Better you pay and take the credit, because why should you get into the trouble? You gave a beautiful example, beautiful solution. I would like to further extrapolate it and say that you pay it and then take the credit.
No, sir. Take a
I
situation
understand.
where both are engaging in a continuous basis.
Understood.
Say in a year we'll have
Absolutely.
300 transactions.
Absolutely.
I may be a supplier in one case, I may be a purchaser in another case.
Absolutely.
In that case, what is the need for us to give 300 times as payment and
Perfect.
getting back 250
Perfect.
times it is received? What is
Perfect.
the need?
See, that is,
It is equivalent to payment.
I'm not disputing it. I'm accepting a view saying that there is a litigation thing. That's all I'm saying. Because we are not the final authority to decide. See, the question itself has come from the free of cost. In your case, it's already been charged. So we'll leave that set aside. Sir's point is, I revised the agreement. Let me conclude that particular point. When you're concluding the agreement, when you're revising your agreement, you have to be very, very careful, sir. Because there is a section 74 which says, if there is any way of evasion by way of fraud or anything like that, 74 will come into the picture. And if it is an unintentional mistake, 73 will come into the picture. So we have to ensure that the department, if you are revising the agreement, department is not invoking 74. That's all my point is all about. So I'm not saying that it cannot be done. I'm not saying that it can be done. The only thing is that my point is, you can do it, but subject to 74 conditions. If somebody said, if you are trying to suppress the facts and reduce the tax, then you will face a problem. Yeah.
In Sir's case, when we are going to downgrade the scope, the later part of the addendum will come into force. No?
Yeah.
In that case, 3 crores is sufficient.
That is what we are discussing. 74 can come in. See that one gentleman said, suppress it.
This is only a part of the
Fine. So I'm not litigating, sir. I'm not litigating. I'm not disputing your point. But you just take an appropriate view on this. I'm saying it is litigation product. It's subject to facts. It has nothing to do with the law. If it is a law, I can confidently say, sir, this is wrong. But it is subject to facts. Facts, we have to look into it separately. Now coming to job work. Job work, what happens? Job work definition itself is saying, you supply the material, I will do process or treatment. That's a keyword which is used in the definition. Process or treatment. So, you are working on somebody else's material. So, don't you think that amount the supplier is liable to pay? But no. But the agreement is clearly saying, I will do only the processing for you. So, only that processing cost only will be liable for GST. Okay, there was another school of thought. They were saying that no, that material also to be included, and then they did a restructuring of the transaction by selling the goods. Many of you will be able to see the job work. What they do, they will sell, they will buy back. This has also happened in some of the cases, but in my humble view is now not required, because job work, when the agreement itself is saying that I will do job work, the value of that service only will be included. I'll just move on. Incidental expenses I already explained. Audit case, audit or litigation appearance. I have one more point into it, and any incidental expenses which are in the capacity of a pure agent. See, some of you would be incorporating companies, right? Where what happens, they will be giving you the fee for incorporation, say for example 1 lakh, and incorporation government fees. The challan will come in the name of the company, say for example 10,000. The 10,000, the 1 lakh and 10,000, the GST will be applicable only on 1 lakh, because it's not an incidental expense, though it is an incidental expense, but you are doing it in the capacity as a pure agent. Pure agent means the definition will come into 33, at that time we will handle. So you can see some of you will also be having a separate bank account for paying taxes. When you pay the tax, the invoice will come in the name of, that means the challan will come in the name of party only. So these are all the cases where pure agent comes into the picture. So you should be very careful differentiating being a pure agent and incidental expenses. Though it is an incidental expenses, just put into the shoes of a pure agent and think, is it really a pure agent? If you are satisfying all the conditions under pure agent, remove that incidental expenses from your invoice. Okay.
No, with regard to incidental expense, for example, I am supplying one goods to say Delhi.
Yeah.
Also, I am incurring the transportation charges.
Yeah.
What I am doing, as per my contract, for the goods I am charging 1 crore.
Correct.
Transportation charges I am charging say 20,000.
Correct.
So 20 lakh.
Correct.
How should I bill? I should bill as a goods. What is whether I have to put which code?
Okay.
As a HSN code for both, or how to bill? Because
this concept comes under section 8, where composite supply and mixed supply, which would have already been handled. I'll just give a solution only. It's actually a composite supply where you have to take the rate of the main supply only. So which is very clearly defined. I'll not get into it, it's not a part of valuation, but still since he asked, I would like to answer it. Now incidental, next is interest or late fee. Can I get a water bottle if you don't mind?
Just behind you.
Okay. Thank you, sir. Yeah. Interest or late fees. Interest or late fee, all of you would be seeing that interest, if the invoice is not paid within 60 days or 30 days, you can see into the invoice itself, interest will be charged at 15% per annum. How many of you have seen it? You have seen it, no? But many of the cases they will not accept it. I mean, so within 30 days credit period, if they don't pay 15%. These kind of interest and late fees or penalty for delayed payment for consideration of supply will be included for the purpose of value. Now I will just extend this particular thing to time of supply. I am not moving away from my topic since I am touching upon this, because see, I cannot restrict myself to value of supply when I am touching one particular point, because everything is linked. So if I don't say what is linked, you will be restricting your knowledge to this. In case of interest, late fee and penalty, time of supply says only based on receipt. Otherwise it would be a big hues and cries in the market. What happens? I'll just put it into the invoice. 30 days you will definitely not get the credit payment. So government department will come say it is accrued, GST is applicable. It would be a big problem. Time of supply clearly says it is based on receipt. Only one place in GST Act which is contradictory to the basic principles of GST, where it says based only on collection. Everywhere it is based on accrual only. Only for this time of supply they said it is based on receipt. Only when you receive that interest payment, at that time only you pay tax. That's all. If you want to pay tax, you can pay. At the option of the party in the soliranga. So if you want to pay advance, you pay. Doesn't matter. But Act says based on receipt.
What about the penal interest charged by banks?
Penal interest?
Charged by banks.
That's also taxable, sir. Only interest is exempted by way of notification, which clearly says, because in the notification itself you can see in the bottom, definition of interest. Any deposit, anything on that any deposit or loan or anything in that nature. They are also using a beautiful word, any other manner also. Because of that, your partnership firm, you are getting some interest, right? That is also getting covered. I am not getting into it because partnership is an area where it is a beautiful area for those who are practicing in GST to interpret it. I will tell you one point. When I have discussed with this particular, you will buy share in partnership firm, right? You will buy share in partnership firm, right? If you are inducting as a partner, you will buy partnership firm. I said it is taxable. A professional colleague, he said not taxable. I said it is taxable. He said it is a consideration, it's a transaction in money, so not taxable. I said no, it's a right you are purchasing, so it is taxable. This was also adopted in one of the New Zealand case laws, where it is clearly, beautifully explained it in the case law in New Zealand, where the provisions are almost same, but they beautifully analyzed it, this case. So it was something like, it was a eye-opener. Now another question came, partner salary, all of your partners know here. Partner's salary, is it taxable under GST? No clarity. There was a Twitter which has come where they say taxable if it is part of your income tax slab, then it is exempted. What happens if it is not part of your income tax slab? Is it taxable? First question. Second question. This is the question which I got it. What about LLP? Okay, Twitter they said about partnership firm. What about LLP? For the income tax purpose, partnership firm includes LLP, correct? That is a definition. But for the GST, partnership is different, LLP is different. Completely confused. Now, can I adopt saying that, can I take that LLP include a partnership firm includes LLP because the income tax defined it? No, you cannot. So I said, brother, please leave me. It's a litigation prone area. I don't want to give any particular topic because it was one of our speakers only. So you only asked me this. So I said, no, let's leave this.
So you put the salary at less than 20 lakhs, you will escape.
Possible.
So, you were saying income tax.
Sorry, sir. Income tax. So I'll just make one small point. I'll move on. Sir, Income Tax Act. So there was a subsequent amendment which once the LLP started introduced, they said LLP will be treated in par with the partnership firm.
Yeah. No,
so they said partnership firm includes LLP.
Correct.
But GST clearly says the definition of 284. It says partnership firm, LLP, separate line item, separate treatment. So you cannot read in line with income tax.
No, partner salary.
Slab Income Tax Act, sir. Income Tax Act, there is a slab, no 40A, B or something. Somebody can help me with the number. I'm not good at income tax, but only for the limited knowledge, I'm moving into that.
3 lakhs, 90% at balance.
No, 40B.
40B, yeah, correct.
Eligible under 40B is
correct, that is eligible. That is what the Twitter says.
Which is not covered by GST.
Which is not covered by GST, that is Twitter says. See, validity of Twitter is also a question. So that itself is a legal, there is no legal backing for Twitter answers.
That should be the correct proposition.
At least they said something, they cannot go back. At least we can say that your ministry only said. Next is subsidies.
Well, one point,
yeah.
15(2)(d), what about the cash discount?
Discount, I will come to the next, sir. What are all the discounts? Because discount is excluded categories. Okay, this is included category. Next, I said no. 15, inclusion, exclusion. Exclusion deals with discounts. Discounts will deal with, your question will cover in that. Subsidies. Subsidies means any subsidy linked with the price. Please note this word. Subsidies linked with the price can be included. It will be included unless otherwise the subsidy is provided by state government or central government. That's all. They are not even extending to any public sector undertaking or anything like that. Only central government, say state government. I'll give you a typical example. 3 examples I'll give you. One example is, urea, right? That chemical, which is for the benefit of all people. The state government or central government will give a subsidy to the price. Say for example, urea price is per kg, say for example 100 rupees. Government is giving a subsidy to that supplier saying that no, you sell it at, it's for the benefit of the public, you sell it for 50. I'll give you 50 rupees for you. Then the price of that particular urea which they are selling, it should be only for 50 because the subsidy is given by the state government or central government. Same example, I being a private limited company, as a part of my CSR fund, I am saying that, boss, I will give you 50 rupees, you sell it at 50 rupees. Will this form part of reduction in value? You understood, right? Supplier sells to the public for 100, government gave a subsidy, you sell it for 50, I will give you 50 rupees. Then the value will be 50. When the private limited company or public limited company as a part of CSR fund, they are giving 50 rupees and saying that you sell it for 50, still that urea price would be 100. GST is taxable on 100 only, not on 50. This is first point. Second point, you know, Tamil Nadu government is giving subsidy to the recipient. I mean, if I purchase the big machines, 25% capital subsidy will be given, right? You apply for a subsidy, you will get a capital subsidy. The capital subsidy, can that be reduced? See, for example, I am Mitsubishi, because it's a real case. Mitsubishi has sold a machine to one of the precision tool company for 60 lakhs. Government is giving, I'll take it 50 lakhs for the computation purpose. Government is giving 25% subsidy, 12.5 lakhs. Now when the Mitsubishi charging them, it should be 60 lakh or after reducing this 12.5? 60 lakh, because it's a capital subsidy. And second thing is, it is received by the
consumer
recipient, it's not by the supplier. So you have to understand, subsidy received by recipient not included, received and it is related to non-price linked not included. Now there are a lot of examples which I have given. These are all practical examples actually, because it's not at all, because one of our company got this capital subsidy. He asked me that, can I charge, because can I request for a GST thing based on this provision? I said no, because it's a capital subsidy not related to your price.
In this case, billing will be for 100 rupees or 50 rupees?
100.
In the urea case?
Urea case it will be, if the subsidy is provided by state government, the billing will be for 50. If the subsidy is given by the company other than the state government or central government, it will be for 100. Because there is a, why 100? Because there is a monetary consideration flowed from the central government. You are selling to the public 50, for that same product I am getting consideration, so price is not the sole consideration. So you have to go to rule 27, which says there is another monetary consideration which is coming, 50 rupees. So you have to add this 50 and 50, so it will be 100. You understood why that logic is, how the logic works, right?
No, if the subsidy is from public, the private company
Yeah.
itself, as a part of CPF fund,
Yeah.
then if you are billing it for 100 rupees, then customer ultimately will pay only 50 to you only.
Yeah. But GST will be applicable on 100. That's the only point.
No, you have billed it for 100. You have raised a bill for 100 rupees.
Yeah.
Customer is giving you only 50 rupees.
No, they will bill only 50. You do billing, but the GST will be taxable on 100.
How will you keep those two
100.
accounts?
No. You have to tax 100 rupees as the value. You have to take the value as 100. But when you are raising 50, when you are raising 100, he is not paying. Or the invoice should contain 100 and the consideration should be paid by this company only. Either way. See, the invoice is, my point is not how you are transacting it, how you are putting it across. Either you can raise it in the invoice in the name of this company, say 50 plus GST, or you can raise 100 rupees and plus GST, and this company should pay that 50 rupees subsidy. My point is, it's taxable only on 100. You can do either way. Both are okay.
Same thing can be applicable for the export you have given on this thing, no?
Export. Can I just hold on for a moment, sir? If you don't mind, because I to finish off the topic, I have to just little go faster because taking too much of practical example, that is why, we are, because, the thing is, if I rush and then complete, you will understand nothing. Take it from me. At least you will be able to appreciate all these practical examples, and that would be giving you some sort of value addition. So let me just go in the same pace and then complete it. Just, I'll hold your query for a moment, sir. Now your question, sir. Value excludes discounts. Discounts are excluded from the value. If you go to Reliance Trend, buy a product, if they are giving discount, that is excluded. So for example, 100 rupees is my product price. I am giving a discount of 10%. Then tax will be applicable only on 90. Very clear, right? I will tell you what all the intricacies involved in it. Say for example, there are various discounts. I am not getting into this particular topic. This itself is a big one. But I just wanted to give you a way, I want you to make clear that there will be inbuilt discount. That means, bill they will be giving you some discounts. There will be off-bill discounts by way of credit note. They will say that you sell this, I will give you discount, post discounts I will give you. Okay, but that terms were clear at the time of supply itself. So what are all included? We have to read this, then only you will be able to appreciate. If the discount is recorded in the invoice issued in respect of such a supply, that is very, very important. Same product, if I am selling this, for this I am giving you a discount, then that discount will be accepted. Then only 90 will be taxable. After supply has been effected, such a discount is established in terms of an agreement entered into or before the time of supply. That agreement should be entered before supply, specifically linked to relevant invoice. This product, this invoice, that agreement should be clearly linked to this invoice. Because I am telling you, because I will give you examples. And then the ITC with respect to that credit note, because you know that impact will happen by way of credit note. Then that document issued by the supplier has been reversed by the recipient. That person has to reverse the credit also. So for example, the supply has happened for 100. Subsequently, I am giving a discount which is satisfying this condition. I am raising a credit note. When I am raising a credit note, I should reduce the value. Right? Credit note is a reduction of value. When I am reducing, the other person has to reverse the credit. Now, there are a lot of issues. This discount, if it is abnormal discount, you have to be very careful whether the price is the sole consideration. Now, let's answer your question, sir. So, okay. So, you understood, right? The points should be available there. Terms should be available at the time of supply itself. In-bill discount, off-bill discount, cash discount. That is what your point was. Yeah. Cash discount, see for example, what happens is I am selling, sir, your good name, sir. Your good name.
Vishwanathan.
I am selling a product to Vishwanathan, sir, for 1 lakh. And what happens is, I am giving 2 offers. First offer, agreement time itself. If you pay this bill before 15 days, I will give you so much of discount. I will give you 2% discount. At the time of entering itself, I agreed that discount will be given. There is another discount, which is a beautiful one. I know that, sorry sir, I know that he is going bankrupt. I know that he is not going to pay me at all. I tried level best. He is not paying. Then I will tell him, sir, I will give you 10,000 discount. Please pay to me. That discount is actually in the nature of bad debt, which you are collected. So that is not entered at the time of supply. That discount you are not eligible. That will not be excluded from your value. Still, your value will be GST would have been paid on 100. That subsequent discount you will not get any benefit. Clear? Now, yeah.
The terms of payment is 60 days.
Yeah, correct.
He makes a payment on 15th day or on 18th day or on the 28th day.
Correct.
So based on the 60 minus 20, 32 days discount, that is what I mean as a CAT discount.
Yeah, that is very well allowed, sir. That you agreed. First point, sir. Have you agreed at the time of supply? Before you supply, have you agreed it for it?
Not
in the agreement.
No, the time of agreement is not like 60 days.
No, you are not eligible, sir. If you have not agreed at the time of supply, that means before at the time of supply, if I did not agree for that, then you are not eligible. The credit note will be like a normal financial credit note. Assuming that I agreed, yes sir, the agreement itself or in the PO itself I am saying that you pay within 30 days and if I am giving a discount then it is eligible.
Here, ITC reversal is not the question. The person who is taking the discount and giving the discount, he raises a bill with the GST for that 32 days interest. Is it correct?
Interest is correct, sir. Now, this is a mix of interest is included, sir. Few minutes back we said interest is included.
See, at the time of billing itself, or including 60 days, the GST is already paid.
Okay.
The fact that they have paid the money just ahead of time by 10 days or 15 days, how the Act can impose an interest on the CAT discount again
no,
GST?
No, it's not like that, sir. I'm selling for 100 rupees, telling that you give me discount. If you pay, I'm giving a credit period of 60 days, telling that if you pay within 30 days, I will give you a discount. If I'm giving a discount, then that is entered at the time of supply, then you are eligible to reduce your value. That is by way of credit note. Reversal will happen, all these things will happen. Now, if you did not agree at the time of supply that this 30 days if you pay and all, then this will not reduce the supply value. That is the only point. Now, interest part comes only when I am supplying, saying that If you don't pay within 60 days, I will charge you interest. On that interest, GST will be taxable. That is the only point I am making. Yeah, sir. Discount due to, you cannot give discount due to defect, sir. Discount, what happens is, defect, what happens, you will raise a, yeah. You will raise a credit note, sir, right? That is very well allowed under section 34. If there is any defect in the product, credit note can be raised. But please note, credit note raising, there is a time limit. Due date for filing return under section 39 for the month of September, that is 25th of October, now it's over. And annual return date, whichever is earlier. So you have to be very careful. Even if it is agreed at the time of supply, credit note value can be reduced by way of credit note only. That credit note has a time limit up to September month returns. This is a small limitation in the act which is represented, but I don't know what is, so far there is no clarity on it, but there is a limit on it. Sir, can I take the question after some time? If you don't mind, I'll just, please don't forget, you ask me, I'll just move on. So various discounts are there, and now we are going to the rules actually. So I said if the price is not the sole consideration, we will take open market value, right? So if the price is not the sole consideration, we will go to rule 27. First thing we will see open market value. Second thing we will see money plus value in kind. See, for example, and third is value of kind and quality, money plus rule 30 or 31. It's very simple. You take a mobile example, which is also given in the rule. You are going to market for buying an iPhone. Say iPhone is valuing 50,000. You know very well 50,000. Then you are giving your old mobile in exchange. Say for example, you have a Samsung phone which is fetching 10,000. So effectively you will pay 40,000. Now, that being the case, price is not the sole consideration, right? There is a kind also followed. So Act says you take the open market value. Open market value for the same product is available in the market, so you go by 50,000. Assuming that open market value is not available, you look at the money. Money is 40,000. And plus value of kind. What is this mobile? This Samsung mobile. What is the value of it? If known at the time of supply, you go with that. Both if you add, you will get the value. Value of like, kind and quality. Fourth is money consideration plus rule 30 and 31. Please understand, this open market value and like, kind and quality are being defined. Just keep it in mind. Once I explain, then I will come to this and I will explain. Open market value means full value in money excluding CGST, all these taxes, when supplier and recipient are not related. Price is the sole consideration, supply at the same time. And same being value being made. See, for example, if I am selling this laptop for 1 lakh and if I am selling 50 laptops, will the price be same? It will be different. I will be selling even for 90,000. So these are all the situations. So which they are saying it should be at the same. If one laptop, one. These are all very, very subjective thing. Now let's look at that Fiat case. Can you find out the open market value for Fiat? Because they were selling, the open market value itself is 1,50,000. Can you find out open market value for Fiat? No. Not possible. Money plus value of kind, you cannot value that market penetration as you rightly mentioned. Value of like, kind and quality. Fiat is Fiat only, you cannot compare it to Maruti, right? Money plus rule. Money is there, rule 30 and 31 is there. But that is also will not stand. You have to go to 30 because I will correlate rather than I am reading from rules. It's better if I take an example and then give it. See, rule 27 we are in, 28 is not applicable, it's only for related party. So 30, agent and principal not applicable, and 31, that is how we are coming to 30. 30 says, you take value is equal to 110% of cost of production, manufacturing, acquisition or cost of service. So you have very well, you know what is the cost of production. You take 110% of it. So in this case, Fiat market, though price is not the sole consideration, I went to 27, 27 is not giving me any solution, then I have to go to rule 30. 30 is saying, because I don't have any open market value, I don't have the same kind and quality, I don't have the money, and then plus valuation cannot be done for market value, market penetration. So all these things are not satisfied. So I came to rule 30. Rule 30 is clearly saying 110% of cost of production, manufacture or acquisition or provision of service. Now, can you say that I don't have the cost of production? No, you cannot say. It should be there because as per the cost accounting standards, cost of production, you should do it. Second thing, even if you don't know, commissioner has the power to appoint a chartered accountant or cost accountant to verify cost of production as per the cost accounting standards. That is, provision is also given. Assuming that fiat saying that no, I don't know, or assuming that they are saying the commissioner or the assessing authority felt that the cost of production they undermine it, undervalued or something, they can very well appoint a chartered accountant or a cost accountant to do a cost accounting standard followed with the valuation. Okay. Now let's come back to Rule 28. So clear? Rule 28 says, there are a lot of examples which I have given. I am not taking it, warranty, supply, all these things, you can go through it. Because time is running out. So Rule 28, this is for the related party. The moment they are related, I will give you a beautiful example also. Distinct person or related person, what happens is, if it is, so be very, very careful. There are many people who are making mistake in this. If it is intended for further supply, yes, open market value, we already seen what is open market value, value of kind and quality, Rule 30. This is what you have to do. Government has given an option, please understand it's an option, where they said 90% of price charged for supply of goods of kind, like kind and quality of unrelated customer. See what happens, I told you that bearing case, right? See, bearing case, open market value, you will not be able to do. Because they themselves is selling at a lower price, you don't know what is open market value, value of kind under Rule 30 only will be giving you solution. Cost of production plus 10%. Now, government is saying, if the final party, assuming that the final party, in this case it is not possible, assuming that I am selling from I am a branch office in Chennai and then I am transferring my stock to Gurgaon, from Gurgaon they are selling. So Act says, boss, I will give you an option, you take the 90% of the value from Gurgaon branch to an unrelated party, you make a sale. Say for example, you are selling it for 200 rupees. You take 20% of that. 20% of that. It is not possible, 100 and 200 is not possible. Say for example, 110. You take 90% of it. But please be very, very careful. Please be very, very careful. The Act says, because this PPT will not help you, the pictorial representation will not help you for the interpretations. It says, not here, proviso says, provided where the goods are intended for further supply as such. Be very, very careful. As such means, I am taking this laptop, I am selling it as such. If you are selling, if you are doing a stock transfer for manufacturing, no option. I have seen one company, they said, because in the market the general understanding is stock transfer. Stock transfer I can do 90%, stock transfer I can do 90%, stock transfer I can do 90%. Where is stock transfer? I have taken, copy pasted the Act as it is, because that is how I do the presentation, because the moment the pictorial will not give you any kind of interpretation issues. Here you can see it clearly says as such. That means if I am selling this laptop, you sell it as such. If you are doing it for a stock transfer of manufacturing, that option is not available. That's the only point I would like to make. And it should be for further supply also. And if I am selling it, they are doing some sort of processing and then selling it, not applicable. And this is a beautiful one, this provision. This provision says, because everybody got, everybody was happy when this provision was there. Initially nobody knew this provision. Later people understood this provision. Later again we got disappointed. I will tell you this. This is a beautiful one. It says it's applicable for both goods and services. See, the first one is only applicable for goods. This is applicable for both goods and services. If you are supplying, provided further that where the recipient is eligible for full ITC. Please understand, full ITC. The value declared in the invoice shall be deemed to be the open market value. See, what happens is, I transferred the goods from here to Gurgaon and I understand that Gurgaon branch is eligible for full ITC. Even if I put 1 rupee in the invoice, that will be considered as a deemed open market value. The moment the open market value comes, it comes here, open market value. You don't have the open market value, but Act says if your other party is able to take full input tax credit, whatever you are putting it in the invoice, that will be the open market value. I'll complicate further because I have to tell you the intricacies involved in it. See, one company asked me this. Rajiv, I have a cash flow issue. I don't want to pay GST. I'll put 1 rupee. What is your problem? I said, don't do that. Provision, you are coming from 15, section 15, and you are coming to rule 28. You are taking the benefit of second proviso, saying that 1 rupee is the invoice value is substantiated. When you go back to section 15 again say one more condition, price is not the sole consideration. Again you will come back to rule 27. Again you will come back to rule 27, and where open market value is required, under that proviso, open market value is not deemed to be the invoice value. You understand, able to appreciate? It's a little complicated. I'll tell you once again. It's a related party transaction where you are in section 15. You are related, so you went to rule 28. Rule 28 second proviso is giving whatever the 1 rupee you are mentioning in the invoice will be considered as an open market value. Okay, very good, 1 rupee, open market value I considered, I come back. When I come back to section 15 says if the price is not the sole consideration. That is very, very important. Assuming that this branch is getting some sort of benefit from that branch, then price is not the sole consideration. Then you have to go to rule 27. Rule 27 says open market value. Under that proviso, open market value is not defined. So it's very critical. So my humble request is don't do all this kind of 1 rupee invoicing and all. Do it properly. Take the credit. This is applicable only in case price is not the sole consideration. We got a practical example where we come across. Generally, whenever we interpret, we'll stop there. But when you go back to 15, again it is giving some other section rule which also to be satisfied. Now, residual method. Residual method says where value of goods or supply both cannot be determined under section 27 or rule 27 to 30, you have to value it based on the standard, generally accepted accounting principles, consistent with section 15 and then rules. That's all it says. Value in case of lottery, betting and gambling. So the main provisions are over. Now we will come to specific provisions. 31A, lottery. I will give you only one point. I'll just finish it off. State government lotteries or the state government owned lotteries actually. So that being the case, you have to consider the values 100 divided by 112 of the face value of ticket. Ticket values, say for example 10 rupee, you have to do that exercise. If it is authorized by the state government, if it is not owned, see for example Kerala government has Karunya lottery actually, because that is a state which is very famous for lottery, so I got some lottery tickets and then understood that that is owned by the state government. Now if it is lottery is authorized by state government, so authorization, that lottery is run by the state government or central government, this is authorized by state government or central government, then it will be 128. 100 divided by 128. Now betting and horse riding and all, it's there. You can just go through it, what is the value. And there are certain situations where you have to find out the value of supply. First case is purchase or sale in foreign currency, booking of air ticket by air travel agent, life insurance business, second-hand goods, goods repossessed from defaulter, token stamps and vouchers. I'll go one by one. Here itself I will not go to the slide. I will explain here itself. Booking of air ticket by air travel agent. See, air travel agent will charge you the cost plus the value. At the option of the air travel agent, he can take the base fare into 5% for domestic, 10% for international flight. Clear? The value will be whatever the value at his option, assuming that he would like to go for this option, then what happens? 5% of the basic fare. Basic fare is also defined for the purpose of GST, and 5% for domestic, 10% for international. Life insurance business. Please note, only life insurance. In case of medical insurance not applicable, other business insurance not applicable. If you look at the medical insurance bill, invoice, it will be 1 lakh, the premium payment, 1 lakh plus 18% they would have charged. Go back home, take your life insurance receipt, see what is the GST included. LIC will do like this. Say for example, 1 lakh is the premium you are paying. First premium, they will charge 25%. Second premium, 25% of the premium. Second time onwards, they will charge 12.5% as the value. So, typically yesterday I confirmed that to check, to cross verify, it was the premium was 3221, and that is only, they don't give any description on the receipt. Bottom they mentioned 72 rupees included, 72.4 rupees included, GST is included. That is nothing but 12.5% of 3221 into 18%. That is how they do the valuation for life insurance. Second hand goods, please note, second hand goods, don't get misconstrued. Second hand goods who are person in dealing in second hand goods, not for the normal companies, because one client has come said that I would like to sell my second hand goods, machinery, second hand machinery. I said no, you cannot go to this provision, this is only for person dealing in second hand goods. Say for example car, you know, that guy who is buying and selling second hand cars and all, then it will be applicable, otherwise it is not applicable. Goods repossessed from defaulter, this is related to bank thing. And token stamps and vouchers. Token stamps and vouchers, what happens, assume that you are getting some vouchers for supply of goods, supply of service. So ladies will be able to appreciate that the green trend and what is that? Naturals. So you are answering. So naturals will give you a voucher for service worth of say for example 1,000. So that being the case, if they are giving that, mentioning that you can do eyebrows, whatever, that thing, then that will be the value of supply. You pay the GST accordingly, assuming that they are, let's come to our example. If they are giving a voucher with saying that I will give you a laptop, then that will be the value of supply. That laptop's value will be the value of supply. So pay GST accordingly. So these are all beautifully explained. You can go through it once I share the PPT. Yeah, we'll break 1 minute. The last provision is value of supply inclusive of IGST, CGST, SGST, UTGST. What happens is, if you are getting a lump sum payment, say for example 1,18,000 they are giving you, how to find out? The tax amount is what is being given by the government. It's a very simple formula. If it is 1,18,000, you multiply the rate 18 divided by 100 plus 18, 118, and this is how you can find out. If you multiply the amount into 100 divided by 118, you will get the value. Very mathematical formula. We were used to it under the old regime also. With this, let me just conclude my session on value of supply. We are sharp at 11:45. We have 10 minutes break. I request everybody to come back early because I have 2 topics to handle. I require your cooperation. Please finish off your tea break and then come back 11:50 or 55. Thank you so much. Late for lunch. Okay. So let me just start this topic with a small question. Is my presentation okay?
Yes.
Very good. I mean, in the sense you are able to appreciate and understand. Okay, thank you sir, thank you so much. Yeah, now we are going to handle the next important topic is refund under GST. Refund is a matter of multiple amendments. Every notification they are releasing, whenever there is a rule amendment to the rule, I will be looking for this particular amendment only. Every time, most of the time, some or the other way, they will make amendment to refund rules. It was such a manner that people like us started expecting, the moment there is a rule amendment, okay, there will be some rule amendment to refund provisions. It has come to that stage actually, because that much of amendments, tracking these amendments are very, very challenging, because today they are saying something, tomorrow they are saying something. That too with retrospective effect. We would have told the client something, sir, this is what to do. Client will come and before we get the notification, they get it. I don't know how they are getting it fast. At least we'll go to office and then we'll look into it. You cannot simply forward notification like that, right? Because all CS are being trusted people. We will verify, we'll see the pros and cons of the notification, then only we will forward and send a note to the client. Before that they would have got it. Now they will be saying that, sir, you only told this thing, now this is wrong. Sir, now only this has come. It is retrospective effect. How can I am not a Superman or Spider-Man or even the God to understand that it is a retrospective effect. Now only it has come. So this is the provision as on date. Ultimately all CS will be blamed. Even if the department is issuing a notification, they have to put anger on somebody. Sir, okay, fine. So this is how it happens. But beautifully what happens is, it's a very, very beautiful thing. Even if they are doing retrospective amendments and all, it's a beautiful thing, you will get Alzheimer's, no? If you don't use your brain, you will get Alzheimer's actually. So GST department is doing a good mental exercise for all CAs. You have to read left and right, so your brain is always engaged. Huh? Correct. If it continues like, it will become a brain, average. Yeah, correct. So we'll come to the topic, refund. So the same way, I'll handle with, I'll stop exactly at 12:30, 12:35 because I have to cover one more topic called composition scheme. So here in the refund, I'm not going to handle the entire refund provisions. The topic given to me is refund, give due priority or due preference to inverted duty structure. Okay, so before getting into the topic, let me just tell you, that is what I said, I will share the PPT. Please share your email IDs in a paper. Because I don't have a presentation for basic or advanced or anything, this is my standard PPT, which I am comfortable with, because all the amendments, notification, circular, text will be there as such, because sometimes these kind of interpretational issues can be given only by showing the text. Now when it comes to refund, relevance of refund, statutory provision issues, illustration, case studies, AR rulings and case laws and all, I have included it. Now let's understand this. Provisions, it's from 54 to 58, and CGST rules 89 to 97, and same thing as I said, 20 of IGST Act and 21 of UT GST Act. You just go to 20 and 21 and read. It's only this much of paragraph. It's just one paragraph. They said all this following topics you go to CGST Act. So there refund is also applicable. CGST Act is mutandis applicable to SGST and all. Now let's come to section 54, refund. There are a lot of, I told lot of notification, lot of circulars. Most of them are circulars also there. Lot of circulars, lot of notifications, and lot of materials are being given actually. Now, refund of taxes, procedures, interest on delayed refund. I will be handling only on refund of taxes, considering the paucity of time. Now, let me just tell you a couple of points. I'm going to tell you what are all the circumstances under which you can go for a refund. Can anybody tell me what are all the ways you can go for a refund?
Excess payment.
Excess payment, okay, very good. You tell, no problem. Okay, CGST paid as a IGST, beautiful example. It's under section 77 and 19 of the 77 of the CGST Act and 19 of the IGST Act. They said if you are paying CGST instead of IGST, CGST, SGST instead of IGST, or the vice versa, you can go for a refund under section 77 of the CGST Act and 19 of the IGST Act. Very good. But madam, please be very careful. They said you can go for a refund, and section 77 subsection 2 says no interest is tax payable. 19 also says no interest is payable. But please understand, if it is found by the department, only that benefit is available to you. You have to read that two sections very, very carefully. If you yourself found that you wrongly paid it, interest has to be paid under 77.2 and 19.2. But if the department is finding it, then you don't have to pay tax. I don't understand what is the logic behind it, but that is how it is worded in the Act. Okay. Yeah. Any other one? IGST paid. Yeah. IGST paid on export. IGST paid on SGC supply. Now?
Wrongly paid.
Wrongly paid.
Higher amount paid.
Higher amount paid. Very good.
Goods which were meant for domestic supplies,
yeah,
but got converted to exports under a special request or something.
Okay.
To that extent, you can make an application to get the refund.
Do you mean deemed supply? Deemed export? Deemed export, okay. Export, okay. Then?
So amount of correction by the department or the revenue itself,
Okay.
They have paid it on the higher side while actually the tariff is also, it should be on the lower side.
Okay.
So the difference is the one which we are eligible for the.
I would put it this way: you fought for the classification, and finally you got a refund based on the court order. Assuming that you fought and you already paid, and then now the refund has come based on the court judgment. You gone for a appeal, and then you got a refund. Okay, very good. Next.
Continuous accumulation of input. Input cost is more and
Excellent.
output tax is less.
It's called inverted duty structure. Accumulation of credit, and you will never be able to take the credit out of the electronic credit ledger. Such situation subject to some terms and conditions. Very good point. Any other point?
Retrospective amendment.
Retrospective amendment. Okay. Then final assessment. What kind of assessment? Provisional assessment and final. Okay, provisional basis they gave a refund, and based on the final order, final assessment, there is a refund due. Okay, paid. Fairly okay. Any other points? There is something called, it's a unique provision under IGST Act. Section 15 of the IGST Act says, if any foreign tourist comes to India, when they are going back, if they are carrying the goods, if they are taking goods outside India, service no, goods outside India, they are eligible for refund. One case. There is something called, I'll put it this way actually for your benefit. Refund of ITC, refund of output tax paid, refund of cash ledger, electronic cash ledger. I'll put it this way: electronic cash ledger refund, electronic credit ledger refund, and outward tax paid. Now we'll put it into 3 buckets. Very clear, so that we'll be able to recollect tomorrow. If you take the outward tax paid buckets, we can put tax paid, IGST paid on export to export, that is CGS, export, and SEZ is applied. Then this foreign tourist, they pay tax, they are going for refund. All these will come under outward. Second is ITC. There are only 2 ways, only 2 situations which they are prescribing where you can go for a refund. One is zero rated supply, that is nothing but export and your supply to SEZ, or inverted duty structure. That means my rate of output goods, the goods rate is, outward supply rate is say higher, and lower, and my input rate is higher. So assuming that my output rate is 5%, input rate is 28%, and I am doing only in that, dealing in that, there is no way that I can get the ITC being utilized. See, it will automatically, you can see over a period of time, you can accumulating your electronic credit ledger like this. Your outward is only 5, your inward is all 18. Very big issue. You look at construction industry. Now, construction industry rate is, works contract is 18%, right? Now, there was a notification which has come in January. Before that also there was a notification. That notification says, if you are supplying the contract, works contract to government, 12%. Now what happened? Most of the construction materials are under 18 and 28. Now 12 means it will get accumulated. These are all couple of issues. Now whether refund is applicable or not, that we will come to later. I am just giving an example because for this there is no refund. Okay. Now this is second category, ITC. So please take it as a thumb rule, because I am going to confuse you with multiple examples. ITC is available only for, ITC refund is available only for zero rated and inverted duty structure. Electronic cash ledger. It's happened to one of our client also. Instead of IGST, that fellow paid CGST, SGST. And they don't have that much of it. It was in crores or lakhs. They were not able to utilize it. They applied for a refund. They got the refund also. So that is the third category. So we are putting all refund into 3 buckets. Refund of outward tax paid, ITC and electronic credit ledger. Now let me give you some examples. It's a real example. One company which is having, it's a consumer industry, it's into the consumer industry, which has branches across the state, and they have branch in Pondicherry also. As a part of business strategy, the management has decided to close down the Pondicherry branch. They closed down the Pondicherry branch. No employees, no stock. Stock is also being transferred. Everything is being done. There was an accumulated credit lying in their credit ledger. I'll repeat, accumulated credit lying in their credit ledger. Can this company go for a refund? Now they closed down the business. Can they go for a refund of this accumulated ITC?
ISD is there.
No, there is no ISD and all. ISD you need, I'll explain to that. I'll point to that, come to that, because this company got into complete, because these kind of MNCs will work not based on, though you are the advisors, they will work based on the head office instruction, because they are all bound with following that rules. So only after implementing only they will come to us, sir, we did it, okay, just for information. That's all they will say. When we analyze only, we will say, boss, what are you doing? This is completely against in GST Act. I will tell you what is the exact scenario. This is part of it, I just plucked it in. Now, can this company go for a refund under section 54? No? No. Sorry, sir? There is no inverted duty structure. Neither it is an inverted duty structure, nor it is a zero rated supply. Because there is only two ways you can go for ITC refund, right? We already discussed that. Now, what is the solution? What is the solution? I closed down. It's still lying in my credit. What is to be done?
Transfer to the...
There is no stock, sir. There is no employees. You cannot transfer, na? How do you transfer? You need at least goods, or you need to do some sort of invoicing.
Distinct entity.
Distinct entity, yeah, correct. But how do you transfer the stock, the credit?
No,
See,
when you originally transfer the stock,
yeah,
before making nil,
yeah,
you transfer that.
Already done, sir. Damage already done. No stock, no employees. You know what this company has done? I'll tell you. Some people think that they are too brilliant. What they did is, they raised an invoice. It was credit lying was around 18 lakhs or something for a computation purpose. Let me restrict to that. These people beautifully raised a 1 crore invoice from Pondicherry branch to Chennai branch, saying that it is a supply of service. Because goods, there is no goods. Because e-way bill is required, they cannot track it. Head office instruction is, raise an invoice for service, transfer the credit to this. Chennai, you have manufacturing, everything is there, you utilize it. What is the problem here? Huh? There is no inventory, service no, intangible, no e-way bill, nothing. The problem was, first of all, this is a cross charge. There is no supply of goods, no supply of service. Under section 16 of the CGST Act, for input tax credit, Sriram would have taken you through that. It clearly says the person must receive goods or service. Have the Chennai branch received any service? It was only invoice which they raised. Received. Not at all possible. You cannot simply transfer the credit like that. Chennai branch has not received any service. Now, second question, beautiful question from the company was, sir, how do it's the Chennai turnover itself is 15,000 crores turnover. How are you expecting the person to find out that 1 crore turnover has been done? It's nothing for them. I said, boss, you look at the Pondicherry perspective. Anyway, you close down. You don't have a transaction. Suddenly, so far in the last 10-15 years, you did not even raise a single invoice for service. Goods you raised, all inward only. Suddenly you are raising a 1 crore. Pondicherry people will be able to identify. Chennai doesn't matter. Chennai, you leave it. First there you will have a problem. You are doing something wrong to get the refund back. First problem there. Second problem here. So far, if you take more than 1 crore transaction with invoice with service, what service they can? How can they substantiate service? No payroll. No PT would have paid there. Professional tax. You cannot substantiate that the employees are there. Will be a big problem. I told them, boss, I will give it in writing. You are not eligible for credit. Second, they also will be in trouble. And finally, they took the case into Delhi and all the discussion. We also participated. Finally, we said, no, we will give it in writing. You are not eligible. Finally, they agreed. They reversed it. So no way you can take the credit, because 54 is very clear. Unless otherwise there is an amendment, you are not eligible for any other ITC credit. Refund of ITC. Now, if you come to Chennai, Chennai also not eligible, because 16 is very clear. You have to receive the goods or service. Gone. So this is so when you take a transaction, when you advise the client, my humble request is, don't restrict how to solve the problem. Solve the problem, but look at the provision in detail, word by word. You look at it and see whether they are eligible. See, logically it is correct, na? Raise an invoice for 1 crore, 18 lakhs anga poichu. So they got invoice. It has got credited to electronic credit ledger. They are also reflecting in 2A. Everything is perfect. They are eligible to take credit. Invoice is there. It is as per section rule 46. Everything is perfect. But they are missing one particular point. So like that, you have to be very, very careful when you are doing these kind of advices.
So they miss the ISD.
ISD is not possible, sir, because for ISD it clearly says you have to receive an invoice for common credit. You have to distribute. Now there is no input tax credit which has come to them to distribute. So that is not possible. Second point is cross charge. For cross charge, Pondicherry branch has to provide some goods or service. Supply some goods or service. Both are not there. So ISD is not possible. Supply of goods is not possible. Supply of service is not possible. Invoicing is possible. Chennai, they will raise a Chennai one more invoice to Chennai. Pondicherry invoice also these people only raising. Same person will raise from Pondicherry to Chennai. Supply of service, so and so. Consultancy service, 1 crore, 18 lakhs. File pannumbodhu, they will file it and then they will transfer it. Very simple, na? Simple, but not possible. So, very thumb rule, please keep it in mind. ITC run the situation down. That's all. Now we have already gone through it. Export of goods or services, supplies to SEC unit or developers, deemed export, refund of taxes on purchase made by UN or embassies and other. I'm not touching upon that. See, you know our neighbor is a US consulate, right? Here, embassy. They are eligible for refund. There was a lot of amendment also because we Indians are not able to get the refund. I mean, file the refund because we are also new to it. For them, they said within 6 months you have to apply for refund. For us, it is 2 years. GST is recently come. They also don't. First of all, we don't know what is GST. Second, they themselves, their laws are very beautiful actually. If you want to understand US laws and all, you take our Institute Act, which is very simple, straightforward. The Chartered Accountants Act, very simple. But you take our GST Act or Companies Act, you compare it with US Companies Act or US GST Act and all. It's very simple. They are very simple. They will straightforward. They will would have mentioned. So first of all, they don't understand what is GST. Now you are saying within 6 months. What is credit eligible, not eligible? They don't know. We don't know. So they extended the time limit again and again and again. That's all. Now refund arising on account of judgment on appellate order. So that means if you get an appellate order, you are eligible for refund. That has to be given. Refund on accumulated ITC on inverted duty structure. We already mentioned. Refund of pre-deposit. I would like to make a just small point. As far as casual taxable person and non-resident taxable person, NRTP and CTP, when they do the business, say for example, I have a registration in Chennai, I'm going to Bangalore for it, I'm just obtaining a casual taxable person registration, then I have to pay the tax in advance, estimated tax in advance as a deposit. That amount is eligible for refund after you complete your service. 90 days only the validity. You can extend for another 90 days, so maximum 180 days. So if you are coming back, you can apply for a refund, you will get it. Excess payment due to mistakes, so excess payment, you are eligible for refund. Now next is refund to international tourists, we already discussed. Refund on account of tax paid on advances. Tax paid on advances, what happens is sometimes you will pay, somebody asked me during the break also, I received an advance. You have to pay tax, provided it is for services. But from 1st July to 12th October, it was for goods also. 12th October to 11th of November, they said if the turnover is exceeded 1.5 crores or expected to be crossed 1.5 crores, then goods also it is applicable for that specified category. And if it is after 12th of November, because that notification came on 12th of November, then no GST on goods. Advance received again supply of goods, but services from the beginning it is applicable. Now what is the procedure? When you receive an advance, you have to issue something called receipt voucher under Rule 50. Okay, and second scenario is you receive the advance, but you are not able to supply the service or goods. Now you are refunding the amount. when you are refunding that advance, you have to issue one more document under Rule 51 called refund voucher. And when you are doing that, you can go for a refund actually. Tax paid on account of tax paid on advances, you can go for a refund. Now, refund, this is what you said, you know, the CGST, SGST paid by treating suppliers intra instead of inter, section 77 and section 19 of the CGST Act and SGST, IGST Act respectively. Refund of balance in electronic cash ledger. It is excess amount is there, you can credit. Yeah.
Advance received, we should consider inclusive of tax or...
Very beautiful case. Yesterday, very honestly telling you, yesterday I got this question. They received a, in all the construction industry, before they move the goods to another place, they will get mobilization advance, right? Mobilization advance. They got around 24 lakhs mobilization advance. Very simple. The moment you get that 24 lakhs, they will not pay with the GST. So you have to consider this as an inclusive of GST. Go to Rule 35, which says how to calculate it. We already dealt with it, right? Yeah.
One second.
Yeah, please, sir.
Regarding the electronic cash ledger.
Yeah.
What about the TDS?
TDS, very good point. Under section 51 and 52, TDS and TCS being dealt up. Sir's point is, can this TDS be applied for a refund? Can you apply for a refund? TDS.
Yes.
Sorry, sir?
Yes, you should apply.
Yes, you should apply.
It will reflect in cash ledger.
Perfect. Because you know that, you know, with effect from 1st of October 2017, the section 51 for TDS, 52 for TCS are being made applicable. Sir, let me answer your question. If the TDS is being deducted by the respective parties like central government or state government or public sector undertaking or whatever it may be, the society is registered under the Act, then they have to remit this within 7 days. It will go to your electronic cash ledger. So it will hit your electronic cash ledger. If you read 51 in conjunction with Rule 54, which clearly says you are eligible for electronic cash ledger. Whenever you want to apply, you can apply. But my humble point is, see, whenever you have cash ledger, excess only you will apply refund. If you can use it for the next month liability, nobody is going to refund because TDS is also, it's only 1%, sir.
No.
Yeah.
There's a factory pay where it's supplied to railways.
Yeah.
It attracts 5%, whereas the input is 18%.
Correct.
Already inverted duty structure, a lot of credit.
Perfect.
Again, TDS.
You can apply, sir. In that case, you can apply. Electronic cash ledger, if it is money is lying, you are very well eligible. Whether it is in the form of TDS or whether it is in the form of TCS, both will come into electronic cash ledger, not to credit ledger, cash ledger. You are eligible, sir. We also applied actually one for one of our clients. One got through, one is stuck. So, because of some other reasons. Now, time limit for application of application. See, I told you for embassies and all, UN agencies and all, it's within 6 months from the relevant date. But in case of normal, all other assessees, it is 2 years from the relevant date. 2 years from the relevant date. So, even if the GST has come in July 1st, you can still apply. 2017, 18, 19 would be the last date for 1st July refund. Now, when it comes to the practice, I will not get in the procedure too much, but let me just tell you. Previously, nowadays the GST Act is defined not by this kind of interpretation what you are talking. It's purely based on your portal. Portal will tell you what to do. It will not be, let me take you many instances where what is not told by the actor, not even told by the rules, are told in the common portal. Got surprised actually. Because portal will tell you. So sometime, you know, when they apply for a refund, the students will come back and ask, sir, can I apply for this? I said, yes, why not? Provision says, sir, not possible, sir. We are pressing, but it is not activating. What to do? So I said, okay, let's do whatever portal says, let's do it. Inform the client, provision says this, portal says this. Now portal only accept because everything is online portal. I'll give you a beautiful example. Why I told you is, previously the refund application was done on a monthly basis. The portal was activating on a monthly basis. Now they made it in such a manner you can select the date. So one person asked me, can I take 1st July to 1st July of 2017 to 18, can I take this and apply for refund? Act is not prohibiting, you can very well go. But my understanding is portal is saying financial year. So what to do? You apply based on whatever portal says. So sometime Act will not prevail. These kind of things, if you go to the department and say, sir, if you need rule based na, so sometime you have to come down to the common portal and apply for a refund. Now what is the form to be submitted? RFD 01 is the form to be submitted. RFD 01 is the form to be submitted. Second important point is, you have to ensure unjust enrichment point. We are very familiar with it. I made a supply to him. He already passed on the benefit. Now you cannot apply for a refund. Even if you apply for a refund, the refund will get credited to a fund. It will not come to you, it will credit it to a fund. There is a fund actually for the consumer welfare fund. It will go to that account only, it will not come to you. Because when I read the act in July, I completely got confused. Because the section, the moment you start reading only, you will understand. July the act came perfect, everything was I was reading it. At that time it was said that whatever the refund application amount will be credited to consumer welfare fund. Then why should I apply for a refund? If you are crediting it to consumer welfare fund, why should I apply it? Then only subsequent section says, no, there is an exemption to it. In the following cases, we will give it to you. The applicant, we will give it to you. Fine, perfect. So that is how, first you will get a heart attack, then they will give you a thing. So, now my point is, so UN agencies and all, you will get a refund. There are specified UN agencies. Within 6 months from the date of the quarter in which such supply was received, you have to apply for a refund. But actually, this 6 months got extended by way of notifications. Zero rated supply, all of you know that this is possible, because recently we tried to do some sort of structuring for 1,000 crore project in Trivandrum SEZ, one of the project where our client is in Chennai, and then they wanted to do the project in SEZ. Now the problem with this SEZ transaction is, though I am a construction company here and then the transaction happens in, say for example, Tambram MEPS, the construction happens. What happens? I am being a normal registered person supplying to a SEZ unit or SEZ developer. I am not charging, but whoever is paying me, whoever is supplying me, those input tax credit are getting accumulated. So what is the solution? 54.3 is the only solution. We went ahead because it's a 1,000 crore project. Let's try something else. Yeah.
Suppose if you are having other projects, you can adjust the credit.
There is no project, sir. Very good point. If you are having any other project, you can adjust it. They had one Cochin project, metro project, that is got closed. Now they moved to this SEZ. So typically there is no project. That is why the point mainly came. So now we tried for SEC registration. It's out of box thinking. We just tried whether that is possible. Then supply to us will be examined. Not possible. For that, we discussed with some of the software companies who are having the SEZs, 60 units. They said you have to file a separate forms for that. It will take at least ministry, getting the registration, all these things, not possible. So we tried our level best. We know that it is not possible, but based on the request from the management, we just tried that also not possible. So for those cases, it will be inverted, the zero rated, you can go for a refund. The only thing is working capital blockage will be there. We recommended them to go for a refund on a monthly basis. And
no AR.
AR not possible, no sir. It's a very clear transaction that I am supplying to SEZ. Now, no refund in case unutilized ITC, in case of when you are paying export duty and all. Okay. And or duty drawbacks, you cannot take both the benefits. Either only you can take the benefits. Say for example, assume that you are paying IGST. You are paying IGST. One section says you can claim IGST. Another section says you can claim ITC, zero rated. Now you cannot claim both, right? That is why they cleverly said either you are claiming this, you cannot claim this. Either of this only you can claim. Okay. Now, application for refund we already discussed. Order of refund will come, and then provisional basis. If you are a zero rated supply, SEZ or export and all, they are releasing 90% of the refund applied on a provisional basis within 7 days from the date of acknowledgement. They are giving acknowledgement in RFT 02 all of you would be able to appreciate that those who would have applied, the department is not accepting RFD 02 because the moment they accept it, the time starts. Within 7 days they have to release. They will say, no, this application, that is not there, this is not there, that. Though it is an online, you have to submit manually also. So they will say, this is not correct. They will never give RFD 02. Try to get RFD 02. Then their time starts. Within 7 days or 60 days as the case may be. Time limit for issuing refund order is there within 60 days. Application is complete in all aspects and all. And refund to applicant will come. In all these cases, in our normal cases, it will come to us. And withholding of refund, sometimes the department can withhold your refund in case you are not filing refund, or in case you are not paid the tax, or in case the commissioner feels that there is a fraud which has happened and feels that no, it is not, it will be prejudicial to the revenue to give a refund. In such cases, he can hold the refund back. And in case of appeal also, he can hold back. And in case interest of withheld refund, sometimes if the department is withholding your refunds, they will pay you 6% interest. Obviously, now when you are paying 18%, when government gives you, give you only 6%. But based on an order from the court or tribunal or such authority, and even after that receipt of that order also you are holding now, you will get 9%. Because some authorities told you and then you are not receiving, so you will get 9%. Otherwise, it is only 6%. So this all we discussed. Now beautiful point. What is the monetary limit? The maximum refund minimum it should be 1,000 rupees. You cannot apply for a 500 rupees refund.
Old note, sir. Note is not.
Old note only. Anyway, you won't get, sir. It doesn't have any value. Even if it is 1,000, it doesn't have any value. That is what I said. I took this photo. Old 1,000 note is available? No, na. Anyway, 1,000.
As of now.
As of now, no. And anyway, it's something like this only. This refund application up to 1,000 is like this only. It's only paper. You don't have any value to it. And refund meaning is also given. Now, I said 2 years from the relevant date. 2 years from the relevant date. This is very, very important actually. What is the relevant date? Because this is important after 6 months. Why 6 months? Because anyway 2 years is not over now. We have 6 more months to decide on this. Anyway, you apply it, you will get it. But we generally apply for refund in the last minute. We'll wait till such time. The way we file the IT returns, the way we file the GST returns. No, we wait for 20th. Not only we client also. So we'll file it in the last minute. Refund also, not an exception. They will come in the last minute, July. At that time, you have to be very careful with this guy. Relevant date. Relevant date, if you are, it is also given it as an explanation to refund provisions, section 54, which says, goods exported by sea or air, date on which ship or aircraft leaves India. This is one. It's very, very difficult. Just think from the practical perspective. I can just tell you the provision and then leave. Just tell me, is there any issue in this?
Leaving the port or leaving the international water?
Correct. India is clearly defined under GST, which says, India definition is there, which says the customs frontier is also included in GST. You know when the ship is left the port. How do you know that? 200 nautical miles and all, just crossed it. How do you know that? Huh? Whatever, the special economic, exclusive economic zone. How do you know that it just crossed? Very difficult, no. I got a practical, I was wondering how it has to be done. One guy who is in the shipping industry told me that there is a way it can be found, that there is a mechanism that where they will give some notification or something the moment they leave India. I don't know how it is happening, to be very honest. So don't try for all these things. Last minute, no. At least understand what is the shipping speed, ship for speed, and at least cross pandra. Don't wait for the last minute. Department will invoke this. Will say no. Ship has to cross. That means then only that date only. So it's very difficult. So let's understand that this is the provision, but there is a practical difficulty also involved in it. Goods are exported by land. Date on which such goods pass the frontier, that's okay, doesn't matter. The moment you cross the Kutch border, you know how it be, because those who have gone to Gujarat Kutch border and all, you would be knowing that it will be barren land actually, and because I have gone to one construction site, there the soldiers will be there, they will be standing, they will take verification for 1 hour, and the daily report, you won't believe, daily report is going to the President of India, who are all going inside and who are all coming outside, because it's a Pakistan border actually, our very close friend, no. So they are giving report to the President every day. I heard that the moment, the day on which I went, I heard that there was because if you don't come back within 7 o'clock, the prescribed time in that note pass, they will inquire with the respective person, the company in charge and all. If they say no, even we don't know where that fellow is, you know what they do? They will shoot. They have every right to shoot. It's happened the day on which I went, previous day there was one thing which happened. Because they don't know whether it is a Pakistani guy or the guy who went inside. So they will do that. So in such cases, we know very clearly when the goods are crossing the border. It's very clear. And there's a beautiful point I would like to make. It's not related to this e-way bill. If you're sending goods from here to Bangladesh, it's happened to one of our construction company where they were sending the goods from here to Bangladesh. Eppadi e-way bill pandrathu? What is the delivery address? What is the pin code which you will give? Bangladesh, not in India, you don't know what is a pin code. What is the time taken? It's a beautiful thing. Because e-way bill is valid only, so let me, since I asked you this, because there are a lot of practical issues which will come like this. So what we decided is, take the Kolkata border, the border in which it is crossing. We raised e-way bill only up to that. Because e-way bill is not valid in Bangladesh. So because it was going through road actually, you can send the goods by road. And deemed export of goods, deemed export, all of you would be knowing, supply to EOU, etc., etc. And export of service, date of receipt of payment in convertible foreign currency, very beautiful example. Export definition, for goods it says, the only point which says goods, tangible, that should cross the custom frontier. That should cross the custom frontier, that means that should leave India, that's the only condition. No need to reverse, no need to receive the consideration foreign currency. But whereas in case of supply of service, export of service, they clearly says you should receive the consideration convertible foreign currency. So they are saying, we will not consider this as an export of service unless you realize that export of consideration in foreign currency. That's what they said. You should consider that 2 years only after receiving the foreign convertible currency. Here also you have to go a little beyond GST. Under RBI rules, all of you would be knowing that within 9 months it has to be received, right? So all these conditions are there. So when you read GST, you cannot restrict yourself to GST. You have to go to income tax. Though you are not an expert, at least you should know the overall perspective of it. Otherwise what will happen? You will advise them. Oh, no problem, sir. The moment let the consideration come after 2 years, no problem. We can apply for a refund. The moment you give an advice, you are wrongly advising, because we will tell to the client also, no problem, you give it after 2 years. But there is an RBI rule which clearly says that 9 months you have to receive it. So you have to read all these laws in conjunction with, otherwise you will make a mistake. And export of service with advance and date of issue of invoice, where the payment. So you can go through this relevant date. My only humble request is go through this. It's a very simple thing. There is no complication. I already gave you the complicated areas like India and other things. Otherwise it is a very simple thing where you can, if you have any doubts, my number is already given. You can email me or WhatsApp me. WhatsApp would be preferable because I can quickly respond. So at least in a day I can respond. So you go through it. In case of any doubts, you can get back to me. And interest on delayed refund we already discussed. And refund of SCZ, this is another issue. See, when you supply to SCZ, section 16 of this IGST Act says you are eligible for refund. Okay, you can apply for a refund, right? If you have LUT, right? There was an AR ruling which has come, which says it should be for the authorized operations, which should be certified by the PO, that means proper officer of SCZ unit. That AR ruling says SCZ means it is implied that it is for authorized operation. But completely disagree with that, because Act clearly says it is applied to SEZ. It doesn't say any authorized operation, but they are interpreting saying that SEZ, it is implied that it is for authorized operation. Authorized operation, you have to give a letter, get a letter. Now, if refund application also, they are asking for this authorized operation. I don't know how they are interpreting, how they are getting all these things. First of all, one of our case where we applied for a refund, they said their SEZ supply. When we applied, you know that the number, the GST number, you cannot track GST number whether it is SCZ registration number or normal registration number unless you go to the portal. So when we apply for a refund, only when we go, then it is saying that no, it is not a zero rated supply, it is a regular registrant person. So you are not eligible for refund. They registered as a normal person, not registered as a SCZ registrant, but they represented themselves as a SCZ unit, and then refund now got blocked. This is a practical issue. Now the issue comes, how do we? So all these procedures are there. Endorsement from the PO is required for refund. So ITC refund is little, procedural issue. You have to be very careful. And deemed export, all this are rules. I'll not get into this. There is a way of calculation, how it has to be calculated, etc. And they will give an order, interest, everything. All these things will be there. I would like to make a point here. Actually. What is this? I would like to make a point here, because I said inverted duty structure, because that is, I have to spend 5 minutes on this. Inverted duty structure means, I said the rate, I will give you a couple of examples to confuse you. If the rate of output tax is lower than the rate of input tax. Now what happens is, in case of inverted duty structure, I'll give you one example. I purchased goods for 1000 rupees. I am selling it for 500 rupees. Rate is 18%. Because of this continued business practice, my accumulated credit got accumulated. Am I eligible for refund under section 54(3)? No? Yes. But credit is accumulating, na sir?
Duty structure should be less than what you are getting.
Correct. You have to be very, very careful. Rate, not amount. Rate should be higher than the rate. Amount illa. So even if it is for purchased for 1000, selling it for 500, because of that it is accumulating. You are not eligible for refund. Clear? It's only rate. Now let's put the second example. First product, this inverted duty structure is applicable. Second product, it is not applicable. Can I apply for a refund? See, application of refund is only a provisional, optional one, not compulsory. If you can set it off against your other businesses, the business definition, if you can fill it up, if you can set it, don't go for a refund. Assuming that even after using the ITC, it is getting accumulated because of one product, still you can go for a refund. Okay, so it is not defined that no, it should be based on the overall thing or product wise. No, you can, if you feel that there is a accumulation over a period of time, feel that it is got credit blocked, ITC is blocked, you can go for refund. Please note, notification number 5/2017 clearly gives a list of goods where you are not eligible for refund. Okay, you are not eligible for refund. 5/2017, you are not eligible for refund. That list of goods are there. Now, there is a notification number called 15/2017 where it clearly says it's a CGST rate notification. That also I have to tell. Otherwise, you will go to the normal notifications. 15/2017 says only one service where you are not eligible for refund. That is nothing but construction industry. Construction industry, you are not eligible. That notification you go through. That construction industry, not all construction industry, what happens is you will sell the goods, because generally the construction industry is already in distress. Now this notification specifically targeted the construction industry, and in such cases you are not eligible for accumulated input tax credit. So these are all the overall view of input tax credit, refund section 54. By and large I covered. So interest, what are all the, what are all the points, what are all the situations where you can apply for a refund. Inverted duty structure. Now what is inverted duty structure? Inverted duty structure is only for the rate difference, not amount, not based on amount difference. I also told about stock accumulated, the ITC accumulated in one particular branch, you are not eligible. So all these situations, practical examples I have given you. If you have any doubt, you can ask me now. I am stopping now. Yeah, please.
If the input is at different rates, like
Yeah.
suppose 5, 12, 28 like that, and output is suppose 18.
Perfect.
Whether we can go for the refund?
Perfect. See, if you feel that your input tax credit is accumulating because of this rate duty structure. See, his point is, let me make it very clear for you. My output is only 5%, but my input is need not be like 28. It can be even 28, 18, 12. His question is, can I apply for a refund in case there are different rate structures, right? That's what you are asking, right? Definitely you can apply, because if there is an accumulation over a period of time, you can very well go for it.
One of the input is less than the output.
Okay, I will take it this way. Now, he is complicating, so we'll also complicate. He is saying the rate is 12%. Some rates are less, some rates are more. 12%, some inputs are, my output is 12, my input is 5, my input is 18, my input is 28. Now, you can very well go for a refund if it is again accumulating. No problem, because you know that who is the problem maker here, not the 5% guy. It is only 28 and 18%. When you apply for a refund also, you have to give the proportion in RFD 0, 1A. I mean 1A, you have to give this matching concepts. So at that time you will be mentioning, because of these inputs, it is getting accumulated. So you can very well go for that. Any clarification, any queries? Can I move on to the next? Yeah, please sir.
There are some residency welfare association where they have got lot of input credit accumulated, but
okay.
They cannot have any source of outward billing.
Okay.
How you can go for it?
His point is, there are a lot of input tax credit which is lying with source resident welfare association. Let's answer together now. Let's see whether my presentation is effective. Can his residential association go for a refund of ITC?
No.
Papa, I am escaped. So I'm happy that you're answering. So there is no way that you can go for a refund except in these two cases. So I answered I know participants have answered your question. So let me move on to the next topic. That is composition scheme. Composition scheme. Composition scheme. Today's beauty is, they gave me only 3 sections. Section 15, Section 10, Section 54. They gave me topic, but when you precisely look at it, it's only 3 sections. See, to be very honest, all these sections, you should, refund itself is a 4 hours, 5 hours session. But we are just restricting it. But let me explain you provisions. You are very thorough. Whatever I explained, not more than nothing is there. Procedural wise, there will be something. When you apply it, I have given the circular number, notification number. You ensure that you are going through circular number, because circular sometimes overrides. So you just go through that. Sir, you had a doubt actually, yellow shirt. Can you just raise the doubt now? Yeah. Because sorry, because I'm taking question because he raised his doubt, but I could not answer that. Yeah, please, sir. Yeah. Very good question. Buy one, get one. So when you go to the retail shops, Reliance Trend you take. They will say, buy one, get one. It's a question related to valuation. A gentleman raised. He was keeping his bag in his hand. So I thought, he will be leaving. So it's my duty to answer his question. So buy one, get one discount. You will go to the Reliance Trend. They will say, you buy one shirt, I'll give you one more shirt. But if you see the bill, they would have split it into 2. Effectively, both are there. Okay. Now, there are some arguments saying that will be considered as a gift. So, section 17.5 will come into the picture. So, because of 17.5, you have to reverse. It's a blocked credit, you have to reverse. But gift, anybody will give Reliance. Do you think Reliance will give you gift? Huh? Gift is what? I am giving something without any consideration, not attached to any supply. I am just giving you. Reliance will not give you gift, no. Okay, I am also going in front of Reliance, and Reliance will come, I have some gift for you. Okay, fine. They won't. So it is not, in my opinion, it will not fall into that. My opinion is, if you look at the bill also, sometime I have seen the bill actually, because all this discount, I practically went to the shop and then discussed. Fab India I discussed, and then some retail shop also I discussed in the point actually, how they are doing it. In Fab India and all, they are giving multiple grains with one particular box. I was looking at surprisingly how they are valuing it, taxing it, because they are all doing correctly only. So here, to answer your question, it is a perfectly a good example for, because the value is included, so it's a transaction value only. Yeah. It is Sriram's topic, but let me, but sorry, I'll answer off the podium probably, because CSR, his point is, you didn't ask Sriram yesterday. Okay. CSR ITC, I will take it up later. Those who are having doubts, you can ask me. CSR, it's always a debatable one, because CSR is input tax credit, whether CSR activities it's applicable or not was this gentleman's question. See, the section 16 says, if it is used or intended to be used for the furtherance of business or furtherance of business, you are eligible. Now, CSR, is it for the furtherance of business or not? That was the question. There is a two arguments, two school of thought still debating. One says, no, it is as per the notification. So if I don't do this, I will not be able to carry on my business. First pointer. Second pointer, they are saying, no, that has nothing to do with your business. It's a social responsibility, so you are not eligible. So these are all the two arguments. Now, let me just tell you one more example. Just keep it in mind, I am not answering, because under the Income Tax Act, there was a funny question by the Kerala High Court, heard by the Kerala High Court. One professional, engineer or someone, who claimed heart operation expenses, saying that without doing this heart operation, I will not be able to do my business. Correct? It's for incurred for my business or profession, otherwise I will not be able to do the business. He claimed it. High Court said, no, you cannot. If you go literally by word, yes. I answered your question, yes. But High Court said no. So this is something which is, that's why I am also not commenting on it. Because if you go literally by act, yes. If you read these High Court judgments, Supreme Court judgments and all, sometimes they go little beyond. I'll add one more small point which is related to ITC only. There are a lot of doubts with respect to availability of input tax credit in terms of vehicles, repairs and maintenance. Wherever I go, first question, sir, can I take input tax credit on insurance? And insurance itself is a big debatable one. That is different, because what is a receipt of service itself is a debatable one. Second, general insurance repairs and all. So I used to say, the confusion comes mainly because section 17, in section 17.5, they used the word in connection with. So the word which they used, in respect of. In respect of means only. Oxford Dictionary is also defining only. But why there are two views from professional side? It's mainly because in some Supreme Court judgments, when there is a fraud happens, Supreme Court will go little beyond. Will say in respect of should be read in connection with. In respect of means only in respect of laptop means only laptop. In connection with laptop means everything related to laptop. Everything, the servicing of laptop, everything will fall in. So in fraud cases, Supreme Court has gone little beyond and to trap. The moment you Supreme Court also using brain, no. So they will go little beyond. So some professionals are using that particular Supreme Court judgment, saying that is why in respect of you should read it as in connection with. But in my humble view, we have not done any fraud. Correct? We have not done any fraud. It is a law which has given. So you are eligible in my view. So these are a couple of things with respect to. So let's go to composition levy. Let me just finish off this. I have 15-20 minutes to finish off. I'll quickly finish off. Composition levy is something which is, in my view, initially it was not practically possible. It was not practically possible. Because of that, they extended generally for composition levy, if you want to register You have to register in the beginning of the financial year. You cannot do in the middle of the financial year. But for 17, 18 around, they said up to beginning of the any of the following month you can do. So 1st of March 2018 you could have done this. But not later than. Now you have to do it on the beginning of the financial year. I have a lot of issues with respect to this. Assuming that I opted for composition levy. Subsequently my turnover crossed to 1.5 crores, it's crossed. First question. Now the annual returns have been released. Whether I have to file 9 or 9A. First question. No answer to it. Okay. No answer to it. That's the first problem. Second problem. Composition, when I am availing the composition, I have to do a lot of work with respect to reversal of input tax credit which I availed, all those things I have to do it. So a lot of practical issues were there. Already you are targeting small people. You cannot expect them to keep a stock record properly. That is why they are opting for this. Now, third problem was, they said even if there is an element of service, you are not eligible. If there is an element of service in your supply, you are not eligible. Don't you think that the businessman will get some sort of interest? Interest is a service, exempted service by way of notification 12/2017. So the moment you get an interest, he is out of that scheme. But let me just clarify one more thin line. Everybody will get SB interest, right? Savings bank interest. The moment you put fund, even if you get 1 rupee, at least minimum balance is 1000, you will get 1 rupee at least. You are not eligible. But there is a point where you have to draw a line. If it is out of your personal thing, it's not related to business, then that is not a supply at all. But if it is, so it was a little debatable one, where how do you differentiate that interest is part of your business or not? So these are all the issues. We generally encourage parties to not go for composition scheme in the initial stage because it was not settled. Now little bit settled. I will give you an example of, now another issue with respect to this is, it is not applicable for intra-state supply. Say for example, if I am supplying from here to Bangalore, you are not eligible. Intra-state supply, you are not eligible. From here, interstate, thanks for correcting. Interstate supply, you are not eligible. See for example, I am sitting here in Tambaram, my office is in Tambaram, say for example, some office where they are supplying to Tambaram SZZ. It's an interstate supply, he is not eligible. So these were all the issues which come across, and then found that it was little impracticable for the people to do composition scheme. Now, I'll give another example. Composition scheme, when the notification initial came for traders and everybody, they said certain percentage on turnover in the state. Turnover in the state includes exempted turnover also. Typically, assume that I am a medical shop. I will buy goods, medicines. I will buy both exempted medicine, taxable medicine also. But Act says when I am exempt, when I am selling composition scheme, I have to charge certain percentage on the entire value, even on exempted. It was little injustice. Subsequently, they came and amended, saying that no, you don't pay on entire turnover in the tax, turnover in the state, you pay only on the taxable turnover in the state. Second problem comes. Taxable turnover is not defined. Taxable turnover in the state is not defined in GST. But we will go with, okay, turnover in the state, okay, taxable turnover only, exempted, remove money, that we have to pay. That is the interpretation. Now, turnover in the state, see, that is why I highlighted this point. You can see turnover in the state means it is aggregate value of all taxable and exempt supplies. So do you agree now? I am not telling this is there in the act, which says exempt supplies also you have to pay tax. Because if you look at this, it says rate of tax, manufacturer and other than manufacturer of such goods as may be notified, it's 1% on the turnover in the state. Whether you do taxable or exempted, it is 1% on that. It is from 1st July to 31st December 2017. 1st January to 2018, the same thing, that reduced it with effect from 23rd January. There was a notification called 3/2018 based on the representation from manufacturing industry. They said no, you charge 0.5. please note 0.5 under CGST Act, so it will be SGST also will come, so it will be effectively 1%. You understand? This is only as per CGST Act 0.5, so as per SGST Act the corresponding value will come, so it will be 1%. Supplier making referred in Schedule 2(6)(b) and all, that is nothing but restaurant services and all, no? Dhaba, restaurant services and all, food. They said 2.5% of the turnover in state. And on 3rd 2018 the same notification said 2.5% in the turnover in the state. Is there any difference?
Union territory.
First they drafted, they missed out union territory. Subsequently they included the union territory. Now, this is very, very important, where other suppliers, where traders and all, where they said 0.5% of the turnover in the state, that is, there is no problem, but they changed it into taxable supplies in goods in state or taxable goods, not on exempted goods. These are the rates. So we covered the rate also. Now let's move on to the other, important things. So here, the composition levy, they are saying your turnover should not be more than 1 crore. Initially they said 1 crore. Subsequently they said 1.5 crores. That is because it's an act. If there is any change required, it should be based on amendment to the act, not by way of notification. So there was a first amendment, there was an amendment to the CGST Act itself, which was notified in the, it came on 29th August 2018, where they made this change. That is why I highlighted the red color. They made some small changes, and this is also applicable. Now, another problem which was applicable was composition levy. I am not able to charge GST. I am not eligible for input tax credit. Third point is I am liable for reverse charge mechanism under 9.3 and 9.4. Complete damage. When I am purchasing, I have to do reverse charge mechanism, I have to pay taxes. Okay, I am not eligible for ITC. I am not eligible for refund also, because 54(3) is clearly saying no, you are not eligible. And because 54, it's not at all, ITC is not eligible, so it will not come to your credit ledger at all. You are not eligible at all. So because of all this issue only, it was not a popular topic actually. So you have to pay tax also at the prescribed rate. You are not supposed to charge GST. Your supply should be inclusive of that. Say for example, you are making 1 crore turnover. Say 1%, 1% on 1 crore on a monthly. Say for example, if it is monthly basis, you are doing a turnover of say 10 lakhs. Then you pay 1% on that 10 lakhs, whether it is exempted or whatever. We discussed all this, and that 1% you pay, that is sufficient. You cannot charge GST. That is one point. Second, when you do this composition scheme, you have to mention that it is under the invoices under composition scheme, we will not charge GST, all these procedures are there. The beautiful amendment has come in the Amendment Act. The Act amendment I told you, 29 that came. They said, they understood this issue, because see for example, I am selling some goods, just understand sir, from here I am selling the goods, I am in Chennai, I am selling the goods to Salem. Don't you think that I will charge freight charges? The moment I charge freight charges, I was exempted. Then I will not be eligible for compensation scheme. I was providing supply of service. Now, they understood this issue. They said, no, you can do supply of service, provided it is less than 10% of your turnover in the state or union territory in the preceding financial year, or 5 lakhs, whichever is higher. So, you can go up to 5 lakhs or 10% of your turnover in the state for the preceding financial year. That was a big relief for this composition scheme. Otherwise, it is not at all possible. You are sending from your goods here to Salem. You will be charging freight charges. You will be having some sort. See, for example, you are selling some laptop. You will do some installation services. All these were part of the small service providers. So that was a problem. You look at the small stationery shops where they are targeting all these composition schemes and all. They are also providing a lot of exempted supplies, right? Most of this rice, everything is exempted for them. But the government says, no, you pay tax on the entire amount. They are also out of pocket then. So that is why it was not too popular. And there are some ineligible product actually. Because government said, some product manufacturing I can notify and you are not eligible. Some products, I'll repeat, some products I have the right to notify. See, you look at that section 2E. He is not manufacturing of such goods as may be notified. There was a notification which has come. 8/2017. In June itself it has come for 3 products. Very easy, no? I put the photos because the eyes will speak better than the words, right? So you can see ice cream. Don't restrict yourself to ice cream. I know that it's a lunch time, so move on to the next one also, though you are not taking it. Pan masala, tobacco. So all these 3 products, if you are manufacturing, you are not eligible for composition scheme under section 10. Clear? Now, yeah. Now the danger. Now let's take the danger point view. The moment you cross 1.5 crores, first instance, second instance, the moment you are not eligible because you, without knowingly, you did some provision of service. Like freight charge, because they are not too experts, right? Assuming that a composition levy guy, he supplied some goods, also charged freight charges, and he doesn't know that he violated the provisions. The moment he charged service, I am talking about financial year 17-18, leaving this amendment, the moment he charged service, he violated the provision, he will go back to section 9, which is very, very dangerous. Why? You don't know you violated the provision. You are continued to not to charge GST, whereas department will come tomorrow and say, boss, you violated with effect from July itself. This is your total supply, pay tax under section 9. The moment you violate 10, because you are giving a priority, the moment you violate one condition, you will fall back to 9. Very simple, section 9. Section 9 says applicable rate, 18% or 28%, whatever it may be. It was very, very dangerous. So when you do audit or something, see whether that guy has violated. At least help him out with some sort of solution. You can say composite supply. Yeah, I'm just telling composite supply, where it will take the shoes of, it will step into the shoes of goods or something like that. You just see whether how you can structure the transaction to help these kind of small traders. Now, so you have to pay tax. So there are forms for registration. See, it's not a registration as such. It's only an intimation to the department. You will do the registration normally. Okay, registration REG 1, right, for the normal registration. If you look at the part B, it is an intimation to the government. I'm telling government that government, register me, but you give me, I'm intimating you that I'll be paying under section 10, not under 9. Now, so the moment you intimate him, you have to file form ITC 03 also for the reversal of input tax credit. Now, what happens is, when you do this registration and when you intimate to the government saying that I am doing it under composition levy, my question is, I have branches in Chennai and I have branch in Bangalore, I have branch in Telangana or Andhra Pradesh or Mumbai. Now, if I opt for composition levy in Chennai, then that intimation, you cannot opt a different state. Chennai under 10, Bangalore under 9, the payment normal, regular registered, composition no. If you register one entity under one PAN in India, then that is applicable across the state. You understood? Now, the 1.5 crores turnover, they are talking about aggregate turnover. They are not talking about the turnover in the state. Only tax rate, tax payable only they are saying turnover in the state. But for the eligibility purpose, they are saying the word aggregate turnover, which is including all turnover under a single PAN. Okay. Now the other issues are, so the moment you cross, now the option is going to come, maybe in February you have to give the intimation, February or March you have to give an intimation, then only you can opt for composition scheme with effect from 1st April 2019. Now you cannot do it. If you go back home, to the office and then try, no, you cannot try, because in the middle of the year you cannot do it. And first, another point which they said is, when you are filing ITC 03, you are not eligible for transitional credit. First of all, composition scheme is not eligible for credit. Now, where is the concept of tran 1 credit eligibility? So these are all the points. Condition and restrictions, and CTP and NRTP, that is casual taxable person and non-resident taxable person, are not eligible for composition levy. And 9394 is applicable, I said. Then this manufacturing as goods notified, we already discussed that tobacco and then pan masala and all. Composition, he shall mention the word composition taxable person not eligible to collect tax on supplies. You have to mention it in your invoice. Like that, you have to mention, he shall also mention the word composition taxable person in your invoice. Very, very important. And once you give an intimation to the department, you don't have to do it on a every year basis. Once you give the intimation in February, say for example in March you are going to give, you don't have to do it every year. So once you break it, once you violate it, then automatically 9 will come. So you don't have to give this intimation on a yearly basis. And so then there are show cause notices, everything will be sending and all those things. So these are all the points with respect to composition levy. Anybody has any doubt? Yeah. Anybody has any doubt? Complete silence. Yeah, please sir.
I want to ask you about this hotel, restaurants.
Yeah.
Now there is a standalone restaurant in a hotel.
Okay.
Which is running as a restaurant. But they also provide bank pay facilities if any wedding functions happen in the hotel.
Okay.
Plus they do outdoor catering also.
Okay.
So will it be entitled for this composition? Will it come out of service?
No, your point is, let me just explain you, let me just understand this, correct me if I am wrong, the facts are wrong. He's saying in Chennai, if you look at it, if you take any hotel for that matter, you will have restaurant services. Behind that there will be party hall, that's what you are saying, no sir?
I'm telling that the hotel has let out a space to a restaurant to go and sit. He's an independent person. He's not a part of the hotel.
Okay.
He runs a restaurant inside the hotel.
Okay.
But he also, because of his proximity, he gets the bank pay contracts also for the weddings happening in the hotel.
Okay.
So he caters to the bank pays also.
Okay.
And
Okay.
he also has outdoor catering.
Okay. No. I understood. Let me just.
He's only running restaurant. He's not part of the hotel.
No, is it something like this, sir? Like you are doing. Which is giving me one more point which I wanted to tell you. Let me just clarify this. He is doing supply of service under point number 2, correct? And he is also doing some other supply which is not satisfying this condition. Is that your question, sir?
He's running a restaurant, regular restaurant.
Correct.
He's paying rent to the hotel because he's occupying the space.
Obviously, yeah, correct.
But because he's in the hotel, any wedding parties happening in the hotel, they take catering from him.
Okay.
So he supplies in the banquet hall in the hotel also.
Okay.
He sends his people there, they supply the food and all that.
Okay.
Or if there is any functions happening outside also, he does that simultaneously.
Okay.
So whether he will be entitled to go for a compensation scheme.
Oh, you mean that restaurant service itself is doing multiple services?
Yeah.
Outdoor catering, everything. That's what your question is, no? Okay, understood. See sir, it is very clear. Let me just come back to this point. It says supplier making supplies referred to schedule number 2(6)(b). If you fit into it, you are eligible. Let me just take, if you don't mind, can I take this question? Okay. Because I'll just read out that this thing, so you will be able to appreciate what exactly the department is saying. Yeah, Schedule 6B is read. Yeah, Schedule 6B. 1 minute, Lakshman. Let me just take this question.
Providing catering service will not come under works contract.
We will come to this. First, we will read and we will answer it together. What is the problem? Yeah. It says supply by way of or as a part of any service or in any other manner whatsoever of goods being food or any other article for human consumption or any drink other than alcoholic liquor. We agree? When I say alcoholic liquor, some people are smiling. Okay. Liquor where such supply of service is for cash, deferred payment or any other valuable consumption. Doesn't matter. Our subject matter, your point comes here, sir. Supply by way of or part of any service in any other manner. So you are eligible in any other manner whatsoever of goods being food. Are you supplying catering predominantly? They are not except looking for the service. They are looking for the food. Correct? It's a composite supply. Very clear. Somebody asked me works contract. No. That's a good point. See, the point is works contract definition 2119 clearly says goods and service supplied together. But let me tell you, sir, whoever is asked, it's a brilliant question. But Schedule 2, 6b mainly comes not for composition definition. It comes and say it is a composite supply. It's a composite supply, it's not a works contract. That is the intention of Schedule 2, 6 and b. Because that schedule clearly says what is considered to be service and what is considered to be goods and all. So here they are saying it is a composite supply. It's a works contract. It looks like a works contract, but because of this schedule, it is part of it. So did I answer your questions? Any other questions? That's why it's not works. Yeah, please, sir.
In composition scheme, if we process the limit,
yeah,
1.5 crores or so,
correct.
The regular section 9 will attract retrospective effect or from the date when he crosses
the day on which he crosses, sir. It's a very good question. He is saying, I opted for composition levy. I work for, I paid tax based on composition levy for 6 months. Say for example on December 1st, my turnover crossed 1 crore. At that time it was 1 crore. It crossed 1 crore. Am I liable to pay tax under 9 with effect from 1st July or from 1st December? It's 1st December, sir. It's the option got lapsed. There are many practical issues. I said no. Annual return, how to file, no clarification. Because 2 annual return online, whether it is active or not, we don't know. Second thing is composition scheme, less number of people have opted for it. Any other queries? I have to say. No ITC eligible for composition levy, sir. Correct. That's a good point. That means if you convert yourself from, that means in your case, the moment you convert from normal composition levy to normal levy, you are eligible for input tax credit lying in your stock. You have to file ITC 03, that's we already discussed ITC 03 and avail it, that's all. So you can avail the ITC for, you can avail the ITC which is lying in your stock, which you can avail, very well avail, sir. Because you move to normal tax, 9, so you are eligible. Any other queries on valuation, on refund, on composition? If you have any queries, you can write away ask, please, sir. I'll take 5 minutes for answering your queries. Please, one humble request. Please don't leave this hall without clarifying your doubts. Otherwise, it'll be like I will be unsatisfied first. If at all you are not able to do it because of your hunger, you can WhatsApp me or mail me to this. I prefer WhatsApp. You can WhatsApp me to the extent possible. Sometime if I don't reply, please remind me. And you can reply to this number and email ID. I requested for the email ID's collection actually, so that I can circulate the. So everything has come, sir. All 200, 300 participants' email IDs are there. If anybody is missing, Lakshman, please collect it so that we can circulate the material to them. Any other doubts on valuation, composition, and refund? Please.
Composition.
Yeah, please, sir.
In catering, finally they are giving the pan masala by the end of the day. So when the officer comes and sees out of the input purchases, some is there.
Yeah.
So will he not be cornered?
No, it will not be, sir, because pan masala notification comes for the manufacturing. If you are going for manufacturing of pan masala, but supply of pan masala, no problem. Under trading.
It's also manufactured in the premises.
Then it will be a problem, sir. Then it will be a problem.
Then
it will be a problem. Sir's question is entirely different. See, these are the beautiful brains which we are having it in Chennai. We'll go out of the box. You understand what is this question? okay, pan masala manufacturing different, you leave it. My question is, pan masala can be manufactured there itself in the restaurant. I am being a restaurant, I am supplying the food. I will also manufacture pan masala. Now, am I eligible for composition scheme?
Go for definition of manufacturing of pan masala.
This is what, that's a good question. See, pan masala not eligible, so you cannot pay composition scheme. Very clear. Okay. So under restaurant services, you will be doing it. So manufacturing is a different activity. Your hotel business is entirely different activity. On pan masala, you charge GST, sir. That is the only solution available. Second point, that's a good point which is throwing me, because now my question is, I have two units. One is trading, one is manufacturing. Can I go for a composition scheme?
No. Your turnover is less than.
Okay. Assuming that my turnover is less than 1.5 crores as on date, can I go for composition scheme? Is it restricted to only one particular, or I can go for multiple? I mean manufacturing also I can go for, assuming that I have a restaurant, I have a manufacturing, I have a trading, all three. Can I go for a refund? All put together turnover is less than 1.5 crores.
Single pan will not give you multiple registration.
Single pan?
Will not give multiple registration of composition and this thing separately.
No, it's only one registration, sir. No, it's only.
Aggregate turnover is
composition.
Sorry, sir.
You are into manufacturing.
You are eligible, sir, for composition. You are eligible. See, look at this definition. See here, manufacture other than manufacture. We are not discussing pan masala. We came out of it. Now we are talking about normal manufacturing, normal trading, and normal thing. See, as on date, there is no restriction. There is no restriction. Now, sir, portal sometimes decides whether the registration can be done all three together. We have to see. Sometimes that decides. But as on date, as per act, you can go for it, all three, no problem, provided your turnover is, you have to maintain a separate books of accounts, everything. Otherwise, there is no restriction. Any other doubts? I'll stop because it's 1:28. So I have to stop for the day and we'll break for lunch. And thank you so much. Thank you so much for being with me. Thank you. Thank you.
On behalf of everybody, I thank the speaker for a wonderful session. We can all break for lunch.
Good afternoon, members. Welcome back to the post-lunch session on registration under GST. Records are prescribed under GST law. The speaker for this session, Shankara Narayanan. He is a chartered accountant and cost and management accountant based out of Chennai. Graduated from RK Vivekananda College in the year 2000. He started his career with the TVS Group and spent last 6 years of his employment in financial services industry. He has served 10 years in the industry, including Standard Chartered Group in various capacities in finance domain. He was the Assistant Vice President UK Retail Banking when he changed course, venturing into full-time practice on indirect taxation. He is a partner in a leading firm on advisory, consulting and litigation. He is a visiting faculty for indirect taxation in the ICAI and ICSI and a regular speaker on indirect taxation in various forums. He has recently co-authored the book Gain Smartly Through SENVAT Credit Rules. This book is an attempt to guide the junior executives about the benefits and compliance aspects of SENVAT Credit Rules. Over to the speaker.
Good afternoon.
Very good afternoon.
I was here thinking that it will be lunch, but by the time I entered, I think the session was still on. So I know the reason why most of the chairs are yet to be taken up. As it is in GST, so whenever something happens, it happens even before we expect that it will happen. And then we'll all be made to chase what has happened. The same thing is happening now also. Registration and accounts and records to be maintained under GST. The two aspects that we are going to discuss in about 1.5 hours time from now. I always crib to Mr. TVS, who is the person who organizes this event. I keep on telling him, sir, you give me the driest subject and you give me exactly after lunch. Any post-lunch session is a challenge because everyone will be still in the trance of the curd rice that they had. So I'll have to bring them back to GST and you give me accounts and records to be maintained. People will be least interested. But he said, no, you do it. So I have been doing it in all the sessions, only this session. What I will try to do is, I will make it as a mutual challenge. So for me the challenge is not to let you sleep. For you the challenge will be not to sleep. Try interacting, so that way, that is one benefit that both of us can derive. The first point that I wanted to take was registration. The second one was accounts and records. But suddenly I think accounts and records has become very important. Especially those chartered accountants who are sitting here or people who are going to give the information to the chartered accountants for signing a very critical document called GSTR 9C. The GSTR 9C, so far none of us knew what document, what record has to be maintained. But they have very clearly put that I have verified all the documents and records maintained by the assessee. Then only the GST auditor is supposed to sign. If the GST auditor is not a person who is the statutory auditor, that is, statutory auditor is somebody, I am a GST auditor, then I am supposed to bring him also into the problem. I will say books of accounts has been done by him. So I have to tell books of accounts is verified by this gentleman, but I have verified only GST related records. Still the problem is GST related records is your problem. So this has been clearly, the line has been drawn. So we should be aware, at least by now, that what records we are supposed to maintain, let alone whether it is being maintained or not. At least we should know what is supposed to be maintained, then we will see whether that can be recreated and accordingly the certifications can be given. So with that in perspective, I think I'll reserve that for the second part of my session. The first part of the session, I'll proceed with registration, which would be of some importance. The reason being, most of you would be already a registered entity and continuing the business. So why would registration matter to me? Yes, amendments will matter to you and cancellations can also matter to you. And in some of the cases, registrations have been taken for the purpose of stock transfer, for the purpose of giving it to your customer. So new registrations have come across and how to go about those registrations. And there are many problems. For example, especially in automobile sector, my customer is in Pune. So what he says is, you dispatch the goods today, but whenever I ask, the goods should be available. So these people earlier in the VAT period had a registration in that state, so they used to send it as stock transfer and from there do a VAT billing. This was going on like this. Moment GST stepped in, people said, no, you can charge IGST from here. Why do you want to have a warehouse there? But the problem was e-way bill. Once e-way bill came into the picture, I was able to send the goods from here, but the goods had a lead time or the e-way bill validity time of only 12 days. But he is going to invert my material after 40 days. When I am moving it again from Pune, one end of Pune to the manufacturer's place, am I supposed to raise an e-way bill? If the answer is yes, then where am I storing the goods? Is that place registered? Should I take a registration? If I am taking a registration, all the compliances of GST will also fall there. So this is the challenge which was there, and I think 16th of November, very recently, e-way bill site has been, in the name of enhancement, they have done something. That is, one invoice, one e-way bill only. You cannot raise another e-way bill for the same invoice number. How to do it, we all know. We put a dash, we put a A, all that we can do, but still it is not a valid activity to be done. So one invoice, one e-way bill makes it necessary for those people who had surrendered their registration in the place where their customer was, just for the sake of storing it and supplying, post GST are now forced to take registration again for the purpose of complying with customers' requirements. So this is the new challenge that has come in registration. Barring that, how that registration process has happened in GST is, all the assessees who had GST number or the S2I, sales tax TINs or service tax number or central excise number were automatically migrated into GST. We used to call it as, when in some places you will see a board, no, trespassers will be prosecuted. Last May, June, July and all, If you trespass into GST office, you will be migrated. You will not be prosecuted. Number come, migrate. Sir, I came to surrender my number. No, you go to GST and there you surrender. So all these things happened. Last September, they allowed window for people to surrender the registration also if they felt it is not required. Many people did that surrender also. So this registration could have happened in one way where you were a continuing business. You would have been migrated into GST. The second way in which registration can happen is registration. That is, I go and apply and get a registration. So why should I go and apply and get a registration? Two parts to that question. One, I'll go and apply for registration. One reason being, I become mandatorily liable to get registered. This mandatory requirement for getting registered is from two sections. Section 22 as well as section 24. Section 22 talks about the turnover limit. So section 22 says if your aggregate turnover is going to be more than 20 lakhs in a financial year, you must get registered under GST. If my aggregate turnover, so I am not using the word turnover, they are using the word aggregate turnover. What does this aggregate turnover have an impact? This aggregate turnover has a huge impact because aggregate turnover includes exempted turnover, not taxable turnover, exports, plus taxable turnover, of course. So my taxable turnover, exempted, nil rated, not taxable. Everything together is my aggregate turnover, which means anybody would exceed 20 lakhs very easily. Yes, which was the intention and which is what has happened. Many people had to register because their aggregate turnover has exceeded 20. Then where is the benefit coming through? Okay, before going into that, was it 20 lakhs across India? No. The 20 lakhs limit changed to 10 lakhs limit in case of 10 states. In India, we have 11 special category states, the 7 sisters of Northeast. Assam, Arunachal, Manipur, Meghalaya, Mizoram, Nagaland, Tripura, and then Sikkim. And then we had Himachal, Uttarakhand, Jammu and Kashmir. Out of the 11 special category states, Jammu and Kashmir said, I will maintain 20 lakhs as the limit for registration in my state. So the remaining 10 states, out of this 11 special category states, the limit for registration is 10 lakhs. So if I am having a business in Mizoram, if I cross 10 lakhs itself, I am supposed to get registered. It is not like 20 lakhs as it is in the case of a business which is there established in Chennai. This is first part. So 20 or 10, we'll have to see appropriately depending upon the state where they are. The second part of the equation, which is more important before we proceed further, is in none of the earlier acts, be it service tax, be it central excise, even be it VAT, they never said you pay tax, even you don't cross threshold. They said, okay, when you want to get registration, get registered. But for example, in case of service tax, you get registered, you are not exceeding 10 lakhs turnover, you don't have to pay service tax, just file nil return. But that is not the case in GST. In GST, who is a taxable person? The definition says taxable person means a registered person. In other words, we can keep it taxable person is equal to registered person. Other way around is also true. Registered person is equal to taxable person. So what does that make me? If I go and get registered voluntarily without even my turnover exceeding 20 lakhs, the day you get registered, you are liable to pay GST. So there is no question of, sir, I am below 20 lakhs, I will get registered, I will file nil returns till I cross 20 lakhs, not possible. In GST you get registered, the day you get registered, you become liable. These people whose turnover exceeds 20, they must get registered. They are a category of not voluntary registration, they are mandatory registration. For them, what is the time limit that is given? The day you cross 20 lakhs, within 30 days of you becoming liable to get registered, you must get registered. So the 30-day limit has to be calculated from the day they exceeded the 20 lakh limit. But the not so good part is, for example, September 25th, I exceeded 20 lakhs. I am applying for registration on 13th of October, which is well within 30 days. They grant me a registration by let's say 17th of October. The registration certificate will say the date of registration is 17th October, effective date of registration is 25th September. So that is where the catch is. If my effective date of registration is 25th September, any transaction that I would have done from 25th September till 17th of October, I am liable to pay GST. So the people who are getting in for GST after becoming liable will have to face this problem. Sir, how will I issue an invoice during a period where I have not got a registration collecting GST? I could not have issued an invoice. For that only, they have put a special section, section 31 subsection 3 called revised invoice. So what you need to do is, you can do your transactions without GST number, but on October 17th, when you know that you are becoming a registered person, for all those people with whom you have transacted from 25th September till October 17th, give them a revised invoice. That is the only situation where you can give a revised invoice. This revised invoice word is not to be used for normal registered people. It is to be used only by a person who is getting registered for the first time after becoming liable within 30 days of liable to get registration. So that person will have to issue and he is liable to pay GST. In all probability, let's say it's a provision store. From 25th till 17th, I would have sold to many people. I cannot go back and ask them next time when they come to my shop, sir, you know, I have got revised invoice. You'll have to pay GST to me. That fellow will never even walk to my shop next time. Which means what? This provision will actually make you pay tax from your pocket. But there is one small leeway in this, which comes from section 18. Section 18 says that on 25th September you became liable and you applied for registration within 30 days. Yes, I have done that. Then do one thing. 24th of September evening, you would have had a closing stock. On that closing stock, you please take input tax credit of whatever GST that was paid. So now what happens? They are trying to balance. I am asking you to pay, but I am not asking you to pay without giving you input tax credit. So what I would have sold from 25th of September till October 17th, had it been from my stock on 24th of September evening, I would have been able to take ITC. Only that ITC I would have utilized for making the tax payment. So this is where registration will cut across input tax credit also. So I become liable to get registered, I get registered, then this registration is retrospective. That retrospective registration comes with a pain of me paying the tax, but it also comes with a medicine which says that you can avail ITC on your closing stock.
But not for the transition period, so that is 25th September to 11th.
During the period if you had received any invoices, correct? If you had received any invoices, you can absolutely avail in the next return. Because during this period, whatever invoices is given, till next year September you have time limit to avail ITC. So the new purchases during September 25th to October 17th will not get hampered. My opening is also not getting hampered. Only place you will feel that some injustice is done to me is input services. Input services received. Let's say you have put a huge advertising hoarding on 23rd only. He has given the bill. On the GST is there. That service invoice credit you cannot take. After becoming liable to GST, only the goods can be taken. The second unfortunate thing is capital goods. If you are having a new machinery procured on say 1st September, that new machinery would have come with GST. But since you don't have a registration, you wouldn't have taken that ITC. On 25th September, you become liable to GST, you are going to pay. Still, you cannot avail ITC on capital goods. You are still eligible to take only on inputs which are lying in your stock. So this is the provision of a voluntary, a non-voluntary registration, which is a mandatory registration when you cross 20 lakhs, when you jump into GST.
So during the 25th to 17th, whatever purchases I made, how I will take input credit? Because
you will get invoice.
My number will not be there in
you will get invoice.
I'll have invoice.
What you need to do is you will have to intimate him your GST number.
Yes.
You intimate the GST number, he will have to do amendment to his invoices if he has already uploaded. Assuming he has uploaded as B2C, he can do an amendment of B2B. You will be able to take ITC in GSTR1. So that is the leeway that is given to us.
How much time limit for this amendments?
Amendment, any invoice uploaded for a financial year before September of the following financial year. So the 30th September 2018 would have been the cutoff date for doing amendments of 2017-18 invoices. That is the maximum time, which is what the government extended by a month, and they said GSTR1 can be done up to 31st October. Why? Because last year, September's return is the last return that is going to allow you to make amendments to the previous year invoices, which this year being the first year, they gave 1 month extra. But next year onwards, I don't think this will happen. It will still be October 11th. There it will stop.
So to the extent of output liability only, we have to take input on opening stock.
Not necessary. Whatever is in the opening stock, you can take input tax credit completely. What you can do is utilize it for paying your output tax liability. It is not to the extent of sale. Whatever was lying in stock, it could be lying as raw material itself, or it could be lying as semi-finished, or it could be lying as FG. Whichever is lying, you can take ITC. Full ITC is eligible. Utilization is based upon your liability. So this is for that mandatory registration parties. One. Voluntary, yeah. Exactly. You will not be asked to do both. But what will happen is, you will be asked to pay a penalty under section 122. When you are liable to get registered, you didn't apply for registration within 30 days, a penalty of 10,000 rupees or tax sought to be evaded, whichever is higher has to be paid by you. So that will come along with interest also. So if you are, which is why most of the people what they do is, whether it is there or not, if I know that I am going to exceed that, it is better to get registered and start complaining. And it has become like a checklist. Whenever you go and incorporate a company, get GST registration. Even bankers, you go and ask for bank's account opening, they say you get registered at the GST. I have tried explaining to them, sir, he is not even going to exceed 20 lakhs. This fellow is establishing a dance school. He is not going to exceed, he is not even expecting 20 lakhs in next 3 years. He is going to give coaching to people for dancing, and he is expecting some 3 lakhs, 4 lakhs in the first year, maybe God willing he will get another 6 or 7 in the next year. Where is the question of? He said nothing sir, in our checklist it is there. We will give current account only if GST number is there. So that kind of thing is forcefully getting this person registered. Now by getting forcefully registered, this fellow is liable to pay GST on the 3 lakhs and 4 lakhs. Even on that he is supposed to pay GST because bank said this, I have to get registered. So the best way that we have been suggesting is get registered because the bank is saying give it to them, bring up the registration, bring up the current account, surrender the registration. In GST that has become relatively simple. For surrendering the registration, we can do it. Anyway, we know the options how to get around things. We'll reserve it for later. Okay. Then we'll proceed to the next part. Yes.
The input on opening stock, Tran 1 is required?
No, sir. That Tran 1 is only for the pre-GST period to GST period.
How will you
ITC 01. ITC 01. There are 4 forms relating to ITC. ITC 01, 02, 03 and 04. You'll have to find that. Sorry, sir? You can take ITC, I'll tell you, VAT period, I'm not sure. That ITC can be taken only if the invoice is within 1 year. The purchase invoice, which will substantiate that the tax has been paid, that can be taken only if it is within 1 year. That limit is there. That has to be taken into consideration. And capital goods, anyway, it is not available. We'll have to ignore that. The second person who will get into registration voluntarily, like I said, whether I like it or not, I'll go and get registered. In this case, my registration certificate and the effective date of registration will be only the date on which I got registered. So it is not retrospective. It is not the day on which I ought to have got registered. It is the day on which I get the registration certificate. For me also, if I am holding some closing stock, let's say my turnover is only 10 lakhs, I have a closing stock of 1 lakh worth inventory. On that I can avail ITC. But the closing stock is exactly the date before my date of granting registration. So these provisions cover when a person gets registered, how one, the law becomes applicable, revised invoice comes into picture, and then the other scenario of getting voluntarily registered, still getting ITC.
On this opening stock which you can take input tax credit, what is the tax that should have been paid on that invoice? Is it GST or is it?
As of today, the 1 year time limit if you take, it will be only GST, sir.
Only if GST was paid.
Yeah, from now, if you say 1 year, today we are in November, 2017 November, we had only GST.
So those who took on 1st of July, there was nothing.
For those only Tran 1 would have come into picture. The people who are filing a new registration, let's say, let us go back 1 year. Last November somebody was getting registered and he is saying, I am holding stock, which is from the pre-GST era. Then that person would have been necessitated to file a Tran 1. But not in the current case. So moment we crossed 1st July of this year, it's fine. It's only GST that you could take as input tax credit, not the older ones. Absolutely. The moment you are holding GST number, you are supposed to. That is why September 23rd, 2017, they opened the window. You don't want registration, please surrender. Because in service tax, I had a classic case. One society, what they were doing, they were renting out a premises, commercial building. 1 lakh rupee was the monthly rent. So 1 lakh rupee came to 12 lakhs, and service tax, I was liable to pay service tax. In GST, 20 lakhs is the limit. They don't have any other income. So I told I will surrender. For which only they told me in February 2017, no, I will migrate you to GST. You come and surrender in GST. I was waiting till I got migrated. Once I got migrated, there was no cancellation enabled. So I was able to cancel only in September 23rd, 2017. From that day only they opened, we happily surrendered our registration. That can happen. And we can take the registration also again. So just to elaborate on the registration process. Yes, sir.
Regarding the closing stock for which you can take ITC.
Correct.
That purchasers will not be having our GST number.
Ah.
How do we claim that ITC?
ITC form. The ITC 01 that you are going to file, no, in that it is a self-declaration. You are going to give. If that value of ITC that you are going to avail is going to be more than 2 lakhs, a chartered accountant certificate is required. A practice area for us also.
More than 1 crore, that will be an audit.
No, that is different, sir. More than 1 crore recovery, 20 lakhs stand away matara. This is only on the inventory, sir. No, Tran 1 there is no audit, sir. Tran 1 there is no audit at all. Tran 1 is absolute. 140 subsection 1, 140 subsection 3. Whatever you showed in the old one, you can take.
But they are sending notice for submitting.
They will send notice. It is not for audit. They will send notice because they somehow feel many people have taken Tran 1 credit wrongly. And in some of the cases, it proved to be wrong also. So which is why they are just trying to throw stone in the dark. If there is no sound, they will throw more stones. If somebody shouts, hey, then fine, okay, fine. That is what will happen.
In case of society, you said no, turnover is below within.
Yes.
So you have surrendered it.
Correct.
Till then, you are paying the tax. GST?
No, because they are clearly told that in a press release. See, we are yet to even introduce cancellation. Had they introduced cancellation, 1st July I would have applied for cancellation. That menu itself was not enabled. So we asked for a clarification. Press release came. Till the surrender menu is enabled, you are not supposed to pay GST. Meaning, you can refrain from paying. Which is what they exactly did on September 23rd. Before the first quarter, we were able to surrender. Okay, moving further. This is for the registration legal aspect. Before I get into 23 and 24, which will be much more legal, procedure I want to quickly go through in the rules. So what is my registration procedure? Like I said, somehow GST, initially I didn't understand that this is how they have modeled it. Then I was able to correlate it. In my school and college days, I never played chess. I don't like that game. What used to happen is one fellow will sit, he will make a move, he will tap one dabba. The next fellow will make a move, he will tap the same dabba. I was wondering, what are they doing tapping the dabba? Is it something to, there must be some logic. In my college days, they made me a volunteer for one chess competition. So I went near that and saw it was a clock. And that too, it was not showing time. It was having some 30 minutes, 1 hour, some setting like that. So then I asked that fellow, very inquisitively, what are you doing? No, this clock, when I press this button, his time will start. My time will stop. That means if they fix a match to be 1 hour, I can take as much time as I want for making a move. But till that time, my clock will be running. And once I finish my move, I tap it, his button will come up and his clock will start running, which means he has to now make a move. If whoever is reaching 1 hour first without doing a checkmate will be a lost. This logic I understood in college. I was able to apply in GST now, because when you apply for GST registration, your clock stops, officer clock starts. Within 3 days, the officer must give you registration, or he must tell, I will not give you registration. Or he can ask for additional details. Why, sir? If he is not doing within 3 days, as per section 27, you are deemed to be registered. Within 3 days, the officer is not doing that immediate reflex action, you are deemed to be registered. This is even more scarier for them. If I don't do also, you will get registered. If I do something, then at least I can get further details. Initially, I think till September or October, left, right and center people were getting registered. You upload your data, next day you will see ARN would have come in the midnight. The second day night you will see, registered, this is your GST registration number. But the process was so fast because they didn't have enough time to go through. And imagine, first day of GST, 1st July 2017, in India 55 lakh people only were there as assessees. Just 55 lakhs. By 1st February 2018, the day Arun Jaitley read out the budget for 2018-19, he says it has increased to 1.14 crores. Where were these 59 lakh people earlier? Have they all started business once the government introduced GST? I don't think so. They were all not under any tax. They were happily living. Suddenly they have been forced to come under tax. Still, what we need to look at is, if this 59 lakhs has come, already 55 lakhs is there. The site they would have planned for 60, but suddenly they have 1 crore 20. Which is why I pity them at times. They never expected so many people to jump in and start filing returns. Imagine 31st December 2018 is the due date for annual return. Today we are on 28th. நாளைக்கு 2.0 வேணா ரிலீஸ் ஆகும், GSTR 9 ரிலீஸ் ஆகுமான்னு எனக்கு தெரியல. So even if they give it tomorrow, we have exactly 32 days to file. How many people? 1.14 crore minimum. It could have been 1.34 crores by now. 1.3 crore people will have to file returns. Everybody has to file annual return in a span of 32 days. ஒரு நாளைக்கு 1 லட்சம் பேரே ஃபைல் பண்ணிட்டுமே annual return. I'm not talking about 3B. Even if 1 lakh people, even if 2 lakh people file, you cannot complete, no? You wouldn't have even completed half of the assessees. Because annual return is mandatory irrespective of your turnover. Everybody has to file annual return. Which is why I feel in GST always there will be a due date. And there will be actual due date. Then there will be proposed due date. And every day will become a due date. Okay, notwithstanding that, let's get back to the registration procedure. Like I said, 3 days. You apply within 3 days, he has to either give you a registration or he has to tell that I have got further clarification. Once he gives a notice that I have got further clarification, his time stops, your time starts. Within 7 working days, you will have to give the answer. You don't give the answer, application is deemed to be rejected. You give an answer within that 7 working days, your time stops, his time starts. He has to give an answer within 7 working days. In the 7 working days, they have done all the things that they could do. So 3 becomes 7, 7 becomes 7, and ultimately officer will give a registration. Unless you have uploaded white papers. Which has happened in one case. He was asking, sir, I want address proof. The client has replied, I have attached address proof. But this fellow did not realize he has not scanned it like this. He has scanned it like this. He says, there is a PDF, there is a PDF. When we went to the office, he said, there is a PDF, open. It was clean. Then only he realized, oh, the PDF should have been scanned like this. I have scanned it like this. Then he is bound to reject your application. Unless that untoward incidents like this happen, you will get a registration. Once the registration is done, as I said, you will have to see what is the effective date of registration. If it is going to be a mandatorily registerable person or it is going to be only a voluntarily registering person. Fine. Registration part is done. What is the next part that has got me into registration is amendment of registration. But before we get into amendment of registration, I think the very important part of section 23 and 24 we will have to take up and discuss. 22 I told you, which tells about 20 lakhs limit, which is pertaining to registration. 23, it is giving 3 persons an exemption from getting registration. And section 23 is overriding section 22. Because it starts with the word, notwithstanding anything contained in section 22. Whatever I say in 23 shall stay. What is 23 telling us? 23 is saying 3 people need not get registered under GST. 1, an agriculturist. But it is not categorically saying an agriculturist ever need not register. No, no. An agriculturist to the extent of cultivation from land. If he is doing trading business, he might have to get registered. To the extent of cultivation from land. The cultivation could have been done by him or he could appoint people to do it or his family members can do it. But cultivation. So an agriculturist to the extent of cultivation from land, even if it exceeds the limit prescribed under section 22, you need not get registered. First person to go outside GST. The second person who has been privileged to come under 23 is a person who renders goods, who gives goods or renders services, whole of which is exempted. The best example could be a university or a college. Any services by a university or a college is to a student or faculty or staff is completely exempted. I need not register under GST at all. My turnover could be beating even some of the profitable companies. Still I need not get registered because my turnover is completely exempted. If you come under exemption, if you are fully exempted, you don't have to bother getting registered under GST. Second person. The third person, sorry.
Schools.
Yes, schools, colleges, everybody. I would say school and college I took as an example, sir. In a simple and the exempted, if your output is exempted completely. Exemption, partial exemption, full exemption. On output there is no GST, be it goods or service. You never have to get registered under GST even if your turnover exceeds 20 lakhs. Second category of person. The third category, which is the most intriguing category, is the service or the goods that I am dealing is taxable, but tax is payable by the recipient. The goods or service that I am dealing is taxable, but the tax is payable by the recipient. Exactly. The one word that comes to everybody's mind is GTA. Lawyer vitradinga. The lawyer is also there. If the lawyer is rendering services only to a business entity, the lawyer never has to pay GST. Who has to pay the GST? The recipient only has to pay. So the lawyer, even if he is making 2 crores or 3 crores, by rendering services only to business entities, he need not get registered. So the third person is not effectively getting away from GST. GST is being collected, but it is being collected from the recipient. Hence he is staying away from GST. Section 23. These 3 people are left out of GST. That means they can stay away even if their turnover exceeds 20 lakhs. Now come to section 24. What is the importance of section 24? 23 fixes 20 lakh limit. 23 says who need not get registered even if you exceed that limit of 22, section 22 limit. 24 is again a section which is overriding section 22. It is overriding section 22, but unfortunately in law they have not mentioned whether it is overriding section 23 or not. They have only said that notwithstanding anything contained in section 22. Then what is the importance of 24? 24 gives a list of assessees who must get registered irrespective of their turnover. Who must get registered, mandatory registration irrespective of your turnover. This is the interesting part. So what we need to check is 20 lakhs is one limit which is from section 22. We should go to section 24 also and check whether I am coming under section 24. If you are coming under section 24, you have to get registered. It doesn't, the 20 lakhs limit is not existing for you. That is how this 24 is important. In 24, I will bring out those important assessees who have been told that they must get registered. 1. A person who is rendering interstate supply of goods or interstate supply of service. Anybody who is doing interstate supply. This actually created a huge problem, and especially where we are standing, CA Institute had a huge problem. The problem was 1st July 2017 the law was introduced, July 2017, May 2017 result was declared. All the people who had done corrections of the paper were expecting the honorarium to be paid by the Board of Studies ICAI. Honorarium never came. They asked why it is not coming. They gave a simple reply. Do you know from 1st July 2017 GST has come. You have done the interstate supply. Board of Studies is sitting in Uttar Pradesh. You are sitting in Tamil Nadu. You have done the interstate supply. Please get registered under GST. Issue a tax invoice. We will give you honorarium with the GST. The sad part was, if I go and get registered for this purpose, my 6 lakhs or 7 lakhs income tax filing also will have to go under GST. The 1,000, 2,000 rupees income tax filing person will say, why should I pay GST? So many people were in a spot of botheration where they did not know whether to go this way and get registered or whether to go this way and say that the institute, okay, leave the honorarium, let me consider it as a donation. So this was going on. The problem became very different because when the people were hesitant to get registered, the problem that the institute was facing was next attempt, many people may not be there for correcting. That is the problem that they were looking at. So institute was worried. This is the problem with every institute and university that was there, where they are giving it to the other state for correction. Imagine a professor getting registered only for the purpose of correcting papers. People were not ready to do. Then slowly what happened, 13th October came where the government gave a notification and said, if interstate supply of service is done, this is not applicable for goods. If you are supplying interstate service, 20 lakhs limit is applicable for you. So if you are doing IGST transaction, you are a service provider, you still are eligible for 20. That moment I think everybody breathed a huge sigh of relief. From that day on things became easier. So for interstate supply, mandatory registration is only for goods. For a service provider, it is still 20 lakhs. You cross 20 lakhs, intra or intra, you must get registered. This was established only from October. Okay. The next person who had to get registered is any person, when I said interstate supply, IGST, you will also have to take into consideration the people who are doing exports. Because exports are supplied to SEZ is mandatory. It is IGST transaction. It is an interstate supply. So you have to get registered irrespective of your turnover limit. The next person is the favorite person for GST, e-commerce operator. I think the GST Council somehow wanted to tax all the e-commerce operators. If somebody does activity also, they will tax the e-commerce operator only. Like 9 subsection 5 where you would have seen. In service tax we used to call it as Uber section. In GST also it is Uber section. 9 subsection 1 and 2 will say whoever is supplying will have to pay GST. 9 subsection 3 and 4 will say whoever is receiving will have to pay GST. ஒரு transaction ரெண்டு பேர் தான் இருக்க முடியும். There can be a supplier who is made liable or recipient made liable. Third party made liable, 9 subsection 5. If anybody is giving services to anybody else, but through an e-commerce operator, that fellow will have to pay GST. So you are going through my website, the website fellow will have to pay GST. That is the provision of 9 subsection 5, which is specifically intended for people like Uber, Urban Club and people, OYO, all those. Those e-commerce operators mandatorily will have to get registered under GST, whether you are a service providing e-commerce operator or a goods supplying e-commerce operator. Through you, the transactions happen, you must get registered. The next set of people who must get registered is TDS, TCS, section 51 and 52. Who will do TDS? Government, government departments, government organizations, governmental companies, PSUs including, as per the latest notification. All these people must get registered under GST, and strangely, these people will have to get registered with their TAN, not with PAN. Your TDS registration under GST will come TAN based, not PAN based. Your normal registration under GST will come PAN based. And the next set of people who must get registered under GST, again they don't want to leave those people who are sitting outside India and rendering services to India. OIDAR, Online Information Database Access or Retrieval Services. They must also get registered, mandatory. Who else is left? One more person is there. Casual taxable person. Who is the casual taxable person? He is registered elsewhere in India, but he is going to another state in India only for a temporary period to do some activity, goods or service rendering, and he is going to come back. That casual taxable person must register. So for example, I am having an office in Chennai, I am going to Delhi for doing an exhibition. For the period I am going to be in Delhi, I have to get registered in Delhi. Temporary registration, 90 days is the time limit, post which it can be extended further by 90 days. But the sad part is, this fellow who is going to register as casual taxable person will have to pay the tax in advance. He will have to preempt how much kalla he will be able to make, and accordingly he will have to pay tax. If he is going to fall short, he has to pay the remaining with interest. If he is going to be paying more, then he can claim the remaining as refund. That is the provision given to him.
If he is doing exhibition only for display, then
there is no supply, then you don't have to get registered. See, you are going to go there and only display. There is no need for you to register as casual taxable person. You are going to go there and supply there. That is, you are going to take material from Chennai and sell. Then you have to get registered because you are making a taxable supply in that state.
Most of them what do I think displaying is that, asking him to come down to Chennai and get it built.
That is the business model which has emerged post section 24. See, whenever something is stopping us, we will not get stopped. We will circumvent. This is circumvention.
Can you give an example for
OIDA? Online Information Database Access Retrieval Service. Simple as Google Drive, Dropbox, and various other TP softwares are there. Transfer pricing, we can get data online comparison. Maybe the database owner is sitting outside India. Why go to that extent, sir? The simplest of simple games that we play in our mobile phones. Play Store, you have installed some game. They will suddenly say, pay 159 rupees, I will give you this extra power, you go to the next level. You play that, you will say you have to make the payment. Through Google Play Store, you make the payment. You will receive an invoice promptly with the GST. The fellow who developed that software is not even in India. His server is elsewhere, but he is doing a online information database access or retrieval services to you. Your data is stored there. Whenever you log in, for you, how much points is there, how much coins you have collected, how many area you have conquered, everything will be there.
In
no money is collected. You are not a related party. They are giving free. There is no GST, no. Because it will not come under supply, neither under deemed supply. If your related party is giving free, then there is a problem. Sorry? Okay, so this you'll have to look at it for the people who must get registered under GST. Now, section 24, whether it is overriding section 23, where the important question comes is the last person in section 24, which is any person who is liable to pay GST under RCM. Any person who is liable to pay GST under RCM. This is the word that is used in section 24. What is RCM? If you go and see the definition says that RCM means 9 subsection 3, 9 subsection 4. 9 subsection 4 is suspended. So we are going to overlook it. We look at 9.3. How it can become a problem. I'll take an example. School or college or university. So far they thought I am under section 23. I need not have to get registered under GST because I am doing only exempted. One case has been filed by a parent against the school or a college or a university. For fighting the case in High Court, they have to appoint a lawyer. For making the payment to the lawyer, they are supposed to pay GST under reverse charge. For paying GST under reverse charge, as per section 24, they must get registered. So they are not getting registered for paying tax on their outward supply. They are getting registered for paying tax on the lawyer's outward supply. This is where we are still confused whether 24 is overriding 23. The government has clearly not clarified so far, which means what? They want this confusion to persist. Or they want all these people to come and pay GST. Even yesterday we had a problem. A hospital had come for an opinion to me seeking, should I pay GST on lawyer's fees? I said yes. No, it says only business entity, no. Am I a business entity? Then I told him, sir, what is business? Look at the definition of GST. It says anything that is pecuniary, where you earn a benefit out of it. Are you not running your hospital profitably? Correct, but it is a society, sir. Society or trust. There is a business element here. You're not giving it for free. You're not saying subsidized anything. Even if you say that there is a benefit. 100 rupees, 75 rupees, it is still a benefit. So you are a business entity. You are liable to pay under RCM. So this is the starting point. So if you are liable to pay under RCM, you must get registered under section 24. This is the one which has made many people get registered under GST. The first problem I think we saw in this is in July mid, Namakkal, lot of egg exporters were there, or egg people who are moving it from the areas of hen. The problem that they had was, GTA said, you are an unregistered person. You are an unregistered person. If I transport your goods, I will have to pay GST. So GTA said, I don't want to get registered. Unoda 10 load adicha and it will 20 lakhs tarido. Why should I get registered? Why don't you get registered? That fellow said, no, as per section 23, my egg is fully exempted. Why should I get registered? So because of this stalemate, egg alla Namakalli irundhudu. None of it moved out. Then finally government gave a clarification on a notification which is clarificatory in nature, October 23rd, by saying GTA rendering services to an unregistered person is exempted. Okay, if you are rendering to a registered person is only liable to pay. GTA will lawyers you, they will protect it. You don't have to pay GST. So GTA got protected. Subsequently, egg flow started happening properly. So these are all the issues that this 24 has had in the past. So 22, 23, 24, critical for understanding the GST registration aspects.
This RCM problem arises only if you debit that advocate fees to your payable account. If you don't debit, you capitalize it, then where is the question of registration?
Sir, you have paid payment, sir. You have made a payment, that's all.
Made a payment, I am not claiming it as an expense.
There is no question of expense.
Then why should I go for registration?
Understood. In GST, there is no question of P&L balance sheet. You have received an invoice, that's all. You are liable, you are a business entity. You capitalize it, sir. There in service, you look at it. In goods at least, there is a classification. Capital goods, inputs. In service, there is only one word, input service. You cannot call it as capital input service, revenue, nothing. Service is service. We are liable to pay. GTA for that matter. Goods transport agency, we are liable to pay. That's it. If the person is giving, GTA is giving services to us, he is not registered. But we are a business entity. We are not registered. We are liable to pay.
Every business entity has some point of time, some loyal services, and for that they need to pay.
Exactly, which is what I am saying. See, what I am telling you is what is in the law. What you might have seen practically is something different. Which is fine. If you cross a red line red signal, we are a person who is penalizable. Are we getting penalized is a different question. Who is a thief? Thrillerana, Matikirana. Thriller is not a thief. Matikirana thief. So this provision will, Sattam than Kadame Chayum, Epona, Yar Matikirana, Anuka Sayum. Mata don't get to. So we'll have to keep it in mind that this provision is there, sir. But you want to take a risk, that is your problem. You take a risk. But ideally, if you pay any RCM which comes, import of services, another innocuous RCM which is sitting there. Many people import softwares these days. How do you import software? Nothing is required. Computer open money, you pay credit card payment. Software is imported. Done. You are liable to pay under RCM. You must get registered. So this is the interplay between 22, 23 and 24. 25, yeah.
Sole proprietors are doing two businesses. One is taxable business and then second one which I opened later, that is exempt. So what should we do?
GST registration is PAN based. Aggregate turnover, 20 lakhs which I explained earlier, it is your PAN based turnover. Whether this is exempted or taxable. Together, if it is exceeding 20 lakhs, you must get registered. One, should I pay tax on the exempted activity? No, not necessary. You need to pay only on the taxable activity. But the problem for you will be, can you take input tax credit freely? No. You should take only to the extent of your taxable activity. That's all.
So the additional place of business have to show in that.
If you are operating in two places of business, exempted activity from one place, taxable activity from one place, both will have to be brought into account in the same registration.
Then I have to show exempt supply.
In your return, correct. In your return, you have to show it as exempt supply. I think you are given the exact prelude to my next point. The registration will contain certain basic details. Again, I want to harp on these points because it is commonly missed out by people. One is this additional place of business. The issue with additional place of business is whatever issue we had in VAT and excise, the same issue persists in GST also. I am storing my goods in a particular place which is not registered, or it is not covered by my GST registration certificate. It is not added as an additional place of business. Then it is considered to be in violation of the Act. The officer has got every right to confiscate those goods. So I think that is where this additional place of business adding is very critical. So when it comes to amendment of my registration, what is the timeline within which I have to do the amendment? The activity which is warranting the amendment happens. Within 15 days, we are supposed to intimate the amendment. What are the activities that can warrant amendment? Change of place of business or additional place of business. The most common thing which people miss out is directors. Change in directors. You will intimate to Companies Act. You will not do it in GST. Because we never did it to VAT department. We were hardly bothered in VAT department what was there. In Central Excise, I think it was the same. The only reason we were intimating Central Excise department was in some cases authorized signatory. The person who will sign will change. That is what we were telling. In GST also, I think we have to take it into account very seriously, because if you are not showing the correct authorized signatories, you are already in violation. By not doing the information to the department within 15 days of the event warranting the change as happening. Bear it in mind. The second part, yes sir. Okay sir. The next part that I want to bring about this in case of amendment is, there is a very clear distinction while registering under GST between an authorized signatory and an authorized representative. Why I am going to call upon these two is because invoice rules, rule 46 says every invoice must be signed by an authorized representative. Why? Because these days we don't see any invoices being signed. We only see those words in the bottom. This is a computer generated document, does not require signature. Yaar sonna? Everybody in India is generating only computer generated invoice. Does it mean you don't have to sign? It is mandatory to sign. Then my client asked me this question, sir, if you say it is mandatory to sign, how can I ask my director to sit and sign all the invoices? Then I told him, please read the law properly. It is not saying authorized signatory should sign. It is saying authorized representative should sign. So when you go into a registration, you will see two tabs. Authorized signatory, authorized representative. You can choose authorized signatories as authorized representatives, or you can add authorized representatives also. Those authorized representatives could be your plant head, marketing head, stores head. You can meaning get those people as authorized representatives, then they can sign the invoices, they can sign the debit notes, credit notes, all that they can do. The person who signs the return could still be your director. But this has been grossly missed out, and hence what they are doing is, somebody is signing who has not been authorized. Or the managing director will have to sit and sign everything. 3 shifts dispatch is not happening. All these funny things are happening. So ensure that signature is mandatory, signature is required. Till last month, I think, even Indigo Airlines or Spice, when they sent the invoice, there was no signature. But somebody would have highlighted this. Yesterday I received an invoice which was signed. For the month of first 15 days of November, they sent me an invoice, properly signed. Then I realized, okay, the provision has been highlighted to them only now. Signature is mandatory. Can I sign digitally? Yes. Digital signature is allowed. Again, word of caution. Idhe client ke digital signature allowed on get are. Yes, I told him yes, digital signature can be done. Next time when we went to his office, I saw him doing something. What he was doing was, he was copying the managing director's signature and pasting it in every invoice. Now I asked him, what are you doing? Digital signature, sir. This is digital signature. This is fraud. You will get arrested. If you do the same on the checkbook, you will be behind the bars. What are you doing? No, sir, I have scanned the signature, size correct. I will copy and paste it in every invoice. Boss, this is not digital signature. That blue color thing, no? Yes, sir. That only you are supposed to use. In all the PDFs, you can put it and send it as email also. But that is what is digital signature. So, word of caution when you advise the clients, ensure that they understand what is digital signature. Don't imagine that they know what is digital signature. So, this signature, authorized signatory is not the only person who is expected to do. Authorized representative can also do. This commonly missed out point in registration. Additional place of business, commonly missed out point. Any change in the directors, commonly missed out points. These, if we can take care, how the amendment process will work. We submit the amendment application, same logic what we saw in registration. Your clock will stop, his clock will start. But this time, there is an elongated period for him, 15 working days. So the department will have to come back within 15 working days. What if he doesn't come back within 15 working days? Deemed to be amended. Like deemed to be registered, you are deemed to be amended. So he has to come back, or he doesn't come back, or he comes back saying yes, you will get amended. If he comes back saying no, I want further information, now your clock will start. You will have to give the information within 7 working days. Once you give, he will have to again approve within 15 working days. This is how the amendment cycle will get over. Yes, sir.
Yes, sir. So I haven't got any notification. The assessee hasn't got any notification yet regarding that additional place of business not being added in GST registration. So if you do know any problem with it, it's going more than 15 days.
Assessee has not got a notification. How can you say that? Assessee is the person who is opening a new place of business. He has not decided to do something in the site. Correct? What you are saying is he has got additional place of business but didn't bother doing it in the GST website. Correct? Go and do it now. Keep quiet. You don't tell that I should have come 1 month back or 3 months back. You say as if it has happened yesterday.
Can a person carry on 2 lines of business at a single place without
Yes. Single place, single registration, 2 lines of business can be carried.
At a single place without declaring additional place?
Because what you are saying is 2 lines of business, 2 separate registrations.
One registration.
1 registration.
2 lines of business. One is provision store, one is gold business.
No problem. Can be done.
So adding additional services, does it require any amendment?
No, sir. The point that you raised is, I am going to do new goods or I am going to deal with new services. Should I inform? I think that is something which has gone with the CST and VAT days itself. They themselves have provided only 5 lines for us to add new HSNs or SAs. That is the service accounting code S12. Now that is also HSN. So beyond 5 you cannot add, which means what? They don't need that information basically.
Trader is doing no commission agencies also now. So does it require to be?
Yeah, if it is it required? If you ask me, I would say no. Because it is not mandatory to declare what all you will do. If I want to declare, I don't have the space to declare. So that is the reason why I am saying it may not be mandatory. The next point pertinent to his question is, can I register more than 1 time within the same state? Is an important question which involves an amendment discussion also. Can I register more than 1 time within the same state? The answer is yes. But if you have a business vertical, what is a business vertical? Something which is told in accounting standard, I do not know the number, 18 or 17 or segment reporting, 17. Okay. According to that, if the risk and the rewards can be shown as separately, for example, like he said, provision store is also there. I am also having a, let's say, a jewelry shop. Obviously, the risk and rewards, the margins, everything is different. Can I get registered 2 times within the state of Tamil Nadu? Absolutely yes. Can I get registered more than that also? Yes, you can get registered more than that also if you can prove that it is a business vertical. The amendment that I wanted to talk about is CGST amendment has been already passed in the Parliament on 29th of August 2018. SGST amendment is yet to come. What is the importance of it? Only when the SGST amendment comes, this amendment will become applicable to all of us. That amendment is actually removing business vertical itself. What it is saying, you can register an office, main office, branch office, warehouse, everything. Whatever you want to register additional, you want to register, you can get one more registration within Tamil Nadu. So there is no restriction at all. That is the amendment that we are going to see. So for example, Madurai office, same business. Madurai office I can get registered, Chennai office I can get registered. Risk and reward are same. No need to prove business vertical. This is the amendment that is going to come. But as of today, you have to prove that there is a business vertical, then only the other registration can come. Yeah.
So if I have two different premises, one operating for taxable and one for
exempted,
then I can prove that risk and reward is completely different and
absolutely
I don't register for the exempt.
correct. But as a consultant, what I would suggest is don't do. You'll have to file 2 returns, 2 fees, 2 audit reports. Don't do that. Bring it inside this. Get some template for doing your monthly reversal calculation. That is the best idea.
I have separate accounts, I have separate billing.
People are also there.
Separate tally is there.
That is fine. If people are there, you can manage the cost associated with it. The absolute best idea would be to have separate registrations. You can.
But why do I have separate registration when third is exempt for the other second premise?
Why you have to have the second one is, your overall turnover is seeking a registration. One, you should show it under this normal registration, or you should show it under some registration. What you are saying is, sir, I will show only taxable under this registration, let exempted take section 23's route. You cannot take because you are not dealing only in exempted. You are not attracted by section 23 because you are not doing only exempted, which means you have to include it in this one registration, or you have to take a separate registration, keep it separate. Okay.
With regard to authorized representative, your signature of
authorized representative, yeah.
invoice. Suppose I have in one outlet 20 counters. For each counter, some invoice I am signing. For 20 representative, I have to, how to be done? And I have 20 out. See, in one outlet, 20 counters. I have 20 outlets in one city. How many?
What we can do, I'll tell you a practical solution. What you can do is, get a approval from your commissioner that you can facsimile the signature. That is, it can come in the printout itself. Like what my client was doing. That is not supposed to happen. What you can do is, you can get an approval with the officer and do this. Or what he can also suggest is, he can ask, because everything that you sell is if it is going to be B2C. In your counters, he may even suggest you to prepare one consolidated invoice at the end of the day. He may suggest, but actually legally there is no provision, but he has got a discretion. If he says that, you are saved. For that whole outlet, one prepare, but with all HSNs you can do. This we have to do practically. I don't think there is a legal aspect which is more going to be telling us this is how you have to do, but we can try to handle it practically. Yes, sir.
Pertaining on our profession, you say, like, we are registered in Chennai, but you have clients outside in Karnataka, for whom, okay, we are sitting here, we are filing reports here,
correct.
The place of business here, I pay IGST bill. Fine. So now I don't need to register in Bombay or Delhi or
not necessary, sir.
But there could be cases where now I have to appear before a tribunal, or a case which I am appearing in Bombay or Bangalore or Delhi. So will the place of service require me to have a temporary registration there?
No, sir. No. I'll tell you why. Because in case of service, that too you are entering into a person within India, we'll have to go by section 12 of IGST for finding out what is the place of supply. That place of supply does not have a specific entry for our kind of professional services. For that matter, even lawyer services also. So, which means what? We are supposed to go by the general clause. The general clause is section 12 subsection 2, which says, whenever a service is being rendered by a supplier to a recipient, recipient is registered, means recipient's place is the place of supply. So, the company which is asking me to go and appear in an Assam court, the company's head office might be in Mumbai. I am in Chennai. I am going and appearing in the Assam court. I will raise an invoice on Mumbai. I will say place of supply is Mumbai only. It doesn't matter where I go and appear. Where the registered person is located is the place of supply. So I will charge an IGST with Mumbai as place of supply. He can take ITC, no problem. who's the one who's giving the order to you is unregistered. You are going to appear. Let me break it. We are a chartered accountant. In that case, I know that his address is outside. He is unregistered. Then the place where I am located is the place of supply. He is unregistered for services, but I am registered person. That is why I am rising. If the person is registered, his place of supply. He is not registered. If the address is normally available in the course of business, then the place where he is located. If the address is not available, then my place. We have to go through this combination 1, 2, 3.
If the address is not available, it will be intrastate.
Yeah, it will become CGST as GST. If the address is available in the records, it has to be IGST only. Yes, ma'am. Absolutely. Whatever is in the Companies Act website, the same should be here. 1 or 2 can be the authorized signatories. You make one person as the principal signatory. Now you please go and add, that's all. Why the reason I am saying it is, in old VAT, they were not following it up. Neither we were able to see it. But GST, once you log in, you are able to see everything. I'll tell you one, you can be seated. One case which this morning came to us. What happened was, they have migrated from VAT with only one director. One director details. They didn't bother. The director has passed. So now they are not able to file returns. Joint director in case of GST. The joint commissioner itself is saying, I do not know how to add another person when the existing person is dead. For an individual, at least I can say it is a succession of business. We can cancel the registration. The PAN is no more. In your case, the PAN is going to exist, but you want to add directors which you didn't add earlier. If you add now, who has to sign? You have to use the digital signature of the deceased person, which is illegal. So they are in a fix. This morning I looked at this whole conversation and I said, I cannot help you. You will have to go to the commissioner's office. That is the joint commissioner's office only. This kind of things, I'm just saying. So it is better that we incorporate every data that is there in the domain there. Yeah.
Manufacturer of alcohol or a dealer in petroleum products making payment to advocate for legal services.
Must. You have to get registered. You will come under 24, no? Though, as per 22, you will be dealing completely in exempted goods, sir. Exempted includes non-GST. Correct, non-taxable. Exempted, definition of exemption under GST, exempted goods says, exempted includes nil-rated, non-taxable also. Yours is non-taxable, you become under that. You will have to get registered, yes. Okay, so that is why in the returns also you will see, not taxable turnover, nil-rated turnover should also be reported because they are intending this only. And petrol bunks will invariably get registered. The reason being, the oil that they sell is taxable under GST. The engine oil and the other stuff which they sell, some petrol bunks they have supermarket also. So that turnover will be less, but still they have to get registered because their overall turnover is including petrol turnover, which they will cross in a week. Okay. The next part of registration, we have to quickly wrap it up, is the cancellation of registration, which again I have to tell you the amendment also. Can I cancel my registration under GST? Yes. It can happen in 2 ways. Suo motu cancellation, cancellation by the officer. Let's finish cancellation by the officer first. How the officer can cancel? Obviously everywhere he has to give us a principles of natural justice. One hearing he has to give, then only he can cancel. But what is the reason that he can issue a notice to me for cancellation is, 1, contravention of any of the provisions of the Act. Second, which I think none of them have exercised so far, is continuously not filing return for 6 months. If you are a normal taxable person. If you are a composition taxable person, continuously not filing returns for 3 quarters. If you are not filing 3 quarters returns, if you are a composition taxable person, or you are a normal taxable person, continuously not filing returns for 6 months. I know many people not filed from last July till today.
No, the notices came.
No, in sporadic cases, not in every. See, ideally, more than 6 months means they should have cancelled. They are giving notices itself only now. The notices should have come when? January. Jan, Feb, March. We are talking about the next Jan, Feb and March. In many of the cases, it has not even come also. Those suppliers are still quoting the GST number and collecting GST. I don't know what they are doing with it. Maybe working capital. Or creating a new capital to incorporate a new business. I don't know. Because in 2-year reconciliation, when it came only, everybody got finicky and they said, reconcile, reconcile. When I started reconciling, it was very easy for one company. None of their suppliers have filed returns. It was very easy. I told them, very easy, sir. Nobody has filed. No, how do you say? You go to the GST website. When I clicked their name, GST number, the last time they have filed return is last July. Maybe they did some Puliyar Suri in that month and they felt, okay, fine, can happen. So that is the second part of the law has not been very strictly enforced by the department. First part, yes, if there is going to be any major deviation of the law, they have the right to issue a notice seeking your cancellation. Two parts. When it comes to me wanting to cancel the registration, you might give any reason. For example, my business has gone down below 20 lakhs, or I am winding up my business, or I am going to amalgamate, get absorbed into a new business. Then what will happen? Your existing registration will have to be surrendered. You have to cancel your registration. New registration will have to get registered because the PAN will change. When the PAN changes, GST registration number will have to change. So the old registration must be surrendered. The only good benefit that is available for this person who is being succession of business, is that, again section 18, what it says is, this fellow can file a form called ITC02. Whatever input tax credit he has got in his inventory as on the day before he migrates into or he amalgamates into the next company, he can show it, that person can accept it. The credit would automatically go and sit in the other person's book as if it is a succession of business. There is no GST on this transaction. Stock would have gone from this person to this person, no GST, because it is a succession of business. This is also allowed. Apart from this, if I really want to say that I want to cancel my registration, I can submit the application, but here there is no time limit, and which I think all the officers have taken maximum benefit of. January 7, 2018, we submitted an application for cancellation. Till today, it is in process.
Sir, can I submit my application without filing my previous returns?
You can file, but what will happen is, I'll tell you, when they scrutinize your application, this happened. On last January again, this was all 3 or 4 registrations we surrendered together. In Andhra Pradesh, they took up the cancellation sometime in July. And they said, fine, I'll give you an order of cancellation, provided you file all the pending returns.
Pay that late fee.
Exactly. But luckily for us, till the date of submitting our application for cancellation only, we had to file. The date of submission of cancellation was January 7th. So from 1st July till January 7th, I had to do. All the late fees I had to pay, but late fees was applicable only from October's return. No? First 3 months they waived off the late fees. This has to be done in cancellation. This part of the cancellation, if it is done within, by paying the late fees, it is not a problem. But where it became a problem and it has actually warranted an amendment is 7th January 2018, I have applied for cancellation. November 29th, he picks up and says, I reject your application. I don't find enough evidence for cancellation. If he rejects, then what will happen to me is, I should file returns from January till November. Then only I can go for next cancellation, which is a huge headache. Luckily, they have realized this and brought an amendment. Sadly, the amendment is yet to be functional. The amendment that they have brought in the August 29th Amendment Act is that there is a status that is going to be introduced called suspended. So the moment I apply for cancellation, they will put my status as suspended. During the period of suspension, even if my registration is cancelled subsequently, I am not expected to file any returns. I can reapply for cancellation with the correct data. This is yet to come. So for those people who are waiting, you will have to be mindful of the fact that if it gets cancelled, get ready for late fees. And one more thing has come from November 1st, that is, they have introduced this thing called final return, GSTR 10. All those clients for whom we have done the cancellation from 1st July till today, for all of them we must file GSTR 10. The due date is 31st of December 2018. We have time up to that. GSTR 10, the cancellation of registration, final return has to be filed. Once this is filed, it's enough. So some of them were asking me, sir, till January I had business, I then surrendered. Now I am filing GSTR 10. Should I file annual return also? Answer is no. If you file GSTR 10, your cancellation is complete. You don't have to file annual return at all. You don't have to worry about your yearly compliance. So this is pertaining to cancellation and yeah.
What about people who just migrated and then immediately cancelled it, like you said?
Yes, for them also this return has to be filed. I'll tell you two things, sir. The people who migrated without filing any returns, they have cancelled. For them there is no GST attendant. The people who filed some returns under GST and still went ahead for cancelling their registration, mandatory GST attendant. Because those people know who migrated with that provisional ID only, they have given the cancellation also. GSTR 10 itself will not get enabled. Yes, sir.
One of the client's cancellation has been approved, but now what happens is he wants to file that final return, but his GST or login and everything has been erased. Now what should that person do? Because
That shouldn't have happened. You should raise a ticket.
This happened, sir. This happened in our case also. We have filed all the returns from July 17 up to...
So he has issued a notice of cancellation.
We have not opted for any cancellation.
Ah.
The officer automatically cancelled, your GST has been cancelled, everything has been vanished in our site.
Okay, what you are saying is a different scenario, what he is saying is a different scenario, but the problem is same. Nothing, I am not able to log in, nothing is able to happen. In your case, I think I have an answer, which is the next point that I was coming to. In GST, we have a unique proposition called revocation of cancellation. If the officer on his own motion, suo moto, he cancels, he gives you a notice, you don't appear, or you give information, he is still not satisfied, he can cancel your registration. But within 30 days of such cancellation, if you are able to go on show cause as to why he has to reinstate your registration, he must reinstate your registration. But if the 30 days period is over, I don't think you can ask him to revoke the cancellation that he has already accorded to you. Apply a notice varama cancellation pannirukave kuda sir. In your case, I don't agree at all. Inga unga idha paarenga. My notices, pending notices la paarenga. Notice illama irundha what he did is illegal. You can raise a ticket and get it done. In your case also, I feel we can raise a ticket and ask for GSTR 10 to be filed. Because it is mandatory for me to tell how much is the closing stock and stuff like that. He could be a service provider also. Still I have to say 0. Nothing is to be complained. Because tomorrow they might re-enable and say, next year you file. With the late fees. Why unnecessarily to get into trouble? You raise a query, make it an issue, at least record. Create a record. The next part of our discussion, I think we have about another 20-25 minutes. The records that needs to be maintained under GST. Even before the records, I want to touch upon the documents that need to be maintained under GST. Then we will move into the records that is to be maintained under GST. The documents that is mandatorily to be maintained in most of the cases, as I tell you, you might get surprised or you might wonder why is it, where is it? Yes, it is possible. One such document I have already discussed, which is our revised invoice. What is revised invoice? What I discussed earlier is the revised invoice. There is no such thing called revised invoice other than that. The first and most important document in GST is tax invoice. Whenever you are making a supply, it is mandatory for us to raise a tax invoice. Apart from tax invoice, can there be a supply without GST possible? Bill of supply. When it is completely exempted item, or when it is going to be a composition taxable person who is raising the bill, they are not supposed to give tax invoice, it is only a bill of supply. The third category of document is the documents which generally we wouldn't be maintaining, but GST has made it mandatory for us. First one is self-invoice. Why am I supposed to raise a self-invoice? Section 31 subsection 3 clause F. That is the section which says that if you are paying under RCM, reverse charge mechanism, and that goods or service you have received from an unregistered person, you will have to pay GST, no doubt of that. But you will have to pay GST after you raise a self-invoice, an invoice on yourself. Why I should raise a self-invoice? Again, rule 36. The document for availing input tax credit in case of an RCM supply is not the supplier's invoice. It is your self-invoice. Earlier in service tax, they used to say the GAR 7 challan with which you can take input tax credit. But in GST, the document which enables you to take ITC itself is your invoice. But the only difference is subject to payment of tax. You can raise an invoice on yourself, but you can get ITC only if you have paid the tax. So self-invoice, a document which is not common, but should be common actually. The next document is receipt voucher. When would I issue a receipt voucher? Yeah.
Regarding invoice, sir, if there is an error in an invoice, sir, what is the procedure to cancel that invoice? There is some error in the
Same month, next month.
Same month.
Same month, you can easily cancel and issue a new invoice. You can show it in the GSTR one as cancelled invoice. That's all. It is allowed. If it is in the following month, that is the invoice has gone this month, next month only you are finding out that there is a mistake, debit credit note. That is the way in which you can correct it.
What all data should be contained in self-invoice?
The same which is to be in a normal invoice. The only difference will be there is a cell called whether tax is payable under RCM. Yes, no. In case of a self-invoice, we have to say yes. When you are raising it on the third party, you will say always no. So that field we'll have to make the change. That's it. Apart from that, recipient's name will be your name, supplier's name will be various unregistered person. You can put it like that. Receipt voucher. A receipt voucher is a very important document if you are liable to pay GST on your advances. No sir, I am a good supplier from November 15th, 2017. Good supplier advance, they don't have to pay GST under. On the advance they don't have to pay GST, then there is no issue. But still you have to raise a receipt voucher. A receipt voucher is to be raised whenever we receive money which is an advance on which GST is liable or not, both the cases. The next document is a refund voucher.
So self-invoice is necessary for the purchases from administrator even if there is no tax, RCM is not there?
No, only where there is RCM. See, where you are creating a liability with the self-invoice.
So self-invoice, then how can I keep the record? I have purchased something, say in a gold business, I am purchasing from customers, old gold.
Old gold, correct.
What should be done?
No,
it's not
no, wait. Old gold that you purchase is not taxable under RCM, no?
But I have to keep some record, no? What is the total amount of purchase? Then I have to give some bill to them.
That you can give.
What note we can keep?
You can, see, bought note is again a VAT procedure. In this case of GST, what you can do is you can prepare a bill of supply in their name and get a sign and get it from them. As if they have supplied it to you, one possibility. GST, does it require you to maintain the documentation? No, he is an unregistered person. You are buying from him, just because you are buying from him, you are not liable to pay. Okay. 9(4) is suspended, so there is no need for you to pay any RCM on this.
But
so
I can issue the records. I can issue the
You
bill.
can show the records, but there won't be any tax. Since there is no tax, self-invoice is not what is required. You can prepare a small sheet like information also. The full information is required only if it is a self-invoice. Per RCM, you are liable to pay. The refund voucher will come into picture when I have taken an advance. On that advance, I have paid GST to the government, but subsequently you come and tell me, no, give me back my advance. I don't want to continue with the transaction. In those cases, I must raise a refund voucher. So this is mandatory. The next voucher that I have to raise is a payment voucher. Where is the payment coming into picture? Especially when you are making payment to reverse charge suppliers. My GTA comes and says, sir, give me advance. Diwali, I need advance so that I will give bonus to my employees. Then next month bill you can set it off. You give an advance to him, you are liable to pay GST on the date of advance itself. So payment voucher also, you will have to create documentation. And then finally, one documentation which is not relating to accounting but very important under GST is delivery challan. When they speak about delivery challan in Rule 55, 3 types of delivery challans are being envisaged there. One, delivery challan for supply, delivery challan for other than supply, delivery challan for job work. Delivery challan for supply, it can happen. I might send some goods to my customer or a prospective customer who might keep it for some time and then accept it. Sale or return basis. I can do that. For that, I'll have to raise a delivery challan for supply. I am a service provider, but what I am doing is, I am doing interior decoration. Interior decoration is a composite supply of service, but materials I will have to move. DC, what DC I will raise? DC for supply only. DC for other than supply. My computer which is in the server, which is in the office has gone bad. So it is to be taken to the service center and brought back. It is not a supply. DC for other than supply returnable. I can go do it and bring it back. The third possibility is DC for job work. Whenever you are sending goods to a job worker, you must send under this DC. Why is it important? There is a return associated with this also. ITC 04. I think that return, none of us have filed or most of us have not even bothered to look at that return because there is no late fees, there is no penalty. But the biggest problem is waiting there, especially for people who are sending goods to job worker. Because if you are sending it under DC, the inputs must come back within 1 year. If it is not coming back within 1 year, in excise, they used to tell, you please reverse the SENVAT credit and take it whenever it comes back. But in GST, it is not so. In GST, it is deemed to be a supply. What is the problem if it is deemed to be a supply? Last July 1st, 2017, I sent. This July 2nd, 2018, it has not come back. It is deemed to be a supply on July 1st, 2017. I have to pay 1 year interest. And I will have to show it in my GSTR1. My job worker will become my customer. And how can he give it back to me? He has to raise another invoice and send it to you. This is the problem. Hence, if you are not reporting ITC 04, very soon the notices will come. They will just come and get from you the details of job work DCs. All the DC, they will issue a notice. You will have to pay GST. You say, sir, why I should pay GST? It is only job work. You never disclosed in the return, no? Your document says it is for job work, but where is the communication to me? The communication to me comes through your ITC 04, which you never said. So I will deem it to be a supply. So this risk is what is actually we should keep in mind for filing ITC 04. Keeping this in mind only, last July 2017, July to 30th September 2017, due date is 31st December 2018. I have never seen anywhere 15-month extension in due date. They have given it for the purpose of the assessees to erase all their old problems. If you are still not prepared to do that, get ready for notices. So this is another grossly missed out area, DC. All this collectively, I'll tell you the bombshell. In GSTR 1, in table number 13, we are supposed to report what is the starting number and what is the ending number. You go and click on the drop down, you will see every document that I spoke about there. They want the detail. I am 100% sure none of us would have given. 13 was given the least importance, and over a period of time 12, HSN summary was also given the least importance. Sir, adu kuduklenalum pogudhu. Click pannu. File the return. All we want is the return to go inside. We are not bothered about HSN summary, we are not bothered about the document summary. In GSTR 9C, the auditor will have to say whether they have kept the HSN summary properly. In GSTR 9, HSN summary is mandatory. It is going to come. HSN wise, you will have to give the breakup for your purchases also. Annual return. So this is going to be absolutely a different ball game. Had you filed the returns properly, this would be easier. Had you not done your monthly test properly, annual exam will be very difficult. So at least from today, start preparing for your monthly exams properly, so that annual exam is not that difficult. The documentation part is done. Now the simple registers that one has to maintain. Yeah.
Is there any penalty for putting a wrong HST? Both are falling in the same percentage.
Okay. That is the question that I was about to ask. Is there a revenue leakage point? No. Then I don't think so. But what they can do just for the purpose of irritating you, 25,000 rupees penalty, section 122 subsection 2, where there is no specific offence. So when there is no specific offence mentioned anywhere in the act, still 25,000 rupees can be levied as penalty. If the officer and you are not in very good terms, this can happen. Yes, there is no revenue leakage, there is no problem. And HSN, it takes a very good officer to understand what is HSN. And then interpret, because HSN...
All the job workers are quoting only one HSN.
Sir, in VAT also we did the same, no 2069. Yalla 2069. Same thing they think in GST. It is not so. So GST will have to have that capability to know what is in HSN. Again, I will give you an information. The chartered accountant who is signing the GST audit report will have to tell the customers, that is the person for whose accounts he is signing, their HSN classification is right. So this fellow takes additional responsibility, whether they have sold under the correct HSN, is the correct HSN, the rate is being followed correctly, all that I have to tell. Many of us don't even know how to find out the correct HSN. That has to come from customs tariff act. That is another link, hyperlink. In GST there is no interpretation rules. The interpretation rules of customs tariff act shall apply for GST tariff interpretation is what is the notification that has come. So we will have to all first read customs tariff notifications for relating to interpretation, and then we have to come here and do the interpretation. All the best for that. I am not going much into that. So the next part, that the registers that need to be maintained, I want to quickly complete that. The registers that need to be maintained under GST, I think one register which I have never seen in my life, which is most important, is input tax credit register. When central excise was there, people were very religiously maintaining that, but that will still contain only central excise information. Service tax was given the least preference. Sir. Central excise we will maintain, RG23A, RG23C, part 1, part 2, everything was there. Come GST from 1st July, throw caution to the wind, nothing. When I go and ask any of my clients, sir, ITC register, take it. It will be ledger. Then I will tell him, sir, this is ledger. Ledger will contain entries. I know this is the credit that you have taken. Please give me ITC register. Ledger da ITC register. How can it become ITC register? Tally and columnar format porting na GST number will come. Nothing else will come. So other than GST number, what do I want? I want his invoice number. I want his invoice date. Why do you require his invoice date? In rule 37 it is said, read with section 16 subsection 4, if you fail to make payment within 180 days, you will have to reverse the ITC. How will I as an auditor go through that and say that you have failed to make the payment within 180 days unless you capture his invoice date? 180 days is to be calculated from his invoice date, not from my date. The day I booked the invoice is immaterial. It is from his invoice date. That is required. debit note or credit note raised against that invoice, which has adjusted, increased or decreased the ITC, that has to be mentioned. If this minimum detail is not there, your input tax credit register is not there. And as I said earlier, we have to comment and say that all the registers required under GST are being properly maintained by the assessee. And we will say books of accounts is also maintained by that statutory auditor. I am the GST auditor, I know only this, that registers are maintained, to be maintained under GST is maintained. So input tax credit register, as I said earlier, is something which people will have to start getting into the practice of getting the information and maintaining the register at least from today. For the last year when the audit happens, let us see how to resolve that issue. That aside, for output liability, what am I supposed to do? I'll give the answer from two separate perspectives. One from a goods supplier perspective, one from a service supplier perspective. Goods supplier, what register he has to maintain? Stock inward and outward. If he's a manufacturer, manufacturing records. So in simple terms, you are maintaining RG1, continue to maintain RG1. The name that you are given is RG1, but it is ultimately manufacturing record. Inward and outward, stock register. What has come in, what has gone out. This would be applicable even for a trader who has to maintain inward and outward registers. Now let us focus on service provider. Sir, I am a service provider, but I am only a service provider. I am not a composite supplier. That is, I am not going to involve material in my supply. I am only going to do service. Then all you need to maintain is input tax credit register and your billing register. That is your output tax liability register. But if you are a works contractor, a person who is into erection, commissioning, installation, fitting out, repair, maintenance and all that, then you will have material also as part of your supply. You will make supply of material plus you will render some services. It is considered as overall composite supply of service. You must maintain stock records. Plus you should maintain also what we call as BOQ. So you have to say that for this project, how much of quantity was utilized. That quantity, whether it has been included in your service billing. You might have sent the goods, like the example I gave earlier. We are having an interior decorator as a client. The interior decorator will move the panels, will move the tables, will move the chairs, everything. But he will say, sir, I am doing it as a, meaning it is not a table like this, it is a cabin kind of thing, where they are constructing it as an interior decoration work. If he has to move goods, he will move it under DC. But he has to ultimately raise an invoice which is not a supply of goods invoice. He has to raise an invoice which is supply of service. So he has to have the record of what are all the DCs with which the goods were supplied, which are all together billed in this service invoice. That correlation should be there, else you would not know how much was utilized for rendering this service. It is very critical, especially infrastructure, construction and interior decoration or architect related services. In all the cases, what they will say, sir, ours is only service. You are still supposed to maintain the registers under GST. That is the stock related registers. So input tax credit register, output liability register, stock inward, stock outward, manufacturing. That's it. And then tax paid, of course tax paid we will be maintaining in terms of the challans whatever we have raised. So these are the common registers a person will have to maintain, the records that needs to be maintained under GST. So the next question that comes is, how long I have to maintain? I have maintained it for 1 year, fine, the year is over. How long I have to retain the records? From the end of the financial year, that is the due date for filing annual return. The due date for filing annual return for 2017-18 is 31st December 2018. From that day, we are supposed to maintain it for 72 months. So it might sound very simple, 6 years. No, it is more than 6 years, because 6 years is to be calculated for 17-18 only from 31st December 2018. So literally 2017 July invoice you are going to maintain up to 2024, which is more than 6 years, 72 months more than 6 years. But the period is to be starting from the due date for filing annual return for a financial year. From there 72 months the records have to be retained. If there is going to be any case, like a tribunal case or a high court case happening on your records, then from the date the judgment is given, minimum for 1 year, the records will have to be maintained. That means what, even in 2022, I go for an appeal, or department comes for a case, I go for an appeal, the appeal gets decided by 2025. For 2017-18, we are still 72 months away, we cannot destroy the records. From the date of the decree or the order that is given, I will have to maintain those records for 1 more year. Then if nothing has happened during the period, department has not filed any appeal or something, then only I can dispose of the records. So this is with respect to retention of records. The last part for my session is that where I should maintain this books of accounts or records. Every registered person shall maintain in his registered premises the books of accounts. Which means what? I have got 7 state presence across India, all the 7 states, wherever I am registered, that state business, that place I should maintain the books of accounts and records. Which is the expectation as per section 35-36, where I should maintain, how much I should maintain, we have already seen that. Where I should maintain the books or records, yes, my place of business. Which means, literally, state-wise I should be having trial balance. Which if you see is reflecting in GSTR 9C, where when the reconciliation is to be done, when we were saying this right from day one that books of accounts will have to be maintained state-wise, books of accounts will have to be maintained registration-wise in fact. People were taking it for granted that okay, we will still continue the same tally, one company, one account only. You said one India, one tax, we will also have one company, one accounts. But the problem will be, you will have to come out and tell me what is your state-wise turnover. Is it going to end with your state-wise turnover? No, it is going to further step into the realm of input tax credit, where you have to tell me state-wise input tax credit, whether it is matching with your input tax credit register for that registration. All these complications could have been avoided had GST number-wise trial balance. That is, the books of accounts are kept separately. So that is the last bit of how long I have to maintain. We have already seen. Where I have to maintain is this procedure, and that where you have to maintain or the drawing of line for breaking the information becomes important in your 9C, because you are going to reconcile that state turnover with your that state GST registration, which will become even more complicated because stock transfer. I have presence in 3 states of South India. If I take the trial balance of all the 3 states and sum up, it may not match with my final signed accounts trial balance, because stock transfer is taxable for the purpose of GST. Outward invoices would have been raised, inward invoices would have been correspondingly raised, assuming it is matching. In some cases, my outward from this state may not even match with my inward in that state. If it is matching, still this number total will not match with the overall turnover. So what we need to do, we need to have one more column for elimination. Then only we will be able to get the final one. So though the records are expected to be maintained in the state where the registration number wise, still we will have challenges. Supposing we are maintaining the same way. If you are not even maintaining that way, the challenge seems to be much bigger. So I think with that I will conclude my session. The session speaker for the next session has also arrived. I think advanced Hari Sudan is here. If there is any questions I can take, else as planned 3:45 we can break for tea. Yeah.
Can it be maintained in electronic form?
Yes sir, allowed. Electronic or physical? Electronic or physical, not a problem.
But in income tax, so there is 6 years limit for records. But now we are getting last 10 years, they are sending some notices now. Like this last before 10 years, there is some tax pending. They are sending notices now. So how?
One, income tax is something which is not my area of practice. Second thing, it is unfortunate because my partner is struggling on that. I know that. In GST, we will only assume and pray to God that this kind of thing doesn't happen. In the past, whenever that period of limitation has been breached, it has been held in favor of assessing only in many of the instances. So I would still expect in indirect taxes nothing different. Yes, sir.
For composition also we should maintain the same records, or there is something different for composition?
No, for composition dealer, the records will have to be, the outward will have to be maintained. His inward is not a matter of importance because there is not going to be a input tax credit for that person. Yes.
Stock register, sir? What about stock?
See, when you have physical movement of goods, yes, inward register, outward register mandatory. Stock. Yeah, composition dealer, quantitative records you will have to maintain. Why I will tell you. A composition dealer can move into normal taxable person. The day he moves into normal taxable person, similar to what we had discussed in registration, the day before, whatever was his closing stock, he is eligible to take ITC. And in case of a composition taxable person, capital goods also he can take ITC, provided it is purchased within 1 year. Hence, the record of physical movement of goods, yes, that has to be maintained. And which is why even if you are stock transferring between your own premises to other premises within the state, there is no GST, provided you are in the same registration. But DC is mandatory, no? And e-way bill will also compensate if it is going to be more than 1 lakh in Tamil Nadu.
The branch is closed?
Branch is closed.
Where to keep the records?
Branch is closed, which means you are going to remove it from your the registration is cancelled. The registration is cancelled. You can bring it to your head office because that registration is no more. That records can be called up by the department where you can keep it for operational convenience wherever. If it is going to be a northeastern state,
Act
doesn't specify. Because as such, if you look at it from that state perspective, that registration is no more. What they do when you cancel the registration is they take the address of contact. When you cancel the registration, they say, fine, this registration is cancelled. Please tell me what is the address I should contact you in for future reference. Maybe you can give your corporate office address and move things.
So charitable and religious institutions, they provide many services like
Yes.
Food, concession food, and they provide puja articles and all. Whether this GST registration is required for those entities?
We'll have to look at it from a perspective of GST, sir. What they are doing, if the charitable organization is engaged in charitable activities for which they are approved, that is completely exempted.
It is approved under income tax and
Under section 12AA, if it is approved, the same exemption exists in GST. Notification 12/2017. It says the religious organization is doing what they are approved to do as a charitable activity. That activity, the turnover, how much soever it is completely exempted. If you get that exemption on your outward supply, use section 23. You do not even get registered unless you do something which is taxable. You are renting. Then what happens is, in your overall turnover, this is not the only part. You have a taxable activity also. For immovable property sake, at least you have to get registered and pay GST.
and even if they take legal services and all.
RCM. Yeah, which is the precise point we discussed. Will they be called as business entity? I feel yes. Yeah. Correct. The 20 lakhs limit is what you are trying to utilize. I don't think so.
In the case of invisible supplies, like transfer of license, transfer of exporting of software from software company to client, what records should we maintain? There is no delivery challan and everything. It is through wire.
Software, sir. Software service input tax credit register is one. On your output billing, that's enough. You get a bill raise panningalo, and then FIRC, inward collections, you will maintain a record. Enough.
Like manpower supplies, we are providing. Only we are supplying manpower, appointing person.
You are a service provider at the end of the day. Software auditor. Yes, ma'am. You are moving one branch to another company. That is being sold off. How will you transfer the ITC pertaining to that branch only to them? Okay, you can still do it. Correct. But you are only going to file for this part. I have not tried this, but I will tell you practically. Sorry, I cannot tell you practically. I will tell you from the section what is possible. I can transfer this. It is succession of business. What you are saying is demerger kind of thing. One part of the business is being hived off. Is it a supply? No, it is not a supply. There is no need for you to pay GST. It is a transfer of business. Yes, you only said there is transfer of assets as well as liabilities which are pertaining to that part of the entity. You can do that. I am not sure ITC 02 because I have not done it for in this case. We have done it for a complete succession, not for part of the unit. I think it should be allowing because legally there is no restriction. You can. Yeah, we'll take it as the last question. Yes, sir.
I am having one is exempted supply and one is taxable supply. While issuing bill, we will be issuing tax invoice for taxable and
bill of supply.
Sometimes what happens, the client doesn't understand and they issue tax invoice. That might be an error.
One easy thing, sir. From January they gave one option. You can name it your invoice as invoice come bill of supply. Have both. Okay. Thanks a lot. Thanks for your patient and effective hearing. See you some other time. Thank you.
I take this opportunity to hand over a small memento to the speaker, Mr. Shankaran Narayanan. He has hammered the entire section as well as the records as well as the document to be produced. I hope the students, how many students are here? So they all must have now started loving the course, not only GST as well as the CA course. Very nice.
Good evening, everyone.
Good evening.
My name is Hari Sudan. I'm going to take the topic on key recent developments in GST. So in fact, this itself is a 3-day session. So I'll just walk you through why it is so big and it has to be covered. So my material will be shared to you separately by the institute. So I have just updated a few aspects of the materials. And thank you for organizing this course, and very happy to see that I understand that this is the last day and last session, and still we are seeing the packed house. Many thanks for that. This shows the interest of the audience also. So just as an, just for me to understand, if I can know how many of you from industry here? Okay, practicing? Students? Okay, so it's a fair mix of crowd. So let me just give the perspective of each of this while I take the slides. So it all started here. So I'm not going to get into too much of history because I know that we are in the last day, last session, but it started with the constitutional amendment, with the central legislation, and then the state legislated, and we had the GST. Post July 17, there have been significant changes that has happened from the government side. So these changes, some of them are ease of doing business. So industry, practitioners, chambers have gone back to the government and said that there is problem in the GST law and course corrections have been done. There are several mistakes which government themselves have identified. There are several errors in the law making, several misses in the law making which government themselves have identified and started correcting. And government has made a significant outreach program as well. So they have kind of become very active on Twitters. They became very active on Twitters. There were FAQs, there were circulars, there were guidances. All these have been started coming out from the government proactively. But if you look at what has happened, so there were 12 GST council meetings after the law got placed. And every GST council meeting had some significant changes in the law. So the significance is there have been about 350 plus notifications and amendments that have been carried out in the law. When I say 350, this is only central, right? So there is equal 350 in state. But only thing is that is a mirror. So we need not look at whether state and central will be same or not. In fact, many of the states at the initial stages have forgotten to notify also. So some of the northeastern states have not notified some of the key amendments, and then they took up the speed and they said, no, we have not published in the website, but it's in the Gazette, so we have all done that. So which means that there is 350 amendments and 350 changes in the GST law and the rates. As a statistics, about 130 of this is on amendment in the law and the balance is relating to the rates. So 130 effective amendments in the law and approximately about 220 or so as the changes in the rates. And there have been 100 circulars and orders. So in the ease of clarification, there have been several attempts that government has made. So out of this 100, of course, 30 to 40 will be on 3B, how you have to fill, 3B not working, what you should do, GSTR 1, 2A, file, not file, all these were about 30 to 40%. But other 60% is what is very important. The other 60% are procedural circulars clarifying various procedures and processes. So 100 plus circulars and orders, again very important point, these circulars and orders are legally binding. These are not Twitter clarifications or FAQs, these are legally binding. In fact, there is a compilation of some of the Twitter clarification by the government in circulars. So one of these 100 circular had a compilation of various Twitter clarifications that government has given, which means those Twitter clarifications are now adopted by the government as law and all others are not law. So that's the changes that has been happening, and there have been about 100 plus FAQs or flyers. So it started with what is GST, to transitional provision, to sectoral FAQs, topic wise flyers, and there are about 100 of these documents that is there published. And equally there are 100 plus writ petitions across India. First writ petition challenged GST itself. Should GST be in place in India? And there are writ petitions almost on every aspect of transitional provisions, on whether it is restrictive, whether it is discriminatory, why 1 year time limit, why document should be prescribed. Like this, there are several set of issues in interpretation, and there are good set of writ petitions on e-way bill related procedures. So whether detention is proper, of course it's only 3-4 months, but there are good set of writ petitions on the e-way bill related procedures. So this snapshot is very important. One, first to caveat myself that I don't have time to cover 350 amendments. But what is more important is that there are changes. If you take 350 and 365 days, almost every day there are changes, and we need to be updated with these changes. And more importantly, the flavor that it is getting out is GST is a procedural law than a code. So the way-bill related writ petitions and the way the courts have been dealing about these writ petitions have again emphasized that GST is a procedural law. Focus is going to be on the procedures, on the returns, on the forms, on the documents, more than what is focused on the interpretation. So a traditional reading of a law or a tax law will be more focused on the way the interpretations will work, but here it is a reversed way. So specifically for students and the practitioners, go from procedure to the law rather than law to the procedure. That will make a lot of difference in the way you approach GST. So that's about the what the recent developments will entail. In addition to this, what I have not covered is the advance rulings that is coming up. Now it is getting published and very familiar, and it is state-wise advance ruling, so state-wise views are also different. I have also tried to capture some of the key rulings that have come in and just thought that it could be a discussion points. So with all this as a background, the 29th and 30th GST Council meeting became very, very important. So there were two last GST Council meeting that have become very, very important, because that's the first time when the CGST law has been comprehensively looked at and the changes have been proposed. So in fact there is a CGST Amendment Act which is assented by the President in August 2018 based on the 29th GST Council meeting, but till now it has been not notified. And it is going to be notified very shortly, meaning that there are certain procedures that is going to come out. So in my recent developments, I will cover this aspect of what are all the law amendments that have been undertaken by this 29th GST Council meeting, and what are all the important aspects of that law amendment. That is number one. In addition to that, 30th GST Council meeting also proposed certain changes. Just for example, there is a condition in GST law that if I take input tax credit, I should pay the supplier within 6 months. And in the 30th GST Council meeting, it has been proposed that if some company is not reversing that credit, which is taken but not paid, then interest to that extent will not be applicable. So this got reported in the press, but the Amendment Act has not yet been passed, because again on complexity on GST, it cannot be just passed by the President and then be declared. It has to be passed by each and every state in their parliament, and there are states now without parliament, without the assembly in session. So only after the assembly in session these can be passed. So because of that, these amendments are getting delayed. And what we are hearing is, in certain cases, this may get notified retrospectively also. But we have to wait and see for that. And so what I will cover is, what are all the amendments that is going to be proposed, or that is there in the Amendment Act, which is going to be a law in a 1 month or 2 months time frame from now. And in addition to that, there have been changes in the rules, which are already being effective. Without amending the law, rules have been made effective. I am going to take you through some of the important changes in the rules, and then some circulars and advanced ruling, and then I will open it for questions. So as I said, this law is not effective now, it is not notified, but these all are proposed amendments. The first important amendment is change in the definition of supply itself. So one is, supply is not defined, but it's an inclusive a charge section that is there in CGST Act. But there are several confusions in the way the supply was defined. For example, there is a definition, there is a meaning of supply which starts by saying that it includes all transactions done for money, consideration or other form, barter, etc. And then it goes on to creating schedules. So it creates 3 schedules. Schedule 1, supply without consideration. Schedule 2, deeming a transaction whether it is supply or service. Schedule 3 talks about not a supply or not a goods or service. So what was happening in the construct of the definition was that even if I leave the first clause, whether it qualifies as supply or not, still these schedules have been operating independently. So even if there is no supply, I can still go to schedule 1, 2 and 3 and check whether there is a supply. For example, I can give you an example, say a software development, for example, which is being declared as a service in schedule 2. If there is no consideration, there should not be a supply. But the definition read as all activities in schedule 2 will be deemed as either service or supply. So the law provided an inherent power to tax even a supply without a consideration. So this was highlighted to the legislators, and this has been amended now. So for example, if a software development has to be declared as a supply of goods or service, first we should check whether there is supply. And after checking whether there is a supply, then comes determination of classification, whether goods or service. So that's the first amendment. And what is very important is that this amendment has been made retrospective. So this amendment is effective from 1st July 2017. In fact, 2 important amendments in this proposed law is made retrospective from 1st July 2017. So one is amendment relating to this definition of supply. Second amendment is on the transitional credit. So generally companies carry forward their existing SENVAT credit. When they carry forward the SENVAT credits, it had excise duty, it had the SACD or CVD in the customs portion, and it also had cess. So education cess, Krishi Kalyan cess, SBC, all these cess were sitting in that SENVAT credit portion. So all companies have taken, or most of the companies have taken those credits as carried forward into GST credits, because the term that was used for carry forward was whatever was your SENVAT credit in the previous regime, you can carry it forward as the opening balance in the GST regime. Any doubts? So the cess portion which was there in the previous regime was carried forward. So somebody has raised this question in Twitter to government. And morning this question was raised by a person, and government clarified that cesses are not Senvat credits, so it is not allowed to be carried forward. And then there were comments in Twitter saying, what is this, you are making us to suffer because of GST, etc. And evening one more person has raised and government has clarified, this is Senvat credit only, it is eligible. So and it became really confusion because what has happened is this person has taken that screenshot and put in this reply and said, is it the same person who's tweeting? Something like that he has highlighted. And then it became a big furrow and they deleted both these Twitter clarifications. And in FAQ, they issued an FAQ saying this opening balance of cess is not eligible as credit. So then immediately there was a challenge in one of the high courts saying what is not there in the law, they are trying to make it restrictive through FAQs and other procedures. So considering all this, government has considered whether it is right or wrong is we have to wait and see. But there is a retrospective amendment that is proposed in the transitional provision to say that Senvat credit of eligible duties are allowed to be carried forward, which means that Senvat credit of cesses cannot be carried forward into GST. So once this retrospective amendment becomes a law, then government can rightfully enforce it. But from a practical side, government officers are writing this same provision saying law is retrospectively amended and seeking to reverse the credit. So the point that it has to be notified by the government is also missed by them. It is not yet notified by the government, but there are circulars, there are issues that is being raised quoting this amendment saying law is already retrospectively amended, so cesses are not eligible, reverse these credits. And we have been responding saying that the law is not notified, wait for the law to come, then we will deal with it. So that those are two important retrospective amendments that is there in GST law. The next amendment is on the reverse charge mechanism. So in reverse charge mechanism, as you all know that when GST was conceived, they wanted to bring all information into one portal. And if an organized sector, which is registered person, buys from an unregistered person, then the registered person has to do a self-invoicing declaring from whom he has bought, upload it in the government portal, so that government will know who is that person who is unregistered and they can have a track. And this was becoming an issue, and there are several representations that was made to the government, and this is proposed to be amended now to say that this will not be applicable to all persons and it will not be applicable to all categories of goods. So government is going to come up with a list of category of goods to which this is going to be applicable. Again, the list is yet to be notified. The next proposed amendment is on the input tax credit. So if you look at input tax credit definition, there is a condition that to avail input tax credit, what all I should do. So you would have done input tax credit session. So there are three primary conditions. What are those conditions?
Possession of the original invoice.
Possession of original invoice.
You should have received the goods or services.
Received goods or services.
Registered.
Yeah. Payment of tax and receipt already is covered. So in goods, there is a special category that where there is three parties involved, bill to, ship to type of transactions. Bill to party will not physically receive the goods. So law contemplated that and said, if you are a bill to party, though you are not physically receiving the goods, contractual receipt is treated as receipt and the first buyer can avail it as a credit. So this was there for the goods. But for services, this provision was not there. Because I think government would have felt that in a service environment, there will not be a bill to ship to transaction. But what has happened is that there is this concept called pure agent. Like if there is a freight forwarder, for example, he would have appointed, say, transport company. That transport company will invoice the freight forwarder directly, the company directly, but give the invoice to the freight forwarder. In these type of situations also, there is a bill to ship to that is happening in services. But this was not specifically contemplated in the law. So they have understood that it has also to be contemplated, and they have included, even for services, the contractual recipient will be treated as the recipient of services. So they have plugged the loophole on input tax credit. But similar amendment should have been done in place of supply rules also. But the place of supply rule on a bill to ship to transaction, so if you looked at place of supply rule for goods, there is a specific place of supply to determine place of supply of goods on a bill to ship to transaction. But in services, there is still not, that has been contemplated. With this amendment, they have to also amend the place of supply rules also. So the next amendment is on the input tax credit eligibility related amendment. Again, as I said, this has to be notified and then it will become effective. So what has happened is that in input tax credit, when you are doing taxable and exempted supply, you have to reverse the credit proportionately to the extent of exempted supply. And there are certain transactions which are in Schedule 3. For example, sale of land and building, right? Salary, for example, which is there in Schedule 3, which was defined to be included in the exempted supply, or there was no clarity as whether it is an exempted supply or not. So when this formula of exempted supply and taxable supply has to be applied, if any company has sold their land and building, so there was a question that I am transferring a part of a business. So if my part of the business have to be treated as an exempted supply, then if my part of the supply is treated as an exempted supply, then I have to reverse credit accordingly. But there is an amendment now which says that if there is transaction which are declared in Schedule 3, which is not subject to GST, then you need not include it for calculation of this reversal of input tax credits. So again, an taxpayer friendly amendment, but this is not retrospective. These amendments are prospective. So again, on input tax credit, there are significant amendments. One is that expenses like rent-a-cab or expenses relating to motor vehicles was not eligible as a credit to the companies. So there was a restrictive provision that rent-a-cab, life insurance, health insurance are all not eligible for credit. But now that definition is getting amended to say that this restriction is applicable only for cabs up to 13 passengers. So which effectively means that if I hire a bus, if a company is hiring bus, this is very common in software industry where they hire a bus to transport people, so because software I use this transmit, so transport people, then this condition of restriction of credit is not applicable to them. So they can avail the credit on hiring of buses, but the restriction is only applicable for cabs less than 13 passengers. And similarly, for example, health insurance or life insurance, so there are companies which have to take these insurance mandatorily under state law, under ESI regulation, etc. So these credits were also restricted. Now they are saying that if there is insurance or expenses that are incurred on the employee, typically a staff welfare, but which is mandated under any law in India, then you are eligible for credit. Again, a taxpayer friendly amendment and there are certain conditions associated with it, but I will not take it in very detail. But staff welfare no more is treated as a red category. So as long as it is mandated under law, the credits can be availed. So any questions by far?
What is mandated?
Sorry?
What are all mandated by law? Or staff welfare?
Yeah, so like for example, one example is on the insurance, right? So certain factories have insurance on the employees as a mandatory condition. That is one. The second interesting aspect that we are examining now, we don't have an answer, is that in several states, for example, you take Gurgaon, the state mandates the companies to provide cabs to the female employees after a prescribed time. But this is not under a state law, but this is more a municipal circular or guidance that is being given. So whether that can be treated as a state law. And similarly, there are certain mandatory payments in each and every state that will vary. So these kind of mandatory payments on the employees now can be taken as a credit. Sorry? Yeah, canteen in the factory is another example. Yes. 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 So again, sir, as I said, once this amendment law is passed, it can be taken. But today there is issues because today the word is that two conditions. One, it has to be mandatory and it has to be notified. But in last 1 year, government has not notified anything on this category. So they are removing that word notified and maintaining that mandatory alone. So earlier also this provision was there, but there were dual condition. It has to be mandatory, it has to be notified. But there was no notification in this regard. Now they are removing that notification condition and making it, if it is mandatory, you take the credit. You have documents to prove that it is mandatory. Right. So moving on the next concept of registration. So there was a procedure to have vertical registrations. So if a company is having 2-3 business verticals, say for example, there is a company which is having insurance vertical, manufacturing vertical, and services vertical. Based on the segmental accounts, company is allowed to take separate registrations. So in a state, a company can take more than one registration if they have separate business verticals. And that business vertical is business segment as prescribed under accounting standards. So this provided flexibility for the companies to organize their business. For example, if you take insurance service, there is restriction on the credits that can be taken. Manufacturing, no restriction. Services, no restriction. So if they want, they can isolate this restriction to the insurance business alone and then they can carry forward their business. So similarly, if a company wants export products to be a separate registration and domestic products to be a separate registration for few procedural requirements, they can have it. So this was enabled in the law. But now that vertical registration concept is getting dissolved. And it is moving from vertical registration to premises-based registration. So if I have 3 business premises, physical location in a state, I can go and apply for 3 business location registrations, though it may be for the same business or different business. But if I have in the same business premises 2 different businesses, I cannot split my businesses and take registrations. So they are moving away from the concept of vertical or business orientation to physical orientation as far as registrations is concerned. Here I think it is not that friendly in terms of the procedure that is being contemplated, because vertical registration made absolute sense for the business to be organized. but they are changing this now. And second part is on SEZs. So for SEZ units, there was a mandate that it has to be separately registered. So if there is a company which is operating in SEZ and they are also operating in non-SEZ, which is like STPA and SEZ, they have to take 2 registrations. But this was not coming directly from the law. Now they are bringing in directly in the law. So that's on the changes in the registration. And as far as cancellation of registration is concerned, there is a procedure that is getting notified now of temporary cancellation. So what happens is, once I apply for cancellation, the authorities have to review all the information and accept my cancellation. Till that time I have to, so there was one question in the previous session that if I close a branch, should I maintain my books and records in that location or not? That was one question. So before this law, there was no explanation to this, because you are registered. Till the authorities accept the cancellation, you are still registered. So you are not allowed to take a waiver from books and records. You have to continue to maintain your books and records, and you have to continue to file your nil returns till the authorities accept and cancel the registration. Now they are bringing in a concept called temporary cancellation of registration. So once you file, it is deemed to be temporarily cancelled. So this is only for voluntary registration cases. It is not for government initiated cancellations. For voluntary registration cases, they are saying once you apply for cancellation, your application will be accepted, meaning in the online system. Once that acceptance is done, you are temporarily cancelled, which means that you can give your corporate office address and start moving out of that state, and you have to give some undertaking for representing whenever the assessments are being taken up. So once it is temporarily cancelled, you are given waiver from filing of returns, maintenance of books and records, and other procedures in that state. But only condition is, after getting a temporary cancellation, you cannot make any further GST invoice from that state. So you have to close the business and then move out. So this is again a taxpayer friendly amendment that has happened. The next amendment is also a very important amendment. So on the procedure relating to credit notes and debit notes. So in all, say for example, a company is giving a discount, right? Let's say there is a cash discount being given. If deduction has to be claimed on cash discount, then 2 conditions have to be fulfilled. One, that discount has to be known at the time of making the supply. Second, a credit note against that particular invoice should be separately given. So like big FMCG companies which are dealing on a B2B basis, for example, Hindustan Lever supplies goods to his first stage dealer. So they would have issued 1,000 invoices in a quarter. I'm just making it up, it may be in a day, but in a quarter they issue 1,000 invoices with a discount policy saying if you pay me in 2 days, I'll give you 5% discount. They have to give 1,000 credit notes in order to claim an adjustment. And this was becoming nightmare because these 1,000 credit notes have to be uploaded in GSTR1 against each of these invoices also. So government has realized this, and they are proposing an amendment that it need not be an invoice to invoice credit note. It can be for a period. It can be, say, quarterly 1 credit note per GST registration and things like that. Similarly for debit notes also. Any price adjustment up or down can be facilitated by this. So there are amendments in the refund related provisions. So again I am covering which is there in the Act. I will come to the rules on the procedures later. So one is that there is, for inverted duty structure refund, there is change in the relevant date. It did not add a relevant date definition. Now they are defining that date of filing return as the relevant date. But I hope that 3B is treated as a return actually, because there are disputes on whether 3B is a return in first place. And in terms of supply to SEZs, special economic zones. So the person who is supplying to SEZs is allowed to charge GST at his option or claim it to be a zero rated. So there could be an instance that I have charged GST to a special economic zone unit and that unit has paid me and I am going back to the government and claiming it as a refund. So this was a loophole that was there. They are arresting it by saying that if you supply to SEZs, then you should not collect the tax from SEZ if you want a refund. If you collect the tax from SEZ, then we will not give you a refund. So basically unjust enrichment on the supplies is being made. And on export of services, one of the conditions is that these export of services should be realized in foreign exchange. And again, this foreign exchange was treated as only if you show FARCs, then you will get a refund. But they are proposing an amendment to say, as long as there are transactions which is permitted by RBI to be received in Indian rupees equivalent as a foreign exchange, then also it will be treated as receipt in foreign exchange and refunds will be eligible. So this will also help companies which wanted to prevent their forex risk and has been invoicing in INR to their exporting country, but receiving the funds in foreign exchange. This will go to help them. And there are amendments in place of supply rules. Again, these are more procedural amendments. One significant amendment is on the maintenance of goods or testing of goods. If it is imported in India for temporary basis and re-exported, they are clarifying that it will still qualify as export and it will not be treated as domestic services. Again, an amendment to plug a loophole. So, there are certain services which, even if there is no consideration, was treated as a taxable service. For example, on import of services, if any registered person gets a service, say for example Microsoft from Singapore is giving some services to Microsoft India and there is no consideration, even though there is no consideration, this is deemed to be a taxable service and it is liable to tax. But what has happened is there are certain companies which are not registered in GST. So let's take for example a power company who is producing electricity. So they will not have registration in GST. They are not mandated to make a registration in GST. But they can also get services from foreign entities, both with consideration or without consideration. So they were claiming an exemption that because the law uses the term registered person, I am not a registered person, so I need not pay tax. So government has identified this and they have changed this to registered person to any person. And the last amendments as far as Act is concerned is that transactions like IC sale, so there are transactions which Indian company, so let's assume that there is an Indian company and they have to, there is a supply that is happening from China to say Europe. And Indian company will buy from China and sell it to Europe. Goods will not come to India at all. So there was confusion that because GST is so wide, whether this is subject to GST in India. And in fact, there are advance ruling which has clarified, I think the only advance ruling which is favorable is this, that these transactions are not subject to GST. Now they have clarified that these transactions are not in GST net. So these transactions are called merchant trading, where between two countries this trade happens but billing happens from India. Or on the import side it could be an IC sale. I am an importer, I imported goods. Before goods comes to India, I sell these goods to another party. So even those transactions are now clarified to be not subject to GST. And because they have made this amendment in Schedule 3, one more impact is there. Can anybody guess what is the impact? Sorry? Yeah. So when I explained about that ITC reversal, I gave that example of business sale, land and building sale. The law is amended to say all transactions in Schedule 3 will not be treated as exempted transactions. So because this amendment is made in Schedule 3, to this extent there will not be reversal of credits also. So which is again an welcome amendment for the trade, because many companies were suffering because of this reversal. This will not happen now. So those are the amendments as far as, proposed amendments as far as the GST Act is concerned. So as I said, we need to wait for the notification. So some of these may be quite contrary to what you have listened in last 2 days, but this is going to be the future as far as GST is there. And I'm not talking about something which is not there as an amendment. This is there as an amendment act. It's only question of getting notified, and government will notify it shortly. So some significant amendment in the rules. So one of the conditions for claiming credit is, like we discussed about 3 conditions. One of the condition was possession of an invoice. And in fact, the condition was that possession of an invoice as prescribed under Rule 31, containing all information under Rule 31. So which means that if there is some information that is not available in the invoice, still technically the credit can be denied, because it is not compliant with Rule 31. So that was an issue. Now it is being amended. Basically they are going back to pre-GST dates to say that as long as invoice has 4 essential parameters, still the invoice will be treated as a valid invoice and the credit will be availed. So one very important change here is that in these 4 important parameters, address of the unit is not there. So which means that all disputes that has arisen in the past and that is arising now, that your registered place is not included, not shown in the invoice. So I have registered 5th floor, but you have given invoice to the 4th floor address. So these issues will not come in future. So they are talking more, focus is more on GSTM of the supplier. And the next amendment is on the payable rules. So in payable rules on import transactions, generally what document the transporter should carry? Is it an import invoice, or is it the self-invoicing by the person who is importing was a doubt? Now they are bringing it in the rules saying that the transporter should carry a copy of the bill of entry along with the shipment, and this bill of entry number should be there as part of the payable generation process itself. So these amendments are already effective and it has to be implemented. So importer has to declare the bill of entry number in the payable, and the goods have to move along with the payable, and the payable copy has to be possessed by the transporter. And in the provisions relating to refund, so there have been several amendments, like in the span of 10 days in October, between October 1st to October 10th, there have been 3 retrospective amendments that have happened in the way the refunds will work. So the first amendment made a retrospective amendment from 1st of July saying that if there is an exporter who is claiming advance license or EPCG or an export oriented unit or an STPI unit, they will not be eligible for rebate. When I say rebate, tax paid on exports claimed as a refund. So this was made as a retrospective amendment. So immediately there was a shock in the industry, because everyone thought, if I am a software unit, for example, and I am being allowed to carry forward all my credits from the previous service tax law to GST law, for me the only recourse available is to pay GST on my exports and get it back. If not, that credit will be there in the books and we can only see it, nothing will come out, because there is no mechanism that GST law prescribed on liquidating these opening balance credits. And everyone have started filing applications. There are several applications pending before the government. And this law was amended from October 2017, saying if you have STPA or an EOU or an advance license holder, then you should not claim this option. So your entire opening balance credit will go. So immediately this was highlighted to government, and the government has understood that mistake. And next day they issued one more retrospective amendment and made this rule nullified. So they just issued a retrospective amendment which was the old rule. And immediately on the next day they issued an amendment which was prospective and which said that from October 2018 onwards, if you are an STPI, from future you cannot claim. If you are an export oriented unit, you cannot claim rebate from future. So for the past, we are presuming that there will not be issues, and whichever company has claimed can continue to claim this refund. Any doubts? Yeah.
Where bill is decided on the basis of the amount involved in the transaction, or the distance between two places? Where bill, importance of where bill.
So it is both actually. So one is on the amount. There is a cap that is there on the amount. But as far as distance is concerned, so there are two parts to the way bill, which is part A and part B. Part A, irrespective of distance, is mandatory. So part B, which is transporter information, is where there is an exemption. So the purpose seems to be capturing all movement of goods. In fact, in several forums we were along with the government, and the data analytics that is getting developed just by this way bill is quite amazing actually. So, and now we have not yet seen any audits in GST as of now, but this information of the way bills versus the invoices that is getting generated is getting tabulated at the back end. So, and there is going, when the audit will get launched, they will have this information and show it to us.
For each lorry you have to generate one way
Yeah,
bill.
so there is, the only exemption is that if there is a CKD, like for example, I cannot bring the entire goods in a lorry and I have to break that into 2, 3, there is an exemption. Still way bill is required, but the documentations are different.
Regarding registration, sir, now it is business vertical wise.
Today, yeah.
But what happens about the audit? It will be vertical wise audit, or all the business verticals will be added together and audit will be done?
Okay. So in terms of audit, government itself is kind of reorienting their audit structure, and they have not yet made public. But to the extent of information I know, the audit is going to be picked based on the GSTN number. So which means that if a company is having 3 GSTN number, it is quite possible that one may be picked for audit, but the other 2 are not. But interestingly, one of the circulars recently issued has clarified 2 things. One is that though this GSTN number wise audit will be done, but the audit officer will have right to seek information of any of the business operations of the company. That is number 1. And number 2, you can be also audited simultaneously by the state and center. And the investigations could be launched simultaneously by state and center. So the outlook when GST was framed to what is there today is completely different. So to answer your question, it is going to be GSTN wise and not business entity wise.
Then vertical will be having only one GST number or separate ones? Business other 2 business verticals is having in a state?
No. So if I say, for example, I'll just go by that example, though it is theoretical, say insurance and manufacturing. It is an option given to you. It is not mandatory. It's an option given to you. If you want, you can get one registration for insurance business, one for manufacturing business. I know few cases where it has already happened. If you take 2 registrations, then these 2 are treated as 2 registered persons. If you choose not to take 2 registrations, then you are a single person.
One more.
Yeah.
E-way bill regarding you. Sir, if in the e-way bill, 2 traders are there. One is on the first floor, one in the second floor. First floor trader gives off 1 lakh rupees of goods to the second floor. Should he generate e-way bill for that?
Okay.
Because there is no transportation as such. There is no, you'll be only delivering it hand delivery.
So when we looked at it, the construct of the rule, so though this is an interpretation, my personal opinion, the construct of the rule is that they are talking about vehicles for motorized conveyance. If there is no motorized conveyance, then you will not be required to generate vehicle. So that's my personal view. Can we move on? Any further questions? Yes.
That line, I'm not clear. This exporter receiving supplies against the claimed benefit of the following cannot claim refund of IGST paid on export.
Okay. So, for if I am an exporter, right, let's say that I am exporting goods. I have 2 options to claim refund. I can either export on 0 tax and claim my input tax credits as refund. That is one option. But I can claim only input tax credit of that month. So if I am an exporter doing business in November, whatever I have purchased and credited in November, I can claim it as a credit. The second option is, instead of exporting on 0 tax, I can pay GST and export also, which is a notional entry. When I say pay, it is not payment by cash, it is payment adjustment of the credit. It was earlier called as rebate scheme under excise. So if I choose that option, then I need not adjust it against only this month credit. I can adjust it against even previous month opening balance or pre-GST opening balance also. That flexibility was there. So if I am an exporter, this benefit was available without any restriction for me. But now the rule is amended to say if you are an exporter and you are claiming duty exemption schemes. So as an exporter, I can import goods at 0 customs duty under advance license scheme. So what companies did was, I am as an exporter, will have GST opening balance, pre-GST opening balance of say 1 crore theoretically. And I would have carried it forward to GST. In GST, everything is taxed. So I will have equal credit, equal output. What will I do with my 1 crore opening balance? So what I will do is, I will import goods at 0 customs duty, 0 GST. But while exporting, I will pay 18% GST. And that 18% GST, I will use my pre-GST balance and claim a refund from the government. So this was the methodology that is used, nothing illegal, it's just planning. And government didn't feel that shock for a few months. But after they saw a news report that 65,000 crore is pending for refunds, then they started relooking at how come in GST when our collection itself is not 65,000 crore but refunds is 65,000 crore. They understood the issue that this opening balance adjustment without any incremental input tax credit is what is happening. So they wanted to amend the law. And so what they have done is, if on your input you are not paying GST, on export you don't pay GST and claim it from me. If on your input you are paying GST, on export you pay GST and claim it from me.
See, this is where I am coming to. This ITC refund claim procedure they have to go, in short.
They have to go for ITC refund claim procedure.
And this transitional credit all must have exhausted by this time. By giving this amendment, What is that the government has achieved? That's my question.
Right. So this transitional credit, almost every company should have liquidated. So in fact, we are dealing with some of these companies. So companies which had domestic and exports have exhausted because they got a leverage of paying GST on every transaction and they have exhausted. But companies like, for example, software companies, which were like doing zero domestic, they were doing only exports. So this refund scheme that was contemplated in the earlier service tax regime was mainly targeting them to give refund, where there will be 5%, 10% domestic, 90% will be exports. But these companies have been carrying it forward. And they thought that this is the mechanism for them to do.
Then you made one more additional aspect. They are not eligible for duty drawback and other incentive. Is it so?
So duty drawback and other incentives are not restricted. So duty drawback, again in duty drawback,
MEIS scheme,
they are eligible.
The benefit is continuing to be
They are continuing. Yeah.
Okay.
So only benefit that is being withdrawn is on the refund. So the other aspect to this is, in normal refund scenario, you cannot claim refund of capital goods. Only inputs was allowed. So there are companies which had large capital goods credit. For them also only way is to pay and get.
Exactly.
So that is also blocked.
Yeah.
So can I move on? So some significant advance rulings that have come. So again, I know that you have gone through an advance ruling session, but I just want to highlight a few key things. So one is, there is an advance ruling which says that from head office to branch, there is a service, and that service has to be valued, GST to be paid. Which means that under GST law, what they are saying is, your head office and branch are two different persons, and head office, when managing director is sitting in head office, he is providing services to branch. CFO in head office is providing services to branch. And you have to create a charge and pay GST on that transaction. So just on your example on verticals, if you have two verticals, though it may be door to door, if you have common employees, then from one vertical to another vertical you have to create this cross charge. And they are saying that you have to abide by valuation mechanism. And this valuation mechanism, there was a question that if there is an employee of a company in head office, he is an employee for branch also. So he is an employee of the company, he is not employee of the head office alone. So the assessee went and argued saying that transaction of salary is not subject to GST, so I will not include this cost while I am recharging. But for some strange reasons, advance ruling has said, no, these employees are given offer letter from your head office, and they are head office employees, so you have to create cross charge, including the salary cost of whoever is in head office to the branch. And this is an advance ruling that was issued and it got wide press also, because it was first time I think GST was taken to the next level in terms of the way future is going to be. So, but if you ask from my view, so one, advance ruling is not law. So there are so many advance ruling that is getting so much advertised and published, but this is not a law. This is only for that assessee, only for that jurisdictional officer, in fact, not even to the whole state. Number two is, this advance ruling was issued in the context of an hospital. So an hospital is something which will have head office and branch, doing exempted goods and exempted services, taxable goods and taxable services. So there is a need for valuation. So for example, if you take chartered accountant service, all our services are taxable. If I have an head office in Chennai and branch in Bangalore, law says that whatever you charge, even 1 rupee, is treated as a consideration and you just discharge GST for that. But this is not like that. Here we are talking about an hospital which is doing exempted category, where law requires an open market valuation. So in that context, this advance ruling was issued. So still whether it is right, we can debate. I don't think it is right, but in that context, this is being issued. So this is not, even as a principle, doesn't have an universal applicability. So just be clear, because what is happening is that we are seeing many advices being coming out from our fraternity to corporate, saying that you have to charge corporate, you have to include salary cost, etc. So that is not correct. As far as both units have credit eligibility, then the valuation is not a question. But whether it can be zero value is something, again, getting a mischievous interpretation. I will not get into it. Sorry, you had a question? Sorry ma'am, I don't hear you. Two businesses. Okay. Okay. So I can just relate you and give an example. So this can happen, so we are dealing with few companies which have SEZ business and STPI business. So under the GST law, as I covered during registration, there is a mandate that SEZ business should be separately registered, non-SEZ business should be separately registered. So there are two registrations for a company in the same state. And there are employees who are sitting in SEZ business who are doing accounting, for example. They are doing accounting for both SEZ businesses and non-SEZ business because they cannot create two accounting functions. There is an HR who is sitting in STPI who will do hiring for SEZ also. So in these kind of cases, there has to be an allocation. So it cannot be without an allocation. There has to be an allocation, but how to determine that allocation, whether I should arrive at the cost of the employees or not, it's all free. So there is no regulation. Unlike hospital example, it is not coded to say you have to do it at open market value. You have some reasonable allocation and do it. So that's the first advance ruling. The second advance ruling is a very dangerous advance ruling, in fact, where there was a company which has went and asked whether their back office services are zero rated services. So there is a company which is doing back office services for purchase and sales. So there are two parties outside India. They are contracting for purchase and sales, and they will send the documents to this company saying you raise PO, you raise invoice, you put the vessel number, etc. and then you also ensure that things are in proper according to global customs. That's the transaction. And for some strange reason, this company has went and asked, will my service qualify as export? The first point is whether it qualifies as export or not cannot be asked before an advance ruling at all. Because advance ruling, you cannot ask anything relating to place of supply. But still advance ruling has taken up this case. There are several advance ruling where similar questions were asked and advance ruling authorities have said, no, you are asking about export, so we will not answer. But this advance ruling has taken up this case, and I think assessee would have thought it's an open and shut case, but let's get it approved by the government. Where they have gone and said that, no, why you are doing this. So there were, even if you go through that advance ruling, you will get an idea. There were questions like why you are doing this back office. So the assessee has explained that, there is requirement of coordination we have to coordinate bookkeeping, we have to coordinate this. They said 2-3 times coordination. So immediately the advanced ruling authorities has concluded that you are doing coordination services for an export business, which means that you are an intermediary. So this intermediary service is taxable and it is not eligible for zero rated supply. So again, advanced rulings are not law, but the only fair point for us is that the way it is getting advertised. So this was there in every national daily, national business papers to say advanced ruling, back office services held to be taxable. So any officer who has some reading ability goes through these things will definitely think why a software development company should not be an intermediary company. So why are you doing software development? Sir, I am doing logistics software. Oh, so it helps both parties outside for moving of the goods. So you are an intermediary. So these kind of things are coming up, which is quite absurd as well. So the third is one favorable amongst the advanced ruling, one favorable on where an hospital service, there is also a supply from pharmacy. Whether pharmacy should be treated as a separate supply or should it be treated as a mixed supply. Say for example a stent in a bypass surgery or the medicines that is being used during surgery. Is it a separate supply because pharmacy will make the supply? Or should it be treated as a composite supply? They have concluded that it is a composite supply and it will not be subject to GST. So I think this is one favorable ruling that has come. So next one is quite technical, so I'll just keep it aside, which is on tooling for automotive industry. And there were questions on where for a plant and machinery there is a foundation being laid. Should it be eligible as credit or not eligible? Should it be treated as civil or non-civil? To put it simply, for eligibility of credit. So in this ruling they have said it is civil, so you are not eligible for credit. In fact, there is a specific exclusion for this. So next is on GST on liquidated damages. The conclusion is any damage or a liquidated damage or any consideration that is flowing in form of damages or consideration for services and subject to GST. Again here there are established global judicial precedents saying damages which are not in the nature of supply are not subject to GST. But here anything that is paid on as a damage, whether it is for delay in service, it's an act of God, anything on damages will be subject to GST. So on post-supply discount, again there is so as I mentioned that there has to be, for claiming discount as a deduction from GST, the policy of discount should be made available at the time of supply. So like for example, if I go and buy something in Vasant & Co, there is a discount that is to be offered. While I am buying, they should give me a discount. If they decide to give me a discount at the time of installation, then if the GST has to be deducted, it should be documented while I am buying the goods itself. So there is a case where it is documented at the time of sale. This is on cement industry. It is documented at the time of sale that I will give you a discount. But it did not specify what is the percentage of that discount. So Advanced Ruling Authority has held that as you are not specifying the discount scheme, you are not eligible for deduction. Again, this is there are state laws which was more restrictive than this, which like for example in Karnataka this matter is already decided, but here it is getting a different color. The last one is on the maintenance contracts.
Post supply, during warranty period we are replacing some spares. So on that GST is applicable.
So will you, so are you a manufacturer and replacing, or will there be a reimbursement?
Trading activity, buying and selling.
Okay. And you are will you get paid for this?
No. During warranty period we have to provide space without any...
No, you will not be paid by the customer. But is there some other party who will pay you?
No.
No? then it will not be. But only thing is that whether you will be eligible for credit on that transaction will be a question.
So space dispatch and no GST?
No GST, because it is a supply without consideration. So again, the last case, again, why I covered this is that there were two questions asked in this case. One is, there is an annual maintenance contract. So should annual maintenance contract be treated as supply of goods, supply of services, or supply of goods and services? Because no more it is an works contract. That era is gone. Whether it is goods or services was the question. For answering that, Advanced Ruling Authority has held it is a composite supply of services, because it's an annual maintenance contract. So expectation is you will maintain and do the services. Similarly, in the same case, the assessee has asked that they are having a different terminology for almost same scope of work. They called this as maintenance of parts and supply agreement instead of calling it as an annual maintenance contract. But what they are going to do is they are going to maintain and replace the parts whenever it is being worn out. When they asked whether this will also qualify as composite supply, the Advanced Ruling Authority has said no, this will not, because you are using the word, it is maintenance of parts and supply, which itself means that you are not intending only maintenance and also supply. So it is a mixed supply, you apply the highest rate of 28. So why this is, again, these advanced rulings I don't want, because for me, looks advanced rulings are more academic than anything, but these type of advanced rulings, why it is important is that this gives a clue on the importance of the procedure and the documentation that is being emphasized by the authorities. More specifically, when the assessees are going to be governed both by state and central, and their outlook were completely different. So state's outlook was more on form than substance. Central outlook was more on substance than form. So there is a requirement to look at these documentations now from both the angles, because we don't know. Whoever is in central now after 3 years may come to the state, because there is nothing coded that you cannot be changed jurisdiction. So it is very important that both perspectives are taken into account, and we have to advise companies and people in industry to ensure that these documentations are being done. Again, the other important aspect that is coming up is the proportion of values. So whenever a question on composite supply comes, the immediate question that is coming up is, so tell me what is the value of goods in this, what is the value of services. So annual maintenance contract, nobody can say this. But they are saying, no, you will have estimate, no, how did you arrive at this price, bring that breakup. So they are immediately looking at the breakup. So if, for example, goods rate is 28%, and you are giving 20% goods and service is 80%, still they are finding out a way that it will be goods. But if it is in reverse, they are saying, no, this is a service, because service portion is predominant. But these all are, will evolve actually, but the outlook of the authority seems to be towards the value, towards the documents, towards the way it is being called, towards, in fact there are some of the advanced ruling, they are talking about accounting a lot actually. So till now, generally indirect tax and accounting is treated as two different subjects. There will be tax accounting, there will be financial accounting. Because the way the time, the way the transactions are accounted are completely different. But now there is lot of prescription about how the financial accounts is treating these transactions, how you are accounting, why you are following this accounting standard. So in fact, when we were in an advanced ruling, there was a question that why you are following this accounting standard. We said, okay, we are following AS7, then yours is works contract. So that's the kind of developments that's happening. So the way we are accounting is also very, very important. And I think just will be on time in this. So the other important amendment is on TDS and TCS related amendments that is being effective from October 2018. there is set of compliances that has to be done. So TDS is, if you do business with government, there will be a TDS. So what has happened is when they prescribed this, they forgot that there will be intergovernmental transactions. And what will happen to that? And suddenly one day they realized and issued a notification saying PSU to PSU intergovernmental transactions are exempted from TDS related provisions.
Sir, in that notification, they have not mentioned PSU to government.
Yeah. So that is right, but again PSUs can take it as a credit. So PSUs are taxable.
Means in that notification they should only PSU to
PSU,
is
agreed,
exempted.
agreed.
But PSU to government they are not.
So there is, so again that may be a miss, but my perspective on that is generally they treat PSU as an independent undertaking only.
So you are unable to download the certificates.
So as long as you are able to see the amount, you should be happy actually. So the next one is on TCS. So this is for e-commerce operators actually. So it's not widely applicable. So whoever is doing business with e-commerce operator has to deduct. For example, if you do something with Amazon, they will deduct and give you a certificate. But the only problem is that this has mandated Amazon to go and locate in every state where the supplier is located. They have to take registrations in all the states in India to do this business. Till now they have been doing only from the places where they have their offices. But now wherever is supplier located, you have to go and register in that state and do. So for this there is a guidance that government has issued, central government has issued saying that you can show your corporate office address and get it registered, because if I have to go and rent office in every place just for getting registration and uploading it for GST registration becomes too unviable actually. And in fact registrations in some of the places, states are becoming quite tricky. Suddenly there is an inspection happening and lawyer's office is given as registration address, and all these are taken as a separate course of action itself. All these are happening in West Bengal and states like that actually. So and after they issued this circular, so what has happened is this was issued by central government, but state governments are not agreeing. State governments are like saying, sir, எனக்கு இது மாதிரி sir இது இருக்கு sir checklist, உங்களோட list இது கொடுங்க அப்பதான் register பண்ணுவேன். So that's the way it is happening, but again there will have to be more emphasis and this has to be done.
I'm a proprietor and I have my own online portal to where I get my goods available. So I don't accept any other person's goods, but my own goods I'm selling through online portal. So will it be
So
called
it is not applicable for a marketplace model. It is applicable only for agent model. So some of the clarifications, I think we are almost to the end. So again there are several procedure related changes on refund mechanism. So one biggest issue in refund was that if some companies claim refund and authorities reject that refund or issue a deficiency memo, what they have to do is they have to issue a deficiency memo and recredit this whatever refund. I have, say for example, I have claimed 10 lakhs as refund. I am a software exporter. I have claimed 10 lakhs. I have to debit my credit register for claiming refund. So I have reduced my credit register in the government portal and I would give this application to the government officer. And government officer thinks for some reason I am not eligible. What he has to do is he has to send me a deficiency memo, and the rule says that he has to recredit that 10 lakhs to my portal so that I can use it on the next day for my domestic business or any other business. But while GSTN was developed, GST software was developed, there was no provision for the officer to give this recredit. So companies have debited, officer has issued the deficiency memo, but the credit was lying somewhere. Nobody was able to find out where in the system it was lying. So this was taken up by the government and they said, now you need not do a recredit, but allow the companies to again manually correct the forms and resubmit the application so that refunds can be processed. But there were cases where instead of issuing deficiency, officer has rejected also. He thought that this is not a good case for him and he has rejected. So in those cases, I cannot go and manually apply again because he has rejected. My application is cancelled. And as per GSTN system, in 1 month I can make only one application. So I cannot go and reopen and make one more application also. So again, they have clarified that this recredit facility will be made available. Till that time you can take an automatic recredit in your registers. That's one. And I will just skip this again and go to the last, which is on again refund related issues. So what has happened is, though we spoke so much about electronic tax, GST as an electronic tax, but for claiming refund, one of the prescription was that companies should take all their input invoices and produce physical copy to the officers to verify. And I think they did not realize that government doesn't have a place to store all this if all the companies have started giving. Because companies have started loading everything in the truck. Because we are not talking about small quantums. We are talking about companies like Hyundai, companies like Ford going for a refund. So their monthly purchases will be close to lakh number of documents. And they are claiming for 3 months in a row. So everybody has started putting everything in their truck and started sending it, and they said, no, we don't have space, you take it back. And obviously from assessee point of view, they will think that these guys will reject if they don't. So then they said, no, you give acknowledgement on that I have brought the truck and you are sending it. They were not prepared to give. So all these were going on. So in the meantime, government was soft pedaling on reconciliations in GST. So this vendor reconciliation was being soft pedaled. They did not push. So slowly what they said is, if you are an exporter, then do the reconciliation and come to me. If it is reconciled, if your vendor has uploaded and shown it in his return, then you need not give me physical invoice, but you print and bring that copy, because officer will not have access to look at that document because his systems are not ready. So they said you print and bring the copy, we will look at whether all these are there. Whatever is not there in your vendor reconciliation, you bring the invoice, that also we will give. But they will take steps for recovery in future. But now I will give you if you bring the invoices. And that's the amendment. But this has thrown open another set of issues that now officers are saying, no, sir, read that circular. Only if you bring that reconciliation, I will give you a refund. So all companies which thought that reconciliation is not mandatory is now in a fix actually. They want to do this reconciliation if they want money back from the government. So the last issue is on supplies to SEZ. For example, if there is an SEZ unit and they go to an hotel for some conference, for example. So supplies from domestic to SEZ is subject to what tax? IGST. Because it is treated as an interstate supply. So if an SEZ goes to the hotel, what happens? So here hotel cannot go to SEZ. So it is SEZ going to hotel, what will happen? So there were different stands, different rulings that was coming out saying that this is not consumed in the SEZ. So it has to be a local tax. And one set said, no, this is coded in the law. So if it is an SEZ supply, it has to be an IGST only. So there is a clarification issued, though it is kind of a jangri type clarification, not state. But in sum and substance, they are saying that if any supplies to SEZ has to be treated as an IGST and not CGST, SGST, which is very, very important amendment, because I just gave you an example of within Tamil Nadu. So an SEZ employee can go and stay in Bangalore also. If that Bangalore hotel has charged CGST, SGST, credits will not come. But now he is charging IGST. So the credits can also flow. And whether it is zero rated or not is a separate discussion. So that is not being clarified. So as such, to sum up, there are significant changes. So we expect in some of the discussions we understand that there are about 140 amendments that is pending in GST law. 140 amendments which government knows has to be changed. And we have seen with these two GST council meeting, we had approximately 40 amendments done. Though it is not yet notified, but 40 amendments are done. So in next few months, we can expect another 100 to be in place. So which means that we may be in a new GST era when we do this session next time actually. But on a way, there are several amendments that is favoring industry, but there will be amendments to plug loopholes also, because there are significant loopholes in the law, and it has to be balanced. So we have to be keeping ourselves abreast on these changes, along with going through 9 and 9C and the related processes before 31st December. And there will be changes and clarifications which we need to keep following. So I'll be happy to take any further questions.
Is there any timeline for the GST audit? Has that been fixed or clarified? GST audit.
Yeah, GST audit is, you're asking about the annual audit or governmental audit?
Annual audit.
Annual audit is 31st December. Okay. So again, very technically, I'll just take 2 minutes to explain that. There is no specific time limit for GST audit in the law. In fact, GST audit itself is not there in the law. It talks about only audit of books and accounts and reconciliation statement, right? So, and what happens is companies who are required to submit their audited books of accounts are required to file their annual return along with their reconciliation statement is the term used. So, if you ask me technically, there is no timeline, but if you don't submit this, you cannot submit your annual return. So because of that, it is 31st December. The other interpretation that is coming up is what was happening in 3CD and income tax return. You submit one, you don't submit the other. You submit your audited accounts instead. Will it still fight through or all some discussions that is happening, but don't want to deliberate it too much. 31st December is the time frame. Yes. So those will not be composite supplies. So in fact, we have practical experience in handling this matter. So there are, though that advanced ruling context was different, but what practically happens is, I was explaining about this vertical registration, right? So most of the hospitals have their hospitals and pharmacy as separate verticals. Because if not, there will be issues for pharmacy to take the credit. So when pharmacy supplies this to the hospital, they will charge GST and then only supply. But the question is, should the hospital do the same thing again? Was the question, and they have clarified that it is not required to be done. So from that context, so all other consumable items will be treated as an independent supply. Only those which are core used during the healthcare services will be treated as non-GST. Yeah.
How to claim TDS and TCS?
How to?
Claim TDS and TCS.
Okay. So claim in the sense? So there is a prescribed return for all this. So in fact, like this vendor reconciliation process, vendor will upload, you will see, you will confirm. Similar process is there for TDS and TCS.
Can we set off against GST or like?
Yeah, it is like what happens in income tax, same. You can set off against your GST. So if there is no further questions, then yeah. Please.
Regarding the discount, see, I was asking the same question in the previous session. So 60 days payment terms, so they are paying advance by 10 days or 15 days, not in the, at the time of, when the money is there, they are giving the card discount and pay the money. And that customer is raising a GST bill after giving the discount. See, let us say 1 crore is the payment to be made, and they have paid it 15 days ahead or 20 days ahead, proportionate to the 60 days. The payment term is 60 days. So they are making payment on the 5th day or 10th day based on the available money. And it's calculated simply on 1% per month or interest like this. So the value comes to 1.5 lakhs. So they raise a bill 1.5 lakhs plus 18% service tax. Is it right? Correct procedure?
1.5 lakhs and 18% GST.
On GST, on 1.5 lakhs, for example.
He is charging or he is...
He is raising a bill on like that.
Customer is raising?
Yeah, bill.
So what is happening is, so this issue has come because of, for example, in automotive industry. So what happens is that these discounts are generally called as incentives. These are not called in business language as discounts. They say cash incentive, they say trade incentive. So there is a school of thought that the incentives are a service and they are not actually discounts. Based on that school of thought, even in pre-GST, there are companies which have treated this discount as a service. They have charged service tax. Now they are continuing to charge GST. So they are saying that I am doing an incentive of getting this discount. I am doing this incentive of promotion of the brand. And they are charging GST. Technically, if it's something like a cash discount, the example that you are giving, it is not required.
So, in that case, whether TDS is applicable as per Income Tax Act.
Right. So if you look at what is happening in automotive industry, if I can just take a parallel out of that. So it is different in FMCG, because in FMCG, this was all accounted as a discount. And even if it is an incentive, it was not subject to TDS. In automotive, it is spread, it is different. Some of them have deducted TDS also. Because, so if it is purely a cash payment related discount, then it should not be subject to GST, it should not be subject to TDS also. But if there is an obligation, like for example, there are discount policies which says that if you display my name in the top of your building with a neon sign, so those could be a service. Again, that is litigative, but if GST is charged, that will add up to the TDS also. So thank you, thanks all for your patient hearing. I appreciate you staying back long. Thank you.
Thank you, Hari Sudan, today's speaker, for on behalf of ASIRC, for our token of love and affection. I present this moment.